and maybe it's a political sense that, the president's going to put somebody else in this role in May, and that they're going to lower rates, and that by lowering rates, we're going to be able to buy debt at a lot lower prices, and that mortgages and everything else are going to be a lot better. It's not clear to me, given where we are in wherever you think we are in our economy, that, as Becky just described, that they can actually control at least the long end of it all.
They can't. The Fed sets the shortest term rate, the Fed funds rate, and the longer end of the curve is much more a function of supply demand of treasuries and prospects for future growth. And you could just as easily see the curve steepen if they cut. Also, the reason the Fed isn't cutting is not because of Jay Powell. The reason the Fed isn't cutting is there's not a consensus around the table that it's time to cut, and there are 12 votes, and he doesn't get to decide on his own. If there was a different Fed chair right now, I think they also would not cut in July. So I think there's more nuance here than maybe is being reflected in the public comments.
Rob, thanks for your perspective, your insight, and for waking up early in Texas this morning. Thanks.
All right, good to talk to you.
Yeah.
When we come back, Sarepta Therapeutics says that it will resume shipments of a gene therapy that had been called into question recently. Shares of that company surging on this news this morning, up by about 33%. For the 1 year, that stock is still down by about 87%. We've got the details right after a break.
D+.
Shares of Sarepta Therapeutics up by about 36% in the pre-market. The company says that it will resume shipping Elevidys, that's a muscular disorder gene therapy, to patients who can walk. Last week, the FDA recommended a pause in shipments because of serious safety concerns after 3 deaths of patients who were on Sarepta gene therapies. This past weekend, there were reports of a death of another child on Elevidys, but the death, the FDA now says, was unrelated to the gene therapy. In a statement, Sarepta's CEO says, "We look forward to working collaboratively with the FDA to complete the safety label update for Elevidys and to discussing the approach to risk mitigation for non-ambulatory patients who remain on pause pending the outcome of those discussions." Despite this morning's jump, in Sarepta shares, the stock is still down by about 84% this year. But again, guys, this was a really big and very public display of what was happening. There were concerns about deaths. There's a new guy at the FDA, Vinay Prasad, who's the director of the Center for Biologics Evaluation and Research. He had originally said he wanted them to stop shipping it altogether. The deaths had taken place in people who were non-ambulatory. This is a progressive disease. First, it makes you disabled so you can't walk, and then it eventually kills you. They have not had problems with this gene therapy on people who were still ambulatory. The FDA wanted them to stop shipments to the still ambulatory patients who were on it. There was a huge pushback from the patients' families because this is the only therapy that's out there, the only drug they can get access to. The FDA later relented and said, okay, you could continue to make those shipments. But we've watched the stock play out with some huge drops.
That's yesterday.
This was yesterday's Wall Street Journal. It was their lead op-ed story on this, talking about what they called the Sarepta mugging in drug innovation, basically saying that Vinay Prasad has shut down a lot of the drug innovation that the first Trump administration was very well known for the pushes on innovation that they were coming in with. And so there was pushback that came not only from the Wall Street Journal op-ed pages, but it was on the right and the left. You've seen a lot just over the last weekend that kind of went after this because of what they've seen with it.
All right, let's look at the results. 213 a share included a 7-cent charge related to the closing of a pharma license agreement. The revenue slipped 2% over the prior year. That's the chart I wanted to look at here. It's been, I mean, at best, like a bond with a 3.8% yield. Now a 3.8% yield. Obviously, when it was at $130 a share, was not as big of a yield. This is the problem. You have one of the greatest drugs in history, but it doesn't last forever, Keytruda. And I don't think, is the company play in the weight loss arena? I mean,
not the way
look
that
at
Eli Lilly.
Lilly, or, this is maybe not as bad as Pfizer, but certainly, really kind of sad underperformance to the S&P and to its peers. It is the first revenue miss since April of 2021. Gardasil has also had some issues, but revenue, think of it, in a quarter, 1.1 billion, but that was below expectations. And for the full year, Merck is narrowing its revenue and earnings guidance, but
Gardasil sales were down 55%.
Yeah, shareholders have had nothing, obviously. You get a dividend, but
Keytruda is amazing.
It is.
Think about what it can be used for and more and more ways they're finding to fight different cancers.
20 different.
Yeah, they keep finding new things that Keytruda can do, but as you mentioned, you don't get exclusivity for forever.
No.
Yeah.
And you're dealing with that. The closer you get, it's like, how do you replace something with?
Right.
It's one of the biggest selling drugs ever.
Yeah.
Coming up, we're going to get a live report on the deadly shooting at that Midtown office building in just a moment. Squawk Box coming back after this. Good morning and welcome back to Squawk Box. So we are live at the NASDAQ market site in Times Square. Take a look at the futures on this Tuesday morning. Right now you're looking at the Dow up about 50 points. The NASDAQ looking to open about 111 points higher. The S&P 500 up about 20 points. We got a lot of news coming out this morning. Some deal news just right now. Oil and gas equipment supplier Baker Hughes buying Chart Industries for $210 per share in cash. That's $13.6 billion in total. Expect that deal to be completed by mid-2026, and Chart Industries has agreed to a $19 billion all-stock merger with Flowserve back in June, but that agreement has now been terminated. Chart makes industrial equipment, including valves and measurement technologies, so another M&A deal in the books.
Obviously, it doesn't make Chart Industries. What's it make? Flow control.
Flow controls and valves and other things like that.
Not charts.
Charts.
Yeah.
All right, 5 people, including a suspected gunman, are dead following a shooting at an office building in Midtown Manhattan. Contessa Brewer is here. She joins us right now from the scene. Contessa, bring us up to speed on what's happening there this morning.
Well, Becky, this is a very active investigation. Police are still guarding the entrance of 345 Park Avenue behind me. I'm going to step out of the way so I can show you this Midtown Manhattan high-rise that houses Blackstone, KPMG, Rudin Management, and the NFL, among many others. But look at what you're seeing here. This is a bullet hole that has crackled the glass of this lobby. What we're told is that New York police got calls starting at about 6:30 last night when the shooter had strolled into the lobby and opened fire there. And there you're seeing this morning the officers carrying out bags of evidence. So in the lobby, the shooter goes in, sprays some security guards there, and then got into an elevator, rode up to the 33rd floor where Rudin Management is housed, and there opened fire once again. And that at that point, the lone gunman, we're told, turned the weapon on himself, killing himself. Police officer Dadaral Islam was killed, as well as 3 others. Now, the NYPD has not identified them, but the Wall Street Journal reports one of those is a Blackstone executive. We're working to confirm that. Employees of Blackstone, though, posted pictures online of the ways they had to use office furniture to barricade the doors to try to protect themselves from the shooter. Apparently, there were warnings going in throughout the building. And NFL Commissioner Roger Goodell sent an email out saying one of our employees was seriously injured in this attack. He's currently in the hospital and in stable condition. NFL staff are at the hospital and we are supporting his family. He added that employees based in New York should work remotely today or take the day off. And I should say that in the news conference, the police commissioner and the mayor said that that victim is in critical but stable condition. The man identified by police as the shooter is 27-year-old Shane Tamura of Las Vegas. We are told that he has a documented history of mental health issues, and NBC News investigators have reported that a note was found at the scene written by Tamura that questions whether his mental health is connected to playing high school football and potentially CTE. Investigators are looking into whether that could be a motive for him targeting this building where the NFL offices were located. But again, this is an early investigation, still in the early stages. And by the way, Becky, we found out the police say that when they went back and looked in his BMW, there was more ammunition, more weapons, and prescription medication.
Contessa, thank you. Obviously, it's captured our attentions, and our hearts go out to all the people involved with this. Contessa Brewer, thank you.
All right, coming up, former House Speaker Kevin McCarthy joined us on the Trump administration's latest trade negotiations and much more. Squawk Box will be right back. The U.S. and China meeting for a second day in Sweden to talk trade. This comes as the big EU deal was announced yesterday, and it could increase tariffs on other countries at the end of the week. Joining us now, former House Speaker Kevin McCarthy is the chairman of the Alpha Institute. On set, good to see you.
Good to see you.
Mr. Former Speaker, that's too hard to say. Good to see you, Mr. Speaker. Kevin.
Yes.
How's Kevin?
Whatever you want to call me.
The journals never like tariffs, no matter what, obviously. So no matter what happens, I don't think they're ever going to say it's great. And their take today is basically that it's the reason that it's a positive is because the worst case scenarios have been avoided. It doesn't really look at it in a half full way at all. And yesterday, talking to different people from the other side, we had Roger Altman on, said just in general, it's a bad deal for the United States, in his view, because it's going to be inflationary, because it's still a higher tariff than we had before, and it could hurt growth. That's going to be what you hear, but even the Wall Street Journal doesn't say, wow, what a great deal. Is it a great deal?
I think it's a very good deal because what you're finding is he's reshaping kind of the world economy, because what you're not talking about are these markets opening up to American products, which haven't happened in decades. So that's a fundamental difference going forward. I think what we find, people didn't think he could get this far. People didn't think these countries would come to the table. And so many of them are. So it's reshaping where we're going to look at.
The other things, I don't know if I'd say criticism, but just pointing out some of the things that weren't included in the deal were a lot of the things that the president really did want, and that, maybe the punitive treatment of a lot of our tech companies not addressed by Europe, the digital tax not addressed.
Remember what
it doesn't get it doesn't get them to pay more for pharmaceutical drugs. In fact, we'll pay more because people here will pay more because there's going to be a tariff on drugs.
Now remember what he's doing here at the same time, though. He's reshaping this isn't a trade deal like you would think in the past, where you spent years negotiating, went before Congress to get approved and everywhere else. This is a continual negotiation where the first thing he did was open it up. So it's kind of, you're crawling before you're walking before you're running. Everybody was working against it, but think what he's been able to do in the first 6 months. I mean, I've watched a lot of people even come to this table and say, I was wrong. Kevin Goen, the others. I've even heard people at the Wall Street Journal. They were wrong.
They're never going to like tariffs,
Yeah.
no matter what. Let me ask you this. In the president's mind, does a permanent tariff regime, is he hot to do that because he thinks it will cause onshoring? Is that the idea?
I think his drive is more investment in America, onshoring, and you look at every one of these trade deals, there's some type of loan agreement or an investment into America from that country. And that actually
those are coming anyway because they've already wanted liquefied natural gas because they want to get off the.
But you're also looking at a number of companies that it moved from the last time he was in, from China maybe to Vietnam, maybe to India. But now in this administration, he's moving them back to America. So every deal has something where they're making some investment in America, some idea of manufacturing their product in America as well. And long term, that benefits America.
Earlier today, the president, I guess on Truth Social, said fake news says that, I really want to have a meeting with President Xi. That's not true. I don't want to have a meeting, or I'm not planning that. It was the administration itself that sort of were putting out the notion that a final deal will only come probably when the president decides on certain things and when President Xi decides on certain things. And they need to get together to do that. Why do you think he's now saying that I'm not looking for that? Are things going badly?
I don't think things are going badly. They're back at the table. But the one thing I think this president has learned very well, the Chinese promise things and don't deliver it. They did it in the first administration, and they try to string you out. The same thing that Putin, and you watch that Putin had played President Trump wrong, that President Trump tried to give him an opportunity to come to the table, he didn't, and now it's a whole different situation. That was a mistake on Putin's part.
What happens with Putin at this point, do you think? Now the timeline has been, what was September before, wasn't it?
I watched what Medved put out the other day. He's always tries to do these extreme measures. I think Putin's realizing he's being encircled now, and he's got a real problem. That he had an opportunity here, and he tried to string it along. It was goodwill, and I think the President Trump has shifted on this and understands what Putin was doing, and it's not going to put up with it.
Some of the other things that, I mean, they got so many negatives. I hate to keep harping on it, but obviously.
Why are you focused on the negatives?
Because I have to. Because and yesterday with Roger Altman, I totally focused on how I thought he has no idea whether long term this is going to be a good deal or not. It could very well be a really good deal for the United States. I have to do both.
You play devil's advocate. I get you.
But even all of these big investments do not. They don't help.
Okay, this is where everybody has misunderstood President
But they don't
Trump.
help the trade deficit. They add to the trade deficit.
Okay, everything of President Trump is a negotiation, and so he utilizes every avenue of every strength he has. And tariffs are a strength to open up different markets and do different tactics, be it immigration, be it purchasing more American products, and he utilizes that each time.
Okay, do you have concerns that we are more concerned about trade with China than defense? Because for a long time it seemed like Republicans and Democrats were pretty united in thinking that China was a threat and a risk, and we wanted to go after them no matter what, even if trade suffered as a result. It feels like we're a little softer on that position now, like we're more concerned with making sure we have good relationships and that the trade comes through in some way, shape, or form.
No, I will tell you, I think from a very bipartisan way, if you look at the Select Committee on China inside Congress itself, if you look at the fundamental reshaping of the Pentagon, knowing that we have to develop our weapons differently, the next war is going to start in space. The next war is going to, who could overwhelm somebody? You can't spend a $10 million missile knocking down a drone. And everybody knew it, but nobody was taking action. And I think COVID opened up America to, we're too dependent upon China. I mean, if you study world history, 16 times the number 2 power has surpassed the number 1. Only 4 times did they not go to war. There's a lot of early indicators of what builds up to that, and dependency. They're better prepared for this trade fight this time using the rare minerals, but it woke up America. Now we're opening up our minds. I think it's a mistake.
A broader economic question.
Sure.
And it's really about our treasuries and who's going to buy them in a post-tariffed world where I think the geopolitics of all this has just gotten a lot more complicated, including with China. I remember back in 2008 during the financial crisis, one of the great fears was that China was going to start dumping our treasuries. Well, guess what? They actually now are dumping our treasuries. Like, this is actually happening. How should we think about that? Not just about China, but who the future buyers of our treasuries ultimately may be, and what incentive they may have.
Interesting. It's not going to change the difference, but there is, if you looked at the Genius Act, I mean, Tether owns more treasuries than Germany does.
Yes, there's an argument to be made about
there's a new entrance that has filled that, but it won't fill the entire gap.
It won't, because just to be clear, because there is this argument people are making about how stable coins are going to create this sort of market for more treasuries. That's true, but what ultimately is going to happen is dollars are going to come out of banks in the U.S. and all the other places to buy said treasuries. So it's a circular kind of
but what you
situation.
get too is you were worried about a country dumping.
Right.
Stablecoin can't dump because they got to back it behind. So there is a fulfillment there. But your real question is, how do you keep the dollar the world currency? I think the more that we go in and sanction, we're pushing countries to learn to go around the dollar. I think the President Trump has done a very smart move against the BRICS, what they were trying to do. But it all comes down to debt. That's why debt is our greatest threat to America. And you cannot avoid it any longer. The next president is going to have the debt crisis. And this is where Congress, and the challenge is, if you looked in the past, the Democrat had the blue dog, those were Democrats who cared about debt. They're no longer there. No one in Congress has got elected saying they're going to balance the budget. The country has to be educated on this, and Congress is going to have to act, because Social Security in the next administration is either going to take a 24% cut or do something about it.
In terms of, you know, our expenses and what we take in, the tariffs are generating a lot of income. And in
Yes.
fact, the deficit doesn't look as bad, although the CBO can't use it. I mean, but why don't
It
Republicans?
doesn't look as bad. The deficit is bad.
I know, but why don't Republicans, instead of, you know, still saying that, you know, the foreign countries are going to pay the tariffs and we're going to make money, why not just call it what it is? What people want to tax corporate. It is raising revenue. It is raising revenue.
What you're also finding too.
But why not sell it as a positive, that it is generating all these revenue, all this revenue?
I think you're hearing people talk about the revenues bringing in. It's
Yeah, but they're
also
pretending
a
it's-
tax when people decide what they want to buy. So they decide when they're taxed instead of just taxed across the board.
Right.
But the one thing you have to do is, if you're not tackling the big issues of the drivers of the debt, you're never going to solve this problem. And in 8 years, it automatically hits you.
Okay. Mr. Former Speaker, thank you. Oh, it says it right there. Thanks to former House Speaker Kevin McCarthy. Squawk Box will be right back.
Out and make it count. It is 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. Officials say a gunman opened fire inside a Midtown Manhattan office building and killed a New York City police officer and 3 other people. Law enforcement sources telling NBC News the suspected shooter acted alone and died from a self-inflicted gunshot wound. The building where the shooting took place houses offices for the NFL as well as Blackstone, KPMG, and real estate firm Rudin, companies and executives we know so very well on this broadcast. And we're going to have a lot more on this story, corporate security and safety, later this hour. It was a horrible tragedy and something that I think struck at the heart of corporate America.
It is, and we are continuing with the reverberations this morning. We're also continuing to focus on business, and you can see right now that the Dow futures are indicated up by about 60 points. S&P futures up by 20, the NASDAQ up by 110. Treasury yields have been, to this point, a little bit weaker this morning. The 10 years at 4.39, the 2-year at 3.91. Then you've got cryptocurrencies this morning, and you'll see right now Bitcoin is slightly higher. It's just above 118,000. Ether is up by about 1% as well. Last trade there just above $3,800. And oil prices have been higher this morning as well. Actually, it's turned back around. Right now it's down by 2 cents to 66.69 for WTI. Brent crude is at $70 a barrel.
Reuters reporting that NVIDIA ordered 300,000 H20 chips from contract manufacturer TSMC last week. The H20, one of NVIDIA's less powerful AI chips, it had been developed specifically for China in the wake of export restrictions that had been initiated back in 2023, earlier this month. You'll recall we talked a lot about it, the Trump administration allowing NVIDIA to resume selling that H20 chip to China. Reversing the effective ban on the chip from a few months ago. NVIDIA's CEO saying recently that any restart of production on the H20 would take 9 months. So there's going to be a bit of time to go before it reaches folks in China.
All right, Procter & Gamble announcing fourth quarter results just minutes ago. Earnings coming in at $1.48 a share. That's 6 cents better than estimates. That's on revenue of $20.9 billion, ahead of expectations. Join us now to break down the numbers, and far be it from us to bury the lead. Did you know in this business, John, and it's good to see you, in this business, lead is spelled L-E-D-E, just so people don't think it's lead, or just so people don't know. You are leaving the company on the first of the year to be replaced by a guy a little bit younger than you, but he started the chief operating chief, Shailesh Jejurikar, started in 1989, and he must have been right out of college, because he must have been about 22 or 23 years old. So he is truly, as many people at this great company, Cincinnati-based company, they're lifers, and he is a lifer, but it's a surprise. You're only 61. What's going on?
First of all, I am transitioning to the executive chairman role as of January 1st, but I'll remain an employee of the company in that role. Shailesh is a great guy. I've worked with him for many years. He's worked for the company for 36 years. As you mentioned, he was the COO most recently, and he and I worked very closely in that capacity. And I'm excited about the additional perspective and contribution that he'll bring to the company. We're in very good hands. In terms of what's going on, I, as of January 1st, will have served 38 years for this wonderful company. My wife, who also worked in an executive leadership position and retired when I became CEO, between the two of us, as of January 1st, we'll have served this company for 7 decades, almost 3/4 of a century. Results recently have been very, very strong. If you just look at the last 7 years from when we implemented the strategy that we've been executing against, sales up $17.5 billion, 84th percentile in the S&P 500, earnings up $6 billion, 92nd percentile in the S&P 500. We've created an additional $180 billion in market cap, more value than all but one of our competitors have created in their 1 and 2 century histories as a company. So 7 years plays 1 and 2 centuries. We've created the 18th most valuable publicly traded company in the United States, the 21st most valuable in the world. All not bad for a old economy soap company. And so it's time for me to bring on the next generation, which I'm thrilled to do.
Yeah, we've talked a lot, and we always appreciate you coming on every quarter and talking about it. But the management travails of Procter & Gamble that we followed over the years, I felt the company finally had its guy. Remember, AG had to come back to save the company, and there were some, I don't know whether I call them lemons, we don't need to mention any names, but some of the CEOs weren't quite as well received, but you've had a lot of success, especially emerging from the post-pandemic, John, and you've done some really big changes, put in some really big changes around the globe for Procter & Gamble that was like turning around an ocean liner, really. So it was surprising.
Well,
did you decide this yourself? I mean, being totally honest, is it, why do you think you need a new look at how to run the company at this point?
So, a couple things. One, big multinational business, particularly in the environment that we're operating in, is not a me sport, it's a we sport. And we have a great team, which gives me peace and comfort in moving on to other responsibilities. Second, Joe, I debated whether to tell you this, but you and I have done 70 consecutive quarterly interviews, and I just wasn't sure. I just wasn't sure I could stomach the 71st, so I figured.
That's not nice. That's not nice.
Wait, you're coming out of there. You've got 2 more to go, John.
Yeah, and you would think you'd be pretty good at it by now. I don't know. I mean, you get pretty. Can we count on you convincing Shailesh that this is the right thing to do every quarter? I mean, is it we gonna be at 100 at some point for consecutive quarters?
It's not on the top of the transition list, but we will work on it, definitely. I commit to that.
Just put in
17 and a half years you've been doing this with us?
put in a good word for us.
A while, yes.
Oh my
Well,
God.
at least you are still going to be around. I didn't look today, but you might see the Reds make the postseason. There's still a possibility of it, so that would be good before you're gone. What about commodity prices and headwinds and organic sales growth and all the things that we've talked about ad nauseum for 70 straight interviews?
We're growing. We continue to grow, albeit modestly in the current environment. And the last quarter was our 39th consecutive quarter of organic sales growth. The fiscal year that we just completed marks our 9th consecutive year of core earnings per share growth. As markets have declined somewhat given the amount of consumer policy and political and geopolitical uncertainty, that growth is more modest than it has been at some times when we've talked. But it continues, and it's broad-based. 9 out of 10 categories grew, and we continue to hold share on a fiscal year basis. So things are in, again, very good control. We announced about a month ago a restructuring program to strengthen the execution of the strategy to hopefully accelerate that growth as we move forward. I'm very pleased with that. That'll give us some more financial headroom. It will focus our efforts on businesses that really matter in terms of growth on the top and bottom line, and it will provide an opportunity to further refine our supply chain. So I leave as we strengthen the program that has been very successful over the past period of time.
Dollar hasn't been so strong. You got more headwinds or tailwinds with currency and commodities and tariffs and I mean, how's the consumer? Are you seeing some signs?
Consumers under some pressure. The consumer's under some pressure, but where we're seeing it that manifest itself is in a little bit of trade down within the portfolio. If you look at private label shares, they're down year to year, both in North America and Europe. So it hasn't led to a flight from performance of brands that really make a difference in my life, but it has led, for example, to some trade down from one form of Tide to another form of Tide. We also see it in their consumption levels. They're being a little bit more judicious in terms of how much they consume. So there's definitely an impact, which translates to slower market growth, which I referred to earlier. But markets are still growing, we're growing within them, and we've got strong innovation that we're bringing to market to sharpen that value proposition for consumers and hopefully accelerate growth.
So we'll see you in 3 months, I guess. That's still, and then we'll still talk, hopefully.
We'll see you then, and if your earlier discussion proves to be true, and the Reds actually make some progress, maybe we'll have you here for a day.
I am coming back. I'm coming back next 2 months in September. So yeah, and I've already got a game ready to go in the books. I think they're playing the Mets. And I may be accompanied by a Mets fan, but he's been told no
Very
Mets
good.
hats.
Keep that
no,
under control.
Yeah, no, we will.
Mohammed?
No, we don't travel together to other states.
Hats.
No, this is almost, no, this is family related. John. All right, the stock looks okay this morning. It is an interesting environment to be in, and this isn't goodbye. This is just till next time. And thanks for coming on this morning, John. Good day.
Thank you, Joe.
Okay.
Bye-bye.
We've got some breaking merger news taking place right now. I want to get straight over to Morgan Brennan, who joins us. Morgan.
Good morning, Andrew. So we knew they were talking. Now it's official. Union Pacific and Norfolk Southern striking a deal to merge to create America's first modern transcontinental railroad. Under the terms of the agreement, Union Pacific would acquire Norfolk Southern in a stock and cash transaction. It would imply a value for Norfolk Southern of $320 per share. We closed yesterday at about just under $287. So based on that, Union Pacific's unaffected closing stock price of July 16th and representing a 25% premium to Norfolk Southern's 30 trading day volume weighted average on July 16th. Under the terms of this, enterprise value of $85 billion for Norfolk Southern, and resulting in a creation of a combined enterprise of over $250 billion. I would note, because the last time we saw a rail merger between Kansas City and Canadian Pacific, some differences with how this is structured. Namely, they're doing this without a voting trust. It also includes a $2.5 billion reverse termination fee. Based on 2024 results, you're looking at a combined company, pro forma combined company, with revenues of approximately $36 billion, EBITDA of approximately $18 billion, operating ratio of 62%, that's a key railroad metric, and free cash flow of $7 billion. They're saying that Union Pacific's adjusted EPS per share in the second full year after closing will be accretive. There's more details here. Guys, take a look at shares of Union Pacific. It looks like Norfolk Southern is down right now about 4%. Union Pacific is higher fractionally. I'd also keep an eye on CSX, because there's an expectation now that BNSF and CSX may be forced to make a similar transaction here in the future. But we're going to get more details from the CEOs of Norfolk Southern and Union Pacific, Jim Venna from Union Pacific and Mark George from Norfolk Southern, at 10 a.m. Eastern in a first on CNBC interview on Squawk on the Street. So stay tuned.
Okay. Morgan, thank you for that. We're going to keep our eyes on that stock all morning, and we'll look forward to those interviews.
And obviously, a big question is going to be how the Trump antitrust regulatory regime views this. This is a big test. There's an expectation that maybe you could get a deal like this passed. But there are some questions still about that, and this will shed some light on really how the Trump antitrust regulators view all of this, and kind of see if it's off to the races or see if there are more concerns that are brought up along the way. All right, we've got another icon of American manufacturing just out with quarterly results. Corning reported adjusted profit of 60 cents a share. That beat expectations. Revenue topping $4 billion. That was also above estimates. We're going to have much more on the results when the CEO, Wendell Weeks, joins us at 7:30 a.m. Eastern Time. That stock, by the way, over the last year, up almost 35%. Squawk Box will be right back. The stock up by 3.25% on this news this morning.
And welcome back to Squawk Box. I'm Dominic Chu with a check of your morning movers on this Tuesday. Let's start with shares of United Health, which are lower by just about 4% right now. The company reported worse than expected earnings and a weaker outlook for 2025 full year. The company reinstated its full year profit guidance and expects adjusted earnings of around at least $16 per share, but that street was looking for about $21. It comes as the healthcare giant and Dow component, of course, continues to grapple with higher medical costs and, of course, investigations into its Medicare billing practices. Shares are down roughly 50% so far this year. Next up, you got another earnings story in Whirlpool, sinking more than 16, almost 17% right now after second quarter results missed forecasts and the appliance maker cut its profit guidance for the full year. Whirlpool CEO says the company continues to be hurt by foreign rivals rushing and stockpiling imports from Asia into the U.S. ahead of tariff policies. So Whirlpool shares down 17%. And we'll end with a check on shares of Sarepta. They're soaring by roughly 40% right now after the company says it will resume shipping its controversial gene therapy drug for some patients. The FDA had requested a brief pause following the death of 2 teenagers taking the therapy. The agency did recommend lifting the hold for younger patients with Duchenne muscular dystrophy, DMD, who are able to walk. So Sarepta shares soaring by about 40%. Andrew, I'll send things back over to you guys.
Okay, Tom, thank you for that. Meantime, check out shares of Novo Nordisk plunging this morning. It said they're cutting its sales and operating profit outlook for 2025. It cited a lower view of growth for Wegovy, also Ozempic in the United States. It's the second time it's cut its 2025 forecast. The shares off right now close to 13%. Should also mention shares of rival Eli Lilly falling after Novo's report as well. That stock off less, so about 2.5%.
Another good yearly chart to look at. It's at 69, down from 150.
Right.
Novo Nordisk. And a good comparison chart would be the Novo versus
Eli Lilly. Right.
Yeah.
There's the year to date down by about 30%.
Yeah, that doesn't help, right? A yearly chart. Yearly.
And there's your comparison.
Right.
All right, the latest small business employment watch out from Paychex showing job growth actually remains steady. Joining us right now with the latest data is John Gibson. He's the CEO of Paychex. And John, we've had a lot of uncertainty, people asking questions about how the economy is doing, but from where you sit, things look pretty good.
Yeah, Becky, well, first of all, it's great to see you again. You know, I keep looking at this, and we kept saying this, and kept reporting almost every quarter I've been with you. The small business labor market really has remained fundamentally stable and resilient. And really, despite all the things you said we've went through so far this year, our job index actually increased in July. And when I step back and look at wage inflation, hourly wage growth is below 3%. That's the 11th time in 12 months. It's the 9th consecutive time. So you have to really go back to 2021 to see that kind of trend. So, I think with more clarity on taxes, tariffs, small businesses and entrepreneurs, they should have a lot more confidence to invest in their business. And I think we saw in July the first jump in hours of work by small business owners. So by workers, that's going to put more money in their pockets. So I'm relatively optimistic of where we stand right now.
I guess if you were to look at anything, wage growth is below 3%. I'm not trying to poke holes in any of this. Is that an indication that maybe things are slowing a little bit? I mean, this sounds like a strong economic data point, and I know it's broadly geographic. I'm just trying to look at if there's anything you look at and say, okay, this is something we have to watch for down the road.
No, actually, what I would say is on the wage growth side of it, we've actually seen this year kind of a small increase in wage inflation growth, very small and moderate from the low that we saw in January. Now, I would say it's still below 3%. And when I look at a trend line, this looks more like 2024 to 2020 pre-pandemic.
Wow.
So I think this is a very stable wage inflation. What we've really been watching, Becky, if you remember right, what I talked a lot about, while wages were really going up during the pandemic, owners were turning to reduced hours. And that's really compressed what people actually take home. And what we saw in July was really the first spike that we've seen. The annualized monthly numbers now at 2.5% in number of hours. So you take the wage growth and the number of hours growth, that's something that's put more money in the pockets. You had someone on from P&G, CEO there, talking about the consumer being under pressure. I think they're going to find a little bit more money in their wallet. This was only the fourth time in the last 50 months that we've seen number of hours increase for small business owners, workers. And remember, small business workers represent over 50% of the American workforce.
They do. Also impressive, it's happening around the country, but it's being led by the Midwest. I think Ohio leads the way, followed closely by Indiana.
That's correct. I tell you, the Midwest has been the story of really the last 12 months. If you go back during the pandemic, the South was really leading the charge, and I'm sure Governor DeWine is very happy about Ohio overtaking Indiana. Most Hoosiers maybe are a little regretting that, but Ohio has taken the lead, and really the Midwest continues to take the lead. What's also been interesting here is the South has continued to struggle a little bit. Actually, has fallen for most of the last 12 months. And actually, the Northeast has taken the second spot. So there are a lot of differences and changes going on demographically that we see going on in the data. But the Midwest has really been the strong suit across the board, almost all industry sectors and all aspects in terms of client sizes as well.
John, thank you for joining us today, and go Midwest.
Yeah, Becky, great to see you again.
Ohio.
You too. And Indiana.
He said Ohio.
Followed closely by Indiana.
Followed was the operative term. Followed.
When we come back, Corning CEO Wendell Weeks on the company's latest results. We're going to get to talk to him about what he's seeing with the tariffs, how AI is driving growth at the manufacturing giant, and what they can do in terms of producing here in the United States. Squawk Box, we'll be right back. Welcome back, everybody. Corning results are out this morning, beating expectations on both the top and the bottom line. You can see that stock is up by about 4% right now. In fact, if you look over the last year, it's up by more than 30%. You got to add this morning's gain to that as well. Joining us right now is Wendell Weeks. He's Corning CEO. And Wendell, welcome. It's great to see you this morning. Let's go back and set this a little bit in perspective, because you first came on with us about a year ago. You talked about Springboard. This is your plan for where things were going to go, the growth you saw. And at that point, you were looking for about $3 billion in extra revenue using capacity that you had already built and set up over the year. You came back to us later in the last quarter and said that that had been upgraded to about $4 billion. What do you see today?
Well, what you're seeing is we're running well above that plan, which is what should be happening. We built Springboard because we're riding several significant technology trends, probably the most powerful being Gen AI, and we just had remarkable response to our new products in that space and in others, and that's what's driving our growth. As we've took sales up about 12% year over year since we were here last year, and earnings and cash flow up 28%.
What happened specifically with generative AI? I know you've explained this to us before, but for people who might be tuning in for the first time, and I want to say this because you've been at Corning for decades and decades, and you have laid things out, and Corning is going to be celebrating its 175th anniversary next year. You don't get to be a company that sticks around and then grows and finds new things without laying out the frameworks long in advance. What did you see with generative AI, or what did you build out that allowed you to play into the trends that we're seeing right now?
It is pretty cool to be 175 years old and still rocking it with new technologies like Gen AI, next generation mobile consumer electronics, next generation compute. And the way we do it is it's a combination of being the best in the world at our specific materials and how they interact with the world, and then linking that with long-term investment for where we think those technologies go next. And that's what happened with Gen AI. Gen AI for inside the data centers needs 10 to 20 times more fiber in the same space. So we invented a new set of high-density products to help build that neural network. The next piece of Gen AI is to connect all of those data centers to each other, and that's brought a new sort of billion-dollar driver to us with a new set of long-haul products. Beyond this, the next generation we're investing in is what's called the scale-up piece of the network, where each AI node increases in the amount of GPUs, which then moves those copper connections into optical. And when you come to photons, you're coming into our space.
So I think of some of the great things that you've invented in the past, like Gorilla Glass. You had the glass for the iPhones before there really was an iPhone. You had these things that allow you to do it. Who are your big customers right now when it comes to AI? Who's buying all this stuff?
So it's all the big hyperscalers you can name. So all of the big AI, the big names in cloud or Gen AI services we're putting in the infrastructure, that's who our customers are.
And is there any slowdown in sight? I mean, I think of you guys almost as like the NVIDIAs, who are the necessary building blocks for this.
Well, including us in the same sentence as NVIDIA. Thank you. Respect. That's very nice.
Who do you compete with? Who else does this?
We're the only U.S. flag company that plays in our space.
Who are the non-U.S. flag companies that play in the space?
Mainly Japanese players like Furukawa, Fujikura.
So what in terms of market share, if we were to look at a pie chart, I get the U.S. flag, but do you own?
We are the largest player in the world and lowest cost player in the world in fiber optics.
But does that mean you control for this particular business? Since you just compared you to NVIDIA, NVIDIA owns 90% of the market for the high-end chips. You own what percent of the market for what you do?
We do well. I wouldn't portray us as having control of the market.
Okay, but is it 50%, 40%, 90%,
we
20%?
do very well in this market.
But you control photons. So
No, I just said If you come into photon
Right.
space,
But you-
that's my
Is it
home.
is it a particle or a wave? A photon?
You can't.
Both. Good for you,
Hold on.
brother.
Duality. Hold on. As a public company, you
Yes.
can't say what even estimate ballpark the market share that you
It
have in this
depends how you
space.
define the market. If you'd ask any one of our customers, what they would say is they can't build their infrastructure of the future without
I understand, but
pouring a big part.
I'm asking if an analyst were on the with us right now, and they said what percentage you have compared to these Japanese players and others, they would say what?
I would say we are at least twice the size of any one of our competitors.
Okay, we're going to get a square answer. I'm saying, is it 70% of the market, 50% of the market, for just something?
It is a large portion of the market.
Okay.
Wendell, let's talk a little bit about where you see this growth going. So Springboard, you had upgraded the last time you were on with us to say $4 billion. What do you see at this point? Are you upgrading any of your financial guidance on this?
We upgraded both our internal plans and our high confidence plan for our investors to between $4 and $6 billion. We'll take another look at that in a couple of quarters. If we keep performing like this, there's a good opportunity we'll upgrade again.
You bring up the American flag being flagged as a company that's here, and I suppose you do that because of the incentives that President Trump is putting in for manufacturing here in the United States. How do tariffs impact you? What do you manufacture in the United States? What would you say on that front?
Well, our philosophy is that we put our manufacturing platforms in the same region as our customers. That is our long-standing philosophy. So as a result, in the U.S., 90% of what we sell in the U.S. is U.S. origin product. Of the remaining 10%, the huge majority is USMCA compliant. Only about 1% of what we sell in the U.S. we make in China. On the other hand, we have a similar type situation in China. So that philosophy serves as a natural hedge against any trade friction. We guide that in this quarter be somewhere between 1 and 2 cents of earnings per share is the impact of tariffs. We're actually seeing both new and existing customers start to approach us to make use and leverage our large advanced manufacturing platform here, and this could turn into a future driver, which could accelerate our growth even faster.
So what do you worry about? What are the areas that you have any concerns or that you have your team focused on at the moment?
Well, our main piece is how do we win in the next technologies over the next 5 and 10 years? We're investing today for that scale up piece of the network. If we win in that, that is 2 or 3 times the size of our current Gen AI business. So it's a dramatic opportunity. We know it will go into photonic space from electronic space. The exact timing's hard to call, but one way or the other, we have to win that technology platform.
Right now, you're riding a wave of AI spending from big capital expenditures that's coming from all these companies. If they were to ratchet that down, that would impact your growth plan.
Yes, it would. But so far, as I've shared with you before, every call that I'm on with my customers, it is all about how they can get more of our new products. We've yet to have a discussion about how do they pace their current commitments to us.
Okay, well, Wendell, we want to thank you for coming in today. We appreciate your time. Wendell Weeks.
Thank you very much.
I'm gonna ask you off camera about this. They actually froze light photons, super solid state recently. Boeing, meanwhile, releasing some quarterly results. Let's get to Phil LeBeau with the numbers. Hey, Phil.
Hey, Joe, take a look at shares of Boeing moving higher as the company reported much better than expected results for the second quarter. A smaller than expected loss of $1.24 a share. The street was expecting a loss of $1.48. Revenue better than expected at $22.75 billion. And then when you look at the metrics, the quarter within the quarter, across the board, much better performance year over year. Q2 operating margin, negative 0.8%. Look, it was negative 6.5% a year ago. The cash burn, this is crucial. This is one reason the stock's moving higher. $200 million cash burn in the second quarter. Last year, the cash burn was $4.33 billion. Each of the divisions, revenue for commercial airplanes up 81% year over year. That's for commercial airplanes. Defense and space up 10%. Global services up 8%. Any way you look at it, strong numbers for the second quarter, especially compared to last year as the company moves back towards free cash flow being positive and cutting their losses and getting back to profitability. One negative note within the report is that the 737 MAX-7 and -10 models, those certifications, the company is confirming will be pushed out, they expect, into next year. That's not a huge surprise. People have been saying that for some time. It would likely happen next year. Lots to discuss with CEO Kelly Ortberg coming up on Squawk on the Street. It's a CNBC exclusive. Don't want to miss what he has to say. Bottom line is this, guys. Shares are moving higher because they have slashed their losses. Much better than expected results for the second quarter. Back to you.
To a new high, finally. So 52-week high. Been trying to get through a couple of times, but yeah, it's come a long way. It's going to be a double pretty soon from the lows. It got as low as $128, but I mean, it's got a ways to go to get back to those glory days from a couple of years ago, Phil, but well on its way at this point. Amazing. Thank you.
Yep. Huge quarter, huge year.
Thanks, Phil.
Okay. Coming up, French AI company Mistral announcing a global partnership with global tech services company NTT Data. Company's co-founder and CEO, and NTT Data CEO, is going to join us next in an exclusive interview. Do not go anywhere.
And we told you just a couple of minutes ago that Novo Nordisk is cutting its 2025 guidance. Now the company announced it has appointed a new CEO, Maziar Mike Dusdar. That move is effective on August 7th. And you can see they led the way into it, but Lilly, all of them are down a little from competition from the weight loss drugs, but that has fallen a long way and down another 23%, almost another quarter just this morning, down to 53.
And new this morning, French AI company Mistral announcing that it now has a partnership with global tech services company NTT Data. Joining us right now in an exclusive interview this morning is Mistral's co-founder and CEO Arthur Mensch, NTT Data CEO Abhijit Dubey. Good morning to both of you. I'll start with you, Arthur. What does this mean, and what does this partnership even look like? Where you may be muted.
Sorry.
But maybe his mic is coming back.
Yeah.
How you doing, Arthur?
Yeah, I'm doing great. Sorry about being muted. So for us, it's a partnership that leverage our mutual strength. It's about deploying securely AI in enterprises. It's about powering entity data solutions for call centers. It's about expanding in the countries where we are operating. So that's France, Luxembourg, Singapore, Australia, and Spain.
Abhijit, how did this happen, and how do you think about the various companies that are creating these big models?
So Andrew, we follow customer demand, and what we have found over the last, I would say, 3 to 6 months is a real inflection point in large enterprise customers wanting to move from mass experimentation, mass POCs that they've done around AI and generative AI, and really want to deploy enterprise at scale. Because the reality is most enterprise customers, even though they've spent a lot of money and deployed a lot of stuff, actually haven't seen the impact in their P&L and the income statement. And so there are two things that have become quite important. One is to have really fine-tuned domain-specific models. And the second is the desire to actually own the data and deploy these models on private infrastructure. So hence this partnership that we have inked with Mistral. We believe that with Mistral's highly flexible, highly customizable models, combined with our deep domain expertise in different industries, in different domains, in different process workflows, as well as our global private cloud, as well as private AI infrastructure, along with our data engineering and data integration capabilities, is a formidable force, especially in regulated and critical industries like public sector, defense, utilities, financial institutions, etc.
Hey, Arthur, how should the public think about your models versus maybe some of the other models and some of the big sort of frontier models, and whether the frontier models can actually ultimately do what some of the smaller models can do?
Well, first of all, the models that we've been releasing in the last 2 years have been always been within the top tier. In certain part of latency and in certain specific domains, we're actually state of the art. So when it comes to transcription, to optical character recognition, to deploying models locally on laptops, for instance, we have the best models. And if you look at the open source models and the open source models in the West, so including the US and Europe, we are actually the leading actor. So this has been critical in building the trust with enterprises. And what differentiates us from typical model provider is this full stack approach to actually deploying AI and changing processes in enterprises so that we can deliver on the value. What we find with enterprises is that oftentimes they don't really see the P&L effect of generative AI. And what we found is that it actually takes more than models to deliver that value. It takes tooling to deploy agents, it takes workflow orchestration engines, it takes observability and these kind of things. And it also takes an expertise that can be deployed with enterprises. And that's also the purpose of this partnership that we are doing today with NTT Data, which is about how do you combine technology and expertise and talent so that you deliver on the P&L expectations with AI.
Hey, Abhijit, what is your sense of just what this is ultimately going to do to employment and productivity? I think that's been the central question around AI in a much sort of larger sense, and there has been no real answer yet, and I don't know if you think there's a tipping point that we're about to reach.
I think it's too early to reach a tipping point, Andrew. Unless we get to fully autonomous processes within enterprises, which I think we are a few years away, I don't think we're going to see a significant shift in the white-collar work. I think in the blue-collar scenarios, I think that AI can do amazing things, because the reality is many of these job categories, we actually have shortages. For instance, I think in the US right now, there's 500,000 job postings, especially for manufacturing, right, that are open, that cannot be filled. And I think AI can play a very significant role in onboarding and training new talent, because you can encapsulate institutional knowledge in digital versions of our existing labor force. And that digital labor can onboard new labor pretty fast. So I think it's too early to say it'll lead to wide-scale unemployment. There are definitely some categories like software development where we are seeing a slowdown in terms of hiring of classic software developers.
Arthur, you want to take on that?
Well, blue-collar productivity is one of the focus of the multiple customers and partners that we have, in particular in Europe, but also in the US. Manufacturing is indeed suffers from a job shortage, and what we found to abound in what Abhijit said, basically generative AI allows you to handle high turnover jobs and make sure that competence remains because you have onboarding systems that are much more efficient. That applies to blue collar jobs and white collar jobs. Again, I don't think that we're reaching a tipping point anytime soon. On the other hand, I would say that companies are looking at how to reorganize themselves once they have done like end-to-end process automation with AI. That's what we do with CMA-CGM, for instance, when we handle all of their container release and cargo release, and when we handle the multiple of software and the multiple of people that were involved in the process, we actually do an 80% productivity gain globally on the organization. And what that means is that you have many people that can be reallocated to higher added value use cases.
All right. Arthur and Abhijit, want to thank you. Appreciate it. Congratulations on the new partnership.
Thank you.
Thank you.
All right, much more coming up ahead now on Squawk Box, including an interview with Commerce Secretary Howard Lutnick as trade talks with China continue in Stockholm. That's at 8:40 a.m. Eastern Time. Squawk Box returns in just a moment.
E+.
take a quick look at the futures right now. Dow up about 100 points, NASDAQ up about 100 points, the S&P 500 up about 17, 18 points now. Coming out 4 dead in a shooting spree in Midtown Manhattan, including an NYPD officer. The incident putting a spotlight on corporate security. We're going to talk to an expert in the field in just a moment. Squawk Box returns after this.
For certain.
A gunman opened fire inside a Manhattan office building, killed a New York City police officer and 3 other people. The gunman then took his own life. The building where that shooting took place houses offices for the NFL, Blackstone, KPMG, and real estate firm Rudin. Joining us right now with a look at corporate security is Dave Kamdad. He's a former Boeing vice president, chief security officer. He's now a partner, chief security officer for corporate security advisors. Good morning to you. Dave, you know, this is a tragedy that I think a lot of us watched on television unfold last night. I was getting texts actually from people inside the building as it was happening. When you think about corporate security in New York City, and you think about what goes on in lobbies, what goes on the street, are there lessons that we should be taking away from this morning?
Well, first of all, good morning and thank you for having me. And really, such a tragic incident and loss of life. I think that the thing that corporate security leaders are looking at today is what they've looked at previously when you see incidents like this. Have they done all they can do to be prepared? Have they put together an intelligence-led security program that gives them the opportunity, hopefully, for early threat detection, rapid information sharing, and a coordinated response? And it's early in this investigation, but it's pretty clear that a lot of good things did happen yesterday.
If you were advising companies this morning that are saying to themselves, what should we be doing about our own security, what would you be telling them?
Well, I think they need to understand from a proactive intelligence, do they have a good perspective of their internal and external threats? You know, there are people that make threats that don't pose a threat. There are people that make threats that do pose a threat. And there are also people that never make a threat and are a threat. And so do they have the capability and the tools and the communications internally to work with themselves and also their partners in the building security and local law enforcement to put those pieces together and be able to identify people who may be showing undue interest in their company, the building itself, or someone within that building. And so I think that's what they're looking at today is, have we done everything we can do to be prepared for an event like this and hopefully prevent it?
In terms, though, of hardening buildings, especially in New York City, most of which have security guards, but not of all of whom are carrying weapons with them. Should they be?
Well, I think that's a building by building decision. And as we saw yesterday, when someone comes in with that type of capability, it's difficult unless you want to create really a perception that a building's unsafe and having officers walking around with long guns. That's not really practical. Building security in New York and in most major cities is very good. There's a process to get into those buildings. And this was one of those, again, low frequency, high impact events where the person walked in and basically ambushed everyone in that lobby with little to no warning. I'm not sure there would be anything that anyone could have done yesterday in that lobby, in that immediate moment, to change the outcome.
No, but Dave, the reason I ask is there are certain buildings in New York City where there is either a police presence or sometimes security that literally walks the outdoor corridors of the building, some of whom are carrying weapons. I mean, sort of clear efforts to sort of suggest to anybody who would consider threatening such a place, you know, you're not coming in here kind of thing.
Yeah, Dave, there's a far cry between carrying a long gun and having a weapon that you could have that, you know, that's not even obvious. I mean, a gun-free zone is totally unprotected and a total soft target. You would never see a government building in Washington, D.C. or anywhere else where you wouldn't have someone that could use deadly force if he or she was presented with it himself.
Yeah, I don't disagree. And in this case, there was an armed personnel in that lobby. The off-duty police officer Islam, who unfortunately lost his life.
Yeah.
But he was outgunned. That individual walked in with far more capacity and capability than the officer had, and the officer likely had no opportunity to even respond.
Dave, finally, there's sort of a larger question, obviously, about mental health, gun violence. This was somebody who had a mental health problem, clearly, and also clearly had access to a gun, at least in the state of Nevada, where he was given a license
for carry.
For carry. What do you think has to happen here? And by the way, even a larger question, what should the role of business even be in that conversation?
Well, that's a large question, and obviously the individual was licensed to carry the weapon. Apparently he was able to purchase his weapon legally. Don't know about this particular weapon as the investigation's in the early days, but you know, clearly we've seen time and time again in some of these instances where the shooters have a mental health issue, and it's been documented, and the question always comes back to, well, should they be permitted to maintain their weapon? And in many cases, in many states, if there is a concern about someone, that weapon can be for their own protection, the protection of others. Law enforcement can confiscate that weapon for a period of time to make sure that that individual is not in a position where they will do harm to themselves or other people. We'll have to understand over the coming days and as this investigation unfolds, into what authorities knew, what, if any, actions have been taken in Nevada with this particular individual. But at the end of the day, it's a tragedy and just another unfortunate example.
Dave, I want to thank you for joining us. We appreciate your perspective on this morning. We also have some very sad news to report, which is Blackstone, one of the tenants in that building, is just out with a statement. It says the company is heartbroken to share that colleague Wesley LePatner was among those who lost their lives in that tragic incident yesterday. She was the CEO of the Blackstone Real Estate Income Trust. Blackstone said its prayers are with her husband, children, and family, and ours are too. And it's, you know, I think it just hits so close to home because this happened really in the center of New York City in a building that I think we've all been to, and that a lot of people know, and it's right here on our doorstep.
Our thoughts and prayers go out to her family and to her colleagues, and we're so sorry for what they're dealing with today. It is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, trade talks between the United States and China resuming this morning in Stockholm, Sweden, after a more than 5-hour session yesterday. Both sides looking to close a deal before the August 1st deadline. We'll get the latest on tariffs and trade talks with Commerce Secretary Howard Lutnick. That's coming up later this hour. Reuters reporting NVIDIA ordered 300,000 H20 chips from contract manufacturer TSMC last week. The H20 is one of NVIDIA's less powerful AI chips. It was developed specifically for China in the wake of export restrictions initiated back in 2023. And just announced in the last hour, Union Pacific is acquiring Norfolk Southern. Union Pacific in a stock and cash transaction, implying a value for Norfolk Southern of $320 a share based on Union Pacific's unaffected closing stock price back on July 16th before word of this got out. This would create the nation's first transcontinental railroad with a combined enterprise of over $250 billion. Don't miss the CEOs of both Union Pacific and Norfolk Southern in a First on CNBC interview that's coming up at 10 a.m. Eastern Time.
Let's check the futures this morning. Had a lot of different, being buffeted by different things. Like I think Don probably talk about United Healthcare. First, look at the Treasuries. There's the futures across the board, though, in the green. The market does seem to want to go higher most days, and there's a 10-year at 438. Dom is with us now with a look at some of this morning's pre-market orders, which probably includes a couple of Dow components. I would think transportation across the board, getting some good checks on the economy. I think.
Yes, absolutely. Dow components, bellwethers for the economy. Joe, Becky, Andrew, to your point here. So let's get you a check on starting off with United Health. So Dow component, right, reversing some of the losses that we saw earlier on. We're down about 1.5%. You may recall just last hour we were down roughly 5%. The company did report worse than expected earnings and a weaker outlook for 2025 than consensus estimates. It comes as the healthcare giant continues to grapple with higher medical costs and investigations into its Medicare billing practices. Those shares are down roughly 45% so far this year. Another influence on the market so far today, Dow component Merck lower by just about 4.5%. The pharmaceutical company reported its first revenue miss since April of 2021. The company also said it will slash $3 billion in costs by the end of 2027 to support new product launches and its drug pipeline. For the full year, Merck is narrowing its revenue and earnings guidance as well, so on balance down 4.5%. And we'll finish with shares of economic bellwether UPS sliding roughly 3% despite a better than expected revenue and earnings coming in roughly in line with estimates, we'll call it. The shipping giant did not give its full year revenue and operating profit outlook for the second straight quarter. They cited quote unquote macroeconomic uncertainty. Those shares have slid roughly 22% so far this year. So Joe, a lot of influences, and as you point out, some of those economic bellwether type effects on the market right now. I'll send things back over to you guys.
All right, great, thanks Tom.
Sure. Okay, coming up from sports investing to the media landscape, the Fed and markets, Mario Gabelli joins us after the break with his favorite stock ideas and so much more. And then later, Commerce Secretary Howard Lutnick with the latest on talks with China and the trade agreements announced just over the weekend. Squawk Box. It's going to be right back.
AmericaFirst.com.
Welcome back to Squawk. Shares of Sarepta trading higher this morning. The company saying it's going to resume shipping a muscular disorder gene therapy to patients who can walk. That followed the FDA recommending the removal of a halt on that drug. Despite this morning's jump, shares are down roughly 80% though this year.
All right, let's talk media, taxes, tariffs, sports investing, and much more. We've got billionaire and value investor Mario Gabelli with us. He is the chairman and CEO of Gamco Investors. And Mario, it's great to see you here this morning.
Well, it's indeed a privilege and fun to talk about our favorite subject, which is stocks and the world of which volatility is part of the daily breakfast, lunch, and dinner for us.
There has not been a lot of volatility lately. It's been kind of an upward march.
I'm looking at specific stocks, the amount of transactions. For example, Flowserve had a deal to buy Chart, and it's being taken over for $210 in cash. And the shorts were in Flowserve because they were arbing it. And the Flowserve stock at 58.50 is down from 65, and it's a bargain. Scott Rose going to do a great job. And then you got a deal like Iveco in Italy that postponed their meeting till this week on Thursday. And speculation is they'll sell their defense business. And the stock is 18 euros, and we think it's worth 29. And if they do that, what will they do with the balance of the business? So there's a lot going on all the time.
I know it's probably not in your wheelhouse at the moment in terms of things you've been considering, but Union Pacific announcing this deal with Norfolk Southern, I mean, that's going to be one that does test the regulatory, I guess, how willing they are to allow bigger transactions to happen. What do you think happens there?
Well, that is a great start because the notion of the tax structure in place, so that now you can figure out what you can expense on R&D, what your depreciation bonuses are, what your other things are, that gives you a little more clarity. Secondly, the notion of some of these transactions getting approved quickly. Now, you have a new head of the Federal Communications Commission. Carr is saying, hey, we don't want the broadcasters to go the way of the newspapers. And he's going to be a lot quicker on making decisions. You're going to have Ferguson at the head of the Federal Trade Commission. The other one turned down a shoe company, and it caused it to have a disaster with Capri. Among others, like iRobot was 55 and it's now 5. Sports Warehouse was 15, it's now 3. So those individuals have moved on. And now you have that, and the changes also in the EU in terms of M&A. So I would think, I'm not going to say it's greater confidence, but when you look at the map, where is Burlington Northern, which is not on the East Coast? Where is Union Pacific? It's not on the East Coast. So what are the negatives to the shippers? And that's one issue. Clearly, you want to look at it, but it should not take 2 years.
So you think there's going to be more deals? There already are more deals, lots of percolating?
Not only that, you're going to have the private equity guys are stuck with, holdings, and they're laying them off to related parties and continuation funds, and now they would like to go more into the public domain or figure out another way to swap them. So you're going to see a lot more. And yeah.
Go ahead.
No, that's it. And then, we're going to see it in some other parts of the world as well.
Well, let's talk about media, because that's where you've always been a big investor. Paramount shares, voting shares of Paramount you owned, that deal getting approved. What do you think of it, and what do you think happens next with some of these other media?
Well, I thought somebody would ask me about Paramount. So I brought this, Andrew, for you.
Thank you.
You're welcome. What's important now?
Whip inflation now?
No, yeah, but that's an old. What's important now is our.
What's important?
That's my version. Whip inflation now was back in the 1970s. That was obviously important.
My mother told me about that period. Go ahead.
Yeah. You bought one of those expensive putters recently. Come on, that a private equity fund I just bought. Independent of that, what is important now? Netflix has got streaming. The world has changed. It's got a market cap greater than Comcast, greater than Disney, greater than Warner Brothers, greater than Paramount, greater than 3 or 4 of the other ones like Lion Studios, like AMC combined. So how do we compete and survive in that? what is important now is to help Hollywood. We have to bring American creativity back. We have to bring the content and capability back. And that's what is going to happen with a combination of Redbird and Skydance. They will own 70% of a billion-share company. They'll have $10 billion of debt. Hopefully they can peel off some of the TV stations. So there's a lot to be done.
Do you think that that company will ultimately buy and or merge with Warner Brothers, which just announced yesterday that it's going to be, it gave the new names, Warner Brothers and Discovery, but that would be something that you consider to be potentially an opportunity for them?
Look, think of Zaslav. He's going to take over what was I call sports and streaming. He's put a new name on it last night, okay?
Discovery.
Discovery Club.
I know, he's got, not Discovery, he's put it on Warner Brothers. And so, yes, the Zaslav, Variety came out and listed how many Emmys they got. 142. They got the highest number of anyone. So the notion of, and he's got Superman doing $500 million at the box office, domestic and global. And so content creativity, but then how to monetize it. And that's where he's going to be very strong. Now, will he try to buy back up? Let's look at Warner Brothers. They've got 2.5 billion shares. The stock is $32 billion market cap. They got 28, he got $60 billion. Compare that to Netflix with 400 billion. Maybe a little higher than that, 500 billion. How does he create value, and what is he going to do? Comcast is spinning off Versant, okay? And others are doing the same. Versant, sorry.
It's not
So
French.
I got that French version. I can't get rid of the French version.
The reason I'm asking the question about Warner Brothers is right now there's a question. You're going to have the Paramount deal that's going to close, right? So that's about to happen. The question is right now, if you believe that the other ones that are up for grabs would be Warner Brothers, that would be one. You would think that Peacock, which would be an NBC, which is part of this company. I don't know if you think that regulators would actually allow this company to do anything during this administration. That's an open question. Therefore, then you start to think to yourself, okay, there's sort of only 2 or 3 other options if you are David Ellison or you're David Zaslav.
The answer is go to Hollywood and start going back to basics. Give the consumer what they want, when they want it, at the lowest possible cost, and
I'm asking as an investor.
So neither a buyer
Forget the
or a
investor
seller
for a
be.
moment.
That's what you do. That's the business.
yeah, but I have owned Paramount since since Gulf and Western owned it. So I've been in it for 50 years. Just think about the next 20 years. Think about content. How do you create?
By the way, has that been a mistake for you?
I think you should have sold it.
Yeah, has that been a mistake for you?
No, don't forget there was a time when the guy in 2002 shorted the stock and it ran to $90 and we were able to liquefy some and buy some back. We've been a long-term, we own 5 million of the 30 million shares of the voting stock, of the 10 million that are outstanding. We're gonna have 0. We're not gonna own any. He's cashing us out. It's the terms of trade that we object to.
No, I know. The reason I asked that is Joe was, I think, alluding to. You would have been happier selling those shares 5 years ago.
I did.
You said
I bought them back.
5 years ago?
Okay.
Well, no, after the guy, look, Tootsie Roll went from 30 to 60. Paramount went from like 30 to 80, back to 23. Today, I bought some today because I got until Thursday to make an election. You know, you got to look at financial engineering. You got to say, hey, I have to elect, and everyone looking at this program has to make the election by Thursday of whether they own Paramount and whether they want to own the voting, the non-voting stock, and how do they get the cash and elect to get the cash, and then they'll work on it again.
So,
but let's not get on that one.
Financial engineering is the process of either buying or selling stuff. Are you suggesting Zaslav should neither be a buyer nor a seller? Nor
Oh, no. First step, unfortunately, it's going to take 3 or 4 months to get this spun off. Okay? So there are other companies doing that. Tegna and Store Broadcasting are in the broadcasting area, and when Brendan Carr lifts the cap, right now you can only have 39.5% footprint of the U.S. TV households. That's going to be lifted. Which company is going to do that? Then will he allow, which as I think he just did, allowing you to own more than one TV station in major markets? But I have to get a better clarification.
Let me ask you a different question about Brendan Carr. Given what he did to Paramount, given what the administration has done with a number of these lawsuits against media companies, How do you as an investor feel about that?
Come on, here. Andrew, that's why I brought this for you, okay?
Right.
What is important now is the vitality of that industry for the American consumer and the benefit
but
of
I'm saying
Hollywood.
that Brendan Carr may not allow other deals to happen because they may
Well,
have
that's your
different
speculation, it's not mine.
But we saw it in practice. It's empirical that these deals were held up because
when
of
he
these
uses
things.
empirical, he's telling you a fact.
Warner Brothers, when Zaslav tried to buy it, it was held up by the previous regulators for at least 2 years, and that was a crushing time. The
I'm not
world has
disputing
changed.
that. I'm saying
The world
that
has
was not
changed.
about.
That's fine. You don't believe the world has changed. I do.
I'm asking a different question. I'm asking, what did you think, for example, of this last go round with 60 Minutes and CBS and the payments that
What's
were
the
made?
relevance of that? That's history.
Those were that was shareholder money. You don't care about these things?
You know, there's an old New York expression called bupkis. And that let's deal with the relevant dynamics. Paramount has 650 million shares at $15. It's 10 billion market cap. They got 12 billion of debt.
Okay, so
what did you want it to do? To go the way of Capri?
And they'll save twice as much from canceling Colbert in a year that they spent on.
Well, that's irrelevant to me. The point is that you got to protect Hollywood.
It's very sad.
There's a bigger picture here of intellectual content coming out of Hollywood that you have. Paramount spends $18 billion on content. You wanted it to go down the sink if you didn't approve the deal? That should have been done months ago. It should have been done under the other persons that were running it.
So,
Anyway, today, I want to talk about nat gas.
before we get to that, though,
National
Barry
Fuel
Diller
and Gas.
has
What?
the idea. Barry Diller has come on and said that he thinks a lot of these assets are being discounted far too much. He thinks there's more value in the content than
legacy.
In the legacy content than is reflected in the market today. Do you agree with that?
Yes, you have to, because you can recycle content to do other things. And so if you have content that's been fully amortized on your balance sheet, how do I look at the financial statements? Amortization, like for example, Netflix will spend $20-odd billion on content, but they're only amortizing 18. Whereas last year, Zaslav and Waters amortized it fully. What is Amazon doing spending $20-odd billion? What is Apple doing spending $20-odd billion? What have they learned from Formula One? And what will they want to have as content? So Lion Studios is an example of that. AMC, which The Walking Dead at $6 is an example of potential content. That's it. This is exciting. We have to save Hollywood.
From itself.
What?
From itself.
Oh, come on. You know, this way when you guys go out to Sun Valley, you can talk to all these organizations and feel comfortable.
Add on top of that the sports parts of this. You've long been somebody who's believed in Churchill Downs. You've long believed in the Atlanta Braves. How does that fit into what you're seeing today?
Sports and live news are important fundamentals for the small TV broadcasters, whether it's Fox, which I like at $51 with $450 of earnings for a June 30th year, and then they'll have the, so you want to own sports. How do I play sports? Baseball. You all were kind enough 2 years ago to sign this, okay? And this here is the Atlanta Braves. The stock, unfortunately, I'm going to cuff this, 15 and 45. So they've had a challenge starting off the year. However, the stadium and the Battery Park, and it's worth over $60, and it's fun to own it. However, you also have Madison Square Garden Sports, which is basketball. The Knicks and the Rangers are worth $400 a share. What is Jimmy doing? Right now, he's focusing on Abu Dhabi and the Sphere. He'll do something else. There's 24 million shares. They own 100% of the vote. 4.5 billion shares of super vote. Then in addition to that, soccer. Next year, 12 months from now, you're going to have everybody talk about the World Cup. Yeah. So I want you to own Televisa. Grupo Televisa has the rights to the Latin American market. They are selling, the stock is $2.27. There's 535 million shares located in Mexico City. And then there's a company called Dartmouth, somewhere in Rheinmetall, I'm pronouncing it wrong, in Germany. The stock sells for €2.80. It's worth about 10 euros. And that's a soccer team. So sports is exciting because it's content, and it's global content, and soccer goes global. Okay, Man U, for example, is selling at 17 1/4, and the Glazers still own control. And Radcliffe bought it at low 30s, and at 17, it's probably worth it. They've been uninspiring on the field, but they'll improve. Then on top of that, I can't avoid talking about a company in Buffalo, New York.
Would you buy the spinoff from Warner? Would you buy
Yes.
Versant?
Well, first
Should
of all,
they be buyers or sellers of the cable assets?
Lazarus is going to do a great job.
What's he going to do? Buyers? Is he going to
No,
consolidate?
but let's get the data out.
Let's get the what?
The data, the form. I want the financials. What is Comcast going to spin off? What's the debt? What's the P&L on the historical basis? What's the corporate cost? Once I get there, we'll put a microscope, and then we'll sit down with the management.
And tell
Okay,
them
what do you think of the split of Warner Brothers and Discovery?
I keep calling it Versant.
Versant.
What do you think about the other business, the Discovery Global business, which is going to have a ton of debt on it?
The debt of the pro forma company is $28 billion.
Right.
Okay, because he's made some adjustments. I don't have the final debt figures because there was some buying and swapping of debt and restructuring it. I can't answer. I know what the debt's going to look like. Gunner's going to do a good job running it. Okay, and we'll see. There's time and motion in place. Right now, think about what.
just wait for the data.
Wait for the data. Stars. I'm an analyst.
You have a couple
You
of youths.
gotta dig into the numbers, and that can happen in the next 60 to 90 days. They have, unfortunately, what you want, Andrew, is the regulatory environment to accelerate the time. You can't have a deal sitting out there for a year and a half in the content world, and then you have a strike. What's that thing? Screen Actors Guild, Writers Guild. What?
Just Andrew's expression. It's gotten progressively.
I don't even know what's going on anymore.
Befuddled.
Oh, come on. You know, the answer is you know everything, and you're right. You're doing a great job, and you're asking the right questions. But I don't have the answers.
There you go. Now he's smiling.
Mario, thank you.
Well, we're always privileged to be here to talk about my National Fuel and Gas,
Yes.
which is an $85 stock, which is the way to play gas because they own 1,300,000 acres in Marcellus. Goodbye.
Goodbye.
I'll
Thank
see you
you.
in one more. You got 5 seconds.
Oh, come on. 5 seconds? I got so many I can do in 5 seconds.
I've heard. Up next, coming from the CEO of Corning on the impact of tariffs, and check out the shares of Boeing, the company reporting earlier this His shares right now.
I didn't know
Don't
this
miss
day or two.
Don't miss Phil LeBeau's exclusive interview with Boeing CEO Kelly Ortberg. That's coming up on Squawk on the Street. We're coming right back.
business.
And welcome back, everybody. Corning beating expectations on both the top and the bottom lines. In fact, that stock is now up by 5 1/3%. The CEO, Wendell Weeks, joined us earlier in the program and talked about the impact of tariffs on his business.
We put our manufacturing platforms in the same region as our customers. That is our long-standing philosophy. So as a result, in the U.S., 90% of what we sell in the U.S. is U.S. origin product. Of the remaining 10%, the huge majority is USMCA compliant. Only about 1% of what we sell in the U.S. we make in China. On the other hand, we have a similar type situation in China. So that philosophy serves as a natural hedge against any trade friction. We guide that in this quarter be somewhere between 1 and 2 cents of earnings per share is the impact of tariffs.
If you take a look at the shares over the last 52 weeks, you'll see that they are up by about 37%.
Right, up next, the race for the next Fed chair heating up even more. Steve Leisman joins us with the results of the latest CNBC Fed survey. And then Commerce Secretary Howard Lutnick joins us for the latest on the tariff talks and the new deal with the EU, China. Squawk Box will be right back.
Insurance.
The latest CNBC Fed survey showing that the Fed chair race is heating up. Senior economics reporter Steve Leisman joins us right now with more. Good morning, Steve.
Morning, Becky. The Fed expected to hold rates steady at its meeting this week en route to an expected September cut, and respondents to the CNBC Fed survey see a three-way tie in the race to replace Fed Chair Jay Powell. I'll get to that in a second. Here are the Fed expectations. 100% said the Fed won't cut in July, but 27% think it should. That reflects agreement, perhaps, with two Fed governors who could dissent at this meeting. 65% those see the Fed cutting in September, and 31% is the likelihood of a U.S. recession, down from 38 in June and 53 in May. After more clarity in tariffs and their impact. But 1.4% is the GDP forecast. That's up from 0.6 from the May lows with all the concerns about reciprocal tariffs. Here's the outlook for the funds rate. 4.4 is the current rate, goes to 3.9, that's 2 cuts. 3.5 next year, that's 2 more cuts. Showing the Fed is still seen remaining, though, above neutral, or the 3.3% average long run rate, even through 2026. Who the next Fed chair will be is also anyone's guess here. Kevin Warsh, the former Fed governor, at 24%. Treasury Secretary Scott Bessent at 24%. Kevin has it just a little bit behind at 22%. And Chris Waller, the Fed governor, who is one of those who might dissent, he's at 14%. Will Trump firepower early before his term is up? 84% say no. 11% say yes. What about policy and the Fed and the criticism from the president? Well, 30% say it makes it more likely the Fed will cut. 42% say less likely, and 56% say neither. Bessent has said the president could pick a new Fed chair as soon as December, but that's just a couple months earlier than either former Fed chairs Bernanke or Yellen were nominated. Becky?
Steve, is it weird that no cut this time, but then everybody assumes there'll be a cut the next time? That seems to be saying that while everyone's waiting for an inflationary impact from the tariffs, do they not really believe? If there is one, then why would you be able to cut the next time?
And recessionary expectations are coming down.
Yeah.
So why would you be more likely to?
It's weird. It's like, oh, we're saying we think there might be inflation, but we don't really believe it. We'll cut in October.
You know, Joe, I've got 2 things to say about that. First of all is, as a reporter, I've always maintained that if you can think of the story today, you ought to do it today, because you'll be late if you do it tomorrow.
Right.
And I think you're kind of getting at that, which is if you can foresee the preconditions for cutting interest rates today, why don't you do it? And I can add a little bit to that from the survey, which is that now you have more of our respondents are convinced that the tariffs will be a one-time price hike rather than broader inflation. It's like 51% to 43%, but that just got above the 50% level. Let me throw something a little bit weird at you, maybe a little abstract, which is maybe it's the Fed's tougher actions and waiting that will keep the tariff inflation from spreading and becoming broader inflation. So the idea of let's wait and see, let's be tough here, and let's be sure that this doesn't spread is the reason why it wouldn't spread.
Wow, that's delusions of grandeur for the Fed, but we know they suffer from that anyway.
Okay. Well, I mean, if you're going to say that inflation is low now, isn't it their policies that got us there, just like they messed up back in 21, 22?
Maybe.
Meantime, thank you, Steve. We're going to continue this conversation. Anastasia Omarosa is here, Chief Investment Strategist for Partners Group of Private Wealth Business. Good morning to you.
Good morning.
We'll hear from the Fed. We'll see what happens, but where do you think this train goes?
Well, I think it looks like we're headed for the September rate cut, but I do agree with the conversation here, which is there's sort of not a good reason to wait, and there's almost not a good reason to cut in September either, given what we have today.
So there's no good reason to do either.
Well, yes, unless we finally get through the tariff impact that has been anticipated, that has been sort of feared for by the Fed. If we get successfully through that, I think the Fed will cut. I would say, Andrew, the reason for the Fed to point to a cut is that 4.5% interest rates today, about 2% in real terms, that is above restrictive. So, does the economy need ongoing restriction? Probably not. And the labor market has weakened, but is not weakened enough to, I would say, warrant those urgent cuts. So here's what I would say, though, from kind of the investor chair, especially the private market participants, is obviously a rate cut would be very much welcome, but at the same time, we have already seen rates go down about 1%, and we have seen lower use of leverage across the economy and across private markets, for example. So as a result of that, financials for many companies look better already. But if we get a rate cut in September, we'll certainly take it.
But you're betting on one.
Look, the market is betting one.
You think the market is betting on one?
The market is betting one. There's about a 65% probability that the market is assigning to a September rate cut. And
that's not a huge bet.
Well, relative to very little for July. But here's what I hope to hear from Fed Chair Powell this week, which is what and when and why will they actually cut rates? What are some of the characteristics? And I suspect he'll say something like, we want to see the impact of the tariffs, and we actually want to see what the tariff rates are, because we don't know that today.
When do you think you'd see that impact? And I'm not sure you'd even see that impact by September.
No, but you're going to see a couple of inflation reports, and I think there are two other measures, Andrew, to your point, that are important, which is market implied inflation expectations, which have been largely range bound, and I suspect they can continue to ease from here. And the other point that Joe was also making is the consumer inflation expectations, because remember, in one of the surveys, they've ratcheted it up to 6 or 7%, and they've pulling back since those levels. So if we go through a couple of more months of no materially higher realized inflation, I suspect those inflation expectations come down across the board, and that's what sort of would give the Fed the license to cut.
Okay, if that's the case, you would own everything. You'd be buying everything right now, no?
You're right. So,
And I'm not sure, and a lot of people think this is an overvalued market right now.
All right. Look, if we look at it short term, certainly there's a level of exuberance. I would argue this exuberance has been justified by the constructive news flow, but we are 30% off the lows that we've seen in April. We got high valuations in public markets, and we've also got overbought conditions. So near term, I'm not sure this is the exact buying point, but as a longer term investor, you have to step back and say, what is the earnings growth doing? What are the margins doing? And what are the valuations? And here, Andrew, I can compare and contrast the public to private markets. And especially in private markets, for example, we're seeing meaningfully lower valuations. We're seeing meaningfully higher margins, and also the ability to sort of build those margins. And we're also seeing higher earnings growth as well. So if we get the tailwind of a rate cut, that's obviously phenomenal. And I will say one more thing is if we continue to have these constructive capital markets, we're likely to see an uptick in M&A activity continue, I should say, because we've seen quite a rebound already in June.
Thank you so much.
Thanks so much.
Let's see what happens.
All right, up next, day 2 of the U.S. trade negotiations with China. Both sides, are they? Really? Maybe. Both sides looking to reach an agreement before the August 12th deadline, we assume. Commerce Secretary Howard Lutnick is going to join us next to discuss the latest. Squawk Box, coming right back. Trade talks continuing today in Stockholm as the president's tariff deadline approaches for some on August 1st, China August 12th. Commerce Secretary Howard Lutnick joins us right now. It's always good to see you, Mr. Secretary. Will you bear with me for just a second before we Before we talk China, let's talk about the EU deal. And I know you think it's just great and a big victory for the president. That's your take. I'm going to let you explain why. I'm not going to defer to the Democrats or legacy media on whether it's a good deal or not. I'm going to go right to who it really seemed to upset, and that's France and Germany. And even the European Commission president, you heard what she said. I thought it was very telling. She goes, look, I know this is awful for us. It's the best I could get. I'm trying to salvage it. So I think that indicates, and I don't want to be too jingoistic or America first, but to me that indicated that the president was able to get a pretty good deal.
Exactly right. The president knew how far he could go, and he went exactly that far. The thing about our president is he's got that intuitive nature when he's sitting across the table and making a deal. He knows how far he can push it. I mean, imagine they committed to $750 billion of energy purchases, natural gas and oil and nuclear, during his term. They committed $600 billion of companies investing in America, and then 15% tariffs. They will pay 15% pretty much across the board, and we, of course, have an open market to the $20 trillion European market. It's 5 times bigger than any other, Japan and India, 5 times bigger with 450 million people. It was a master class by President Trump.
I think that and everybody's saying it, that the decision to accept the 15% level was in sharp contrast to where they were recently, weeks ago, with a much more adversarial tone. And they came to the realization that President Trump thinks that these 15% tariffs should be permanent. And my question is, can you make a strong rationale for why that is the case? Wouldn't it, if it was 0-0 on both sides, and even got some other things extracted from the EU, do we want this 15% to onshore? Is that what it's all about, bringing stuff back here? Or is it about all the revenue that gets collected from whomever you want to say is paying it, whether it's, you say it's 4 countries or companies here or consumers or whatever? Why is that the status quo, that it's going to be permanent?
Okay, so Europe has a $235 billion a year trade surplus with us, which means at the end of every year they end up with $235 billion worth of dollars. They sell us more stuff than we sell them. And you know what they do with those dollars? They just buy America. We're basically having America sold out from under us by continuing to have these 1.2 trillion globally trade deficit, which every economist says should not be able to happen, but it's been staying with us for more than decades. So it's got to end. The president is changing it. So his view is you can onshore to get rid of it, or you can pay a tariff to get rid of it, but let's figure out how to get rid of it. And the key to why the Europeans did the deal is autos and pharmaceuticals. I mean, remember, we are the payer of the world, right? All pharmaceuticals, they all make their money by selling to America. And President Trump has been very, very clear. If you're going to sell here, you're going to produce here. And so the Europeans got in front of that freight train and said, we'll pay you 15% for that, but we don't want you to rip all of our companies out of Europe and move them to America. So while the French have got a lot to say, they were able to protect Sanofi from staying in France, because if they didn't do this deal, Sanofi would become an American company.
Secretary Letnick, I think there are still some questions and uncertainties that remain around it. I know both sides have agreed that this is a framework, not legally binding at this point, but if you listen to some of the EU leaders, they'll say that there are some uncertainties still out there. And I just wonder where you think they came down, just in terms of steel and aluminum tariffs still being there at 50%. What happens with pharmaceuticals eventually? Will they be maintained at 15%, or are there additional tariffs that come in there? Some of the certain natural resources as well. And they have said that they can't promise that these pretty hefty expectations for purchases and investment, those massive targets, whether they'll be able to hit them or not, because they're relying in large part, on private funding. there's still a lot to work out. They've said that sometimes these agreements usually will take years. Do you think that will be the case here?
Well, historically, these kind of agreements would take a decade, and they, of course, wouldn't come to fruition, right? Barack Obama spoke to them for his whole term and never got anything accomplished. President Trump works on a different time frame and on a different clock. He wants to get things done now, and he uses the power of the American economy to get things done now. So pharmaceuticals was key. It was important for them to have pharmaceuticals be part of the deal at 15%, because President Trump is going to come out in the next 2 weeks with his pharmaceutical policy, and it is going to be higher. Basically, if you are not building your plant in America where we pay for pharmaceuticals, you are going to pay a massive tariff, because why should we pay for your drugs and you make them overseas and you make your money overseas? At least if we're going to pay for your drugs, you're going to build them in America. So they got ahead of that. They got ahead of pharmaceuticals. They wanted to get ahead of cars, because 25% on autos means, as you've heard Donald Trump say it, you're going to build your cars in America. No one can afford to export and pay a 25% tariff. So the Europeans found the highest level that they could survive with, because President Trump would not have cut it otherwise. And they could get and keep their autos there. You know, they'll do many build plants here, but they don't have to move them all here. And that was the model. They can move a lot, but they don't have to move it all. So I think when we talk about it in a year, you'll see the Europeans are satisfied with it, because when they see the full Donald Trump policy, which they understood, they knew this was the important deal for them. And of course, it was sensational for Donald Trump, because it proves everything he said about tariffs is absolutely true, and you can see it right here, right now.
Mr. Secretary, do you think the negotiations are over? And the reason I say over, meaning there's big questions about other issues I think that the president would like from Europe, for example, around big tech and the regulations on them and digital taxes and all sorts of other things. And so I raise the question, is it possible that there's additional conversations about some of those issues, and that those issues get brought back into a different discussion around tariffs, so that the ceiling becomes 15%, but actually it could go lower perhaps if in fact there were other agreements that were reached? Is that even possible? Is that a chess piece?
Well, I wouldn't say lower. I mean, natural resources, the president did include, when he does a deal, he does include, if you grow something and we don't grow it, that can come in for zero. So if we do a deal with a country that grows mangoes or pineapples, then they can come in without a tariff, because coffee and cocoa would be other examples of natural resources. So an example for Europe that they brought up is cork. You know, like the cork on that we all see in our houses. Cork can come into the United States without a tariff. And do I expect to continue to be talking to the European Commission's trade people? Yeah, they called me this morning to talk about what are other things to talk about. Digital services taxes and the attack on our tech companies, that is going to be on the table. It wasn't on the table today. There are other things that they would like steel and aluminum, that were not included in this deal, that will be on the table. There's plenty of horse trading still to do, but the fundamentals of their $20 trillion economy are set. We sell into them without a tariff. They sell into us for 15%, but they protect themselves on autos, they protect themselves on pharma, they protect themselves on semiconductors, and those three protections were fundamental for the European Commission, and anybody who picks on them is going to learn over the next 2 weeks why the people who did that deal were really smart to get this deal done with Donald Trump.
You can wrap China into this, but other countries where things are, I mean, Canada. What about Canada? I don't know what they're feeling now at this point. India, is that imminent? What do you expect to happen? And what's really happening with China in your view right now? Are things going okay with some of the president's comments about fake news? Says I want a meeting with Xi. It's not true. We thought that there was eventually going to be some type of meeting between President Xi and President Trump, and that was going to be where we really got down to brass tacks.
Well, I think with respect to other countries, what's happened is many countries have made us okay offers to open their markets, 50%, 30%. And then the president said, no, I want them open. And then they get up to 75%. And the president said, I want it open. So now the price of a deal with the United States of America is black and white. Completely open markets. He wants to make sure that Americans can sell their goods overseas. He's tired of all those years where it was unfair and asymmetric against us. He wants to right the wrong of the last 80 years of trade policy, and he wants to do it now, and that's what he's doing. So, are there deals on the table for him to consider? Yes, but he knows that he can just set the rate and set the price and move on, and he said that over and over again. We put in front of him the deal, he sees the deal, and he decides, do I want to do a deal with India or I don't? And that is up to him. We've done our job. They've made offers, but these countries came to the table slowly from what President Trump was hoping for. But of course, from their perspective, no one's moved as fast as the world has moved with respect to Donald Trump. He has moved the world in a way that no one can imagine. He's done this in 6 months. This is amazing, and I am, as you can tell, I'm having the best time working with Donald Trump.
We're out of time, but so you think it's more likely that musical chairs, people are looking around thinking, no one wants to be last, do they? You think we're going to hear more?
No.
Well, China's going to be tough.
All day.
We only got 30 seconds, but China's going to be tougher.
Always.
Yeah.
China is their own thing. We have our own team working with China. They're their own thing. I'll leave the people who are working with China right now to give you a briefing on what they've accomplished and where they are. I'll leave it to them. But for the rest of the world, we're going to have things done by Friday. And Friday is not that far away, so you should expect. We said August 1st is the date that we're setting all these rates, and they are off to the races after that.
Friday's close, and then Monday's close, unfortunately, too. Secretary, we got to go. Thank you. Thank you very much. Good to see you. We'll be right back.
Beauty.com.
Make sure to join us tomorrow, and don't miss Boeing CEO Kelly Ortberg coming up next with the gang on Squawk on the Street, which begins just about
No.
87654. Anyway, go.
Don't give any time
Enjoy.
away.
We'll see you in a
Keep
moment.
talking.
We'll see you tomorrow.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl King today with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Future's pretty steady despite a patch of earnings disappointments today out of Spotify, UPS, UNH, Whirlpool, Novo. Fed meeting begins today. M&A gets more active with the rails. S&P's going for 7 consecutive record closes today. Our roadmap begins with a mega U.S. railroad deal. UNP buying rival Norfolk Southern, creating the nation's first coast-to-coast freight rail operator and potentially reshaping the transportation landscape. We have a first on CNBC with the CEOs of both companies in the 10 a.m. hour.
Plus, as Carl referenced, flood of earnings this morning, including Boeing, which is higher after its slashed losses. Boeing CEO Kelly Ortberg is going to join us just a few moments from now. We're going to talk to him, of course, about his outlook for the plane maker.
That's going to be great. That's going to be
good. I'm glad to hear you think it's going to be great. All right, United Health also, I don't know if that's great. 2025 earnings are going to be worse than expected. In fact, stock is down, but it's off its early morning lows.
Let's begin with this Union Pacific Norfolk Southern mega deal. David, I know you've been working on some of the deal valuations. Yep.
Yeah, I mean, listen, it was what, a week, not quite 2.5 weeks ago. We talked about all of the, the chatter. I talked about the possibility of a transcontinental merger. Jim was like, whoa, and here we are. They were working hard in Washington at the time. That's a lot of the chatter that I was starting to hear. Jim Venna being aggressive in terms of trying to get a sense for the willingness of regulators, namely the Surface Transportation Board, to approve a potential transcontinental deal. And said simply, I think their contention is going to be a transcontinental railroad is good for the United States of America. And that may well be a winning argument, and you now have the deal to back that up. And as for the deal itself, around $320 a share is where it comes in. Let's see how UNP stock does. You're going to have some people shorting the stock at this point. What's it composed of? 1 share of Union Pacific is what you get, and $88.82 in cash for each share of Norfolk Southern, of course, worth about $72 billion in cash and stock. You're talking, what is it, about 72% or so, somewhere in there, of the composition being in stock. And $2.5 billion termination fee, no voting trust. Remember, this is something that I've been talking about in the last couple of weeks as this deal became more and more of a potential reality. Of course, last week we had the companies confirming they were in talks. No voting trust, which means you're going to have to sit there as a shareholder and wait. How long? 18 months, 2 years, we'll see. But Jim, the key is going to be the STB. They're the ruling body here. It's not a DOJ, as we are so typically accustomed to in terms of ruling on antitrust. Here it's the STB. They have 4 members right now. It's 2 Democrats, 2 Republicans, but one of the Democrats is falling off in late December. The president appoints the members, and as so many other decisions in this world we live in now come back to President Trump, so too may this, in the sense of he has the power to appoint another Republican, and that's going to be the key. The companies obviously will be arguing for all reasons that I cited 2.5 weeks ago when I was talking about this possibility. American champion, reindustrialization, efficiencies that will come, and the namely that, hey, Canada's got a transcontinental railroad, why don't we?
Well, what's incredible, if you look at the actual rails, it makes so much sense. There's so little overlap. You want an east-west. It would be a great thing. There is tremendous congestion where the two in the Midwest and Chicago area. I don't see a lot of the overlap that would make you not like it. I think that if you were a regulator in the previous regime, you might say, you know what, these two will never compete if we let them merge, so we can't let them merge because now they won't go against each other. But the fact is, they were never going to go against each other. That's not, the rail stopped doing that years ago.
Right.
So I look at this and I say, Venom makes sense. The only issue is, okay, so doesn't Burlington North have to go by CSX? And they do.
And that becomes the key question that we've also been entertaining at this desk now for a bit of time, including even when we first started talking about it. Burlington is owned by Warren Buffett's Berkshire Hathaway. And again, you have to wonder, all right, Buffett typically has not involved himself too deeply in things in D.C.
Again, to the extent that President Trump will play a role here, which you have to imagine he will, since he does on virtually everything. I don't know that he's a friend of Buffett's, who's seen as not a supporter. That could become important. But will they make the move to try to get that deal done? Because you want to put two deals in front of the STB, potentially, would be the strategy. And they either have to say no to both or yes to both. Alternatively, you could try and fight it if you're CSX and Burlington Northern separately. Just fight it at the STB and see if you can win that to prevent it from happening. But your point's a good one, Jim, and it's the key one. And we're sitting here and waiting. We had Joe Hendricks on with us last week. They obviously did put themselves essentially, I would say, almost up for sale. They said, hey,
I would say totally.
and we know who the potential buyer is,
Right.
but the question becomes, does Buffett make that decision? Is Greg Abel, obviously, or does the lady who runs Burlington make the decision, Catherine Farmer? I don't know, but somebody's got to make a decision as to whether they want to try and make this thing happen.
This is a deal where you just would never have seen it. This is all just Trump. I think that they have a feeling that this one's going to go. That'll make no matter what, they would get it. And I would argue that if you think there's going to be big reindustrialization, Carl, you do want it. It makes sense to have this like seamless. The rails are. Look, I think we all wish that we had more rails in the country. They're much cleaner. 400 miles a diesel gallon. You could argue that other countries have them in a much more, in a superb way, and we're a little disjointed. This makes a lot of sense. The only reason it wouldn't make a lot of sense, well, also, look, you don't need as many people.
You don't, but I mean, infrastructure spend, jobs. Again, it's my contention that Jim Venna, who's been really, and he's been the engine behind this. He's already, I think, he had to check boxes in D.C. to at least get comfortable enough to take this kind of a risk.
Right,
you don't do it if they say no way, you don't do it. So
yeah, I think that this got the wink. I think it's a wink.
Yeah, look forward to talking to those gentlemen at 10 a.m. We'll talk some Baker Hughes chart as well later on.
Oh my God, that deal is so smart, particularly in light of what this is liquefied natural gas. They've always had the great equipment. They even also, I remember, used to have them a long time. They had the welders. You need a lot of welders. That's a great deal. It's Merger Tuesday.
In many ways.
Merger Tuesday.
And earnings Tuesday as well. Boeing shares are rising after the jet maker did cut its losses, posted much better than expected Q2 results. Our Phil LeBeau is at Boeing headquarters and has a very special guest this morning. Hey, Phil.
Hey, Carl. Kelly Orford, thank you for joining us today. Let's start with Q2 results. Better than expected, a much smaller than expected loss. You're improving your cash burn substantially, a lot of that because deliveries were increasing. Can you get to cash flow positive in the third quarter, or is that further out?
Well, we've always said that we want to get cash flow positive in the second half. Certainly want to finish the fourth quarter with positive cash flow, so we get into 26 with this cash burn turned around. So that's still our plan to do. We have a one-time potential big payment in the third quarter associated with the DOJ settlement, so that's yet to go. But I do feel confident in our fourth quarter turning to positive cash flow.
In the second quarter, you essentially are at a production rate for the MAX of close to 38 per month, which is the cap set by the FAA. And you've said, look, we want to get up to 42 per month. When do you ask the FAA for that approval?
So soon. We're going through the process. Once we've gotten to 38, we want to be stable. We've got a set of key performance indicators with the FAA that we're monitoring to make sure that the production line is stable. Once we do that, we'll go through a process where we sit down with the FAA, get approval, and move to the next rate. We certainly want to get that done here in the second half of the year.
Third quarter, or is it more likely you can't put a time frame on it?
We will be working with the FAA in the third quarter for sure.
Let's talk about the EU tariffs, and then I know Jim's got a quick question, but with regard to the EU tariffs, the 0 for 0 inclusion in terms of airplanes and aircraft parts not being tariffed, how critical is that for you guys and with all of your customers?
Yeah, I mean, it's super critical, and the administration is doing a really, really good job of, as they're negotiating these bilaterals, taking into account the implications on the aerospace industry. So these 0-0 deals are really important for us. And in fact, the latest deals in the last couple of weeks have given me more confidence in our ability to manage through this tariff environment.
Jim, I know you have a question.
Yeah, Kelly, a lot of countries you seem to want to curry favor by saying, you know what, we're going to put some orders in with Boeing. When I saw, first of all, I knew you had a lot of business that you take product from Japan. I was worried about tariff. Looks like that's okay. But you're telling us, basically, that these orders will be converted. You can make a lot of money. People should get in line.
Oh yeah, I mean, these orders are great improvements to our overall backlog. Now, we obviously have to increase our production rates to meet that demand, and that's what we're really focused on doing. I will say from an input tariff perspective, the deal with Japan is very important because that's one of the largest importers that we have for some of our products, particularly on the 787 program. So I like the way this tariff situation is playing out. It's good for our business. It's good for aerospace, the aerospace industry in the U.S. Going to create great jobs, and I think that's what the administration's focused on doing.
Okay, so Billy, also, Dr. Rand on the parade, but I got more.
Wow. He burned that low blow. He likes the tariffs. It's good for business.
No, I think this is going to derail us.
It's the way it is, man. These people are idiots on CNBC.
Machinists that we have working.
Good morning, retail
primarily
traders.
Our fighter and our weapons.
We need to research your
programs in
computer.
St. Louis and
Remind
St.
me
Charles.
later.
Juxtapose that to our last fall 30,000 machinists in our commercial program. So it's much smaller in scope, and this is something we'll work through. This isn't going to derail our recovery.
Kelly, you've got two MAX models, the Dash 7, which is the smallest version, and then the stretch version, the Dash 10.
Yeah, shut up.
You're not going to have those certified this year, and you've officially said in your note today, you said, look, we're pushing that certification expectation out to next year. How tricky is this problem with the
It ain't a problem,
anti-ice solution in terms of finding a solution? How tricky is that?
Well, it's proved to be a little more tricky than we thought. I would have forecasted that we'd be through that design work right now. It has proven a little more difficult. We have several solutions that we're still working to finalize, and that's why we've decided to move the certification into next year. This is the critical path for the certification of those two models. So we're working keenly on trying to get that design nailed so that we can move on with the finalization.
You know, there's going to be some investors who will watch this and they'll say, we've heard this before regarding MAX certifications. Well, we're going to push it out another quarter. We're going to push it out another year. How confident should they be that you will get this certified, these two planes certified next year?
Well, I've said these development programs are difficult. There's no silver bullet in completing the development programs. We're working real hard on doing that. I think our engineering team has several solutions that they're going to work through. It's just a matter of getting that done and then getting through the cert process. So we're still forecasting to get that done here next year.
You are coming up on the 1-year anniversary of coming into this company. And when you stepped in, you knew that you were taking over a company that had some serious issues, especially when it comes to the culture in terms of manufacturing effectiveness, safety, and efficiency. Are you confident that you have turned the corner, or is it too soon to say that?
I don't know if it's too soon to say. I would say we're turning the corner, and I see very, very positive signs. We've done a lot of work on the culture. The teams are rallying around that work. I am seeing a different Boeing showing up in the marketplace. I'm hearing that from our customers. But
Are you getting away from wokeism?
We're going to continue to focus on that, and I think
And
we're
hire
seeing
people
the
with
early
experience?
signs of that turnaround, and that hopefully that'll help us through next year. As we continue to improve the culture.
The Air India crash investigation, no indication that there's anything with the Dreamliner that was at cause here with the fuel cutoff.
Ooh, tough question.
But this has raised the question about, should all airplanes have video in addition to a cockpit voice recorder that
Yes.
could assist investigators? Would you be open to saying, sure, we'll put video cameras inside the cockpits?
You know, Phil, I don't think that's a technology problem. We could do that. I think it's much more of a privacy and airline issue. So we would do that if the regulators and the airlines felt that was something that's needed. At this point, I don't see that happening.
Brian Bedford approved as the new administrator of the FAA. I know you know him from your work with him over the years. Has he come out to Seattle yet?
Not yet. We have talked with Brian, and we're trying to get him out here in a week.
Okay, I got 15 minutes.
So we're very pleased to have Brian on board. Chris Rochelo did an excellent job in the acting role with some pretty difficult challenges to to manage through. He stays on, so we think we're going to have a real good continuity here as Brian comes on board. It's really important because we have this upcoming rate increase on the 737 MAX to get through with the FAA, and also all the certification work we're doing on the commercial derivatives.
And you've got the one of those certifications, the 777-X, 777-9. Are you optimistic that gets certified this year?
So the certification will be next year, Bill, on the 777-9. We have 4 airplanes in the flight test program right now. It's progressing. There are no new technical issues coming out of the flight test program. We got a lot of hours on that airplane, so we're pretty confident that we'll get through the certification flight test. We do have a mound of work to get through in just the overall documentation process. But no new news on that. We're still focused on...
First deliveries then next year.
Yeah, deliveries will be next year. Yeah.
Finally, I want to ask you about defense. Jim touched on it in terms of the labor issues in St. Louis. But the defense industry right now, especially when you look at what's happening around the world, it opens up some interesting opportunities for you. Where do you see the greatest opportunity right now?
Well, certainly in the U.S., the defense spending is going to be increasing, and we feel like our Boeing programs are well supported in the recent budget negotiations. So good domestic market, but I also think we're going to see increase, particularly in Europe, in defense spending, which creates some new opportunities for us to either address directly or partner with in-country suppliers to address that market opportunity.
Kelly, thank you very much for joining us. Guys, we'll send it back to you. Kelly Wartburg, CEO of Boeing, joining us here exclusively on CNBC. Guys, back to you.
Phil, thanks very much. Now on to last night's deadly shooting in a Midtown Manhattan office tower. A gunman opened fire inside 345 Park Avenue, killing 4 people, including a Blackstone executive and a New York City police officer. Authorities say the suspected gunman died of a self-inflicted gunshot wound. The building where the shooting took place houses offices for the NFL, as well as Blackstone, KPMG, and real estate firm Rudin. We'll be right back.
Woo! Keep pumping hate, CNBC. It's only going to get worse. Not by me, but by idiots. SMCI pullback. Go make my second half of tea.
on this course against a challenging environment, which includes a generational pullback in Medicare funding set in motion in 2023 and playing out through 2026. Unprecedented medical cost trends measured in both intensity of services used as well as unit prices and more aggressive care provider coding and billing technologies. The prospects for further contraction of the Medicaid and exchange markets, and finally, the continuing public controversy over long-standing practices and complexities across the entire healthcare sector.
As United Health CEO Stephen Helmsley on the call this morning, shares of UNH are down in the pre-market. The health insurer issues full-year profit guidance well below consensus. Jim, they're talking about medical costs that are higher on the order of $7 billion, and they think it's going to last well into next year.
That was just jaw-dropping. I mean, this is United Health, which I think people should understand is the gold standard. Even, by the way, Optimus was so good, not that good. David, this was a miss. The one thing that they didn't talk about, you know, who knows what's going on with the government, but I don't know how you can miss by $7 billion. That's a huge.
It's a huge number. Listen, this comes after already what has been crushing quarters previously, where we know, I mean, warnings where we know that they just mispriced on Medicare Advantage, right? Mispriced it. Many of their competitors already went through this, but seem to. And yes, we've seen an uptick in usage and increase in, I guess, an uptick in usage from the older population who were not taking care of perhaps things they should have. But yeah, they got it wrong. Helmsley's been in there for how long now? A handful of months, right?
Yeah.
Not very long.
He's cleaned up, figured out what's wrong. I mean, but geez, that previous CEO.
And they will not.
Previous CEO of Novo in terms of.
You know, people are trying them to. Listen, this was always safe, considered safe money. Half a billion market, half a trillion market cap not that long ago. You know.
They always announce a 10 of 6, and you go, oh, it's going to be a great day.
But when they were asked to affirm a long-term 13 to 16% growth rate, long-term, they declined to do so on the call.
I am just in shock. This is the inability to be able to forecast what was the most seemingly forecastable set of numbers is driving me crazy. I mean, Centene last week, that stock has just been one of the most horrible stocks.
Molina, Centene, Elevance, UNH, it's been rough. Across healthcare today as well. We got Merck down pre-market, and we haven't even touched on Novo.
Novo we should touch on because that is just shocking in terms of having one of the greatest drugs of all time and somehow just completely screwing it up. I mean, obviously Lilly is the key competitor here. They cite Lilly as one reason for their reduction in guidance in their sales outlook, but they also talk about compounded GLP-1s as well, and a slower than market expansion.
Yeah, now that is, I felt that borders on incompetence given the fact that we know all of the different uses that are coming. But this company has been challenged. They see way out of the way. I don't know.
Lilly's down as well on some of this.
Right, I mean, we sold some Lilly for the trust. I mean, Lilly's just back to where it was last week. Lilly's
right.
better.
I mean, Lilly is, and as Zephan, they have taken the market share, certainly.
There's a better product too.
Wegovy is losing. But that said, when you say that, you know, the market is not expanding as quickly as expected, I guess Lilly might get hit.
Well, who knows what they'll do? Maybe Novo goes on some sort of raging cut to
In
get
terms
that
of price?
share.
Yeah.
They can
How much of this is true? The continued, what they call unsafe and unlawful mass compounding has continued.
I think a huge amount. Yeah, I think that it was supposed to be individual, compound's supposed to be individual, and then who knows? I don't want to cast aspersions on Hims and hers. These drug companies are doing enough of that. But I do think that GLP-1, when it needs more uses, but it needs to be a pill.
Right, well, Lilly's going to be the first, it would seem, to market with a pill.
They're right.
And for now, Ozempic and Wegovy, the Novo drugs, are suffering.
But remember, Zephan
does Lilly.
Does better.
Yeah.
Now, that's going to be the lowest price on Novo since the early 22.
Just
opening bell coming up in a few moments, and don't forget you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
Goodbye, idiots.
The weaker dollar, but just with what the chat that's going.
Oh, what happened there? All of a sudden we got a pullback. Watching the video it open. Wow, that was fast. So NVIDIA had a nice little breakout with new high. Taiwan chip industry faces critical worker shortage. Yeah, because they're all migrating here to open borders. Mr. had that pullback yesterday, double bottom right now. And Starbucks earnings coming out. They were pumping Nike yesterday. I gotta go check my bacon. I think Nike's a pump. I'd like to see it drop to a double bottom.
little bit higher.
Gonna have bacon for a treat this morning. Bacon, bacon, bacon. I'm a making bacon. That's what I'm doing. Okay, get ready. Well, I don't know if I want to buy Nike or not. I really can't. Now that I'm wearing these better shoes, Nike is just like not in the now. /ES. I didn't fall for that pump. Coffee stain is up. Okay, we're pulled back to support on the SPX for yesterday's high. Today's the 29th. $64.15 strikes, or the 64.10s if we can get it cheaper. Calls. Five-day 30-minute. I liking that 30-minute time frame. Funk likes that hour. $63.98.56. It's a little bit higher, so we take it off the 9. Set that. We're at 320. Top of the orb. Three. 320. I'll be in there in a second. Nancy, get in there and shut off. Flip over the bacon, baby. Hurry up. You know I don't like it burnt. I said get in there and take care of the bacon. Don't argue with me. Oh, darn her. Bitch is the laziest chick. I'll be back. She ain't had her shot of vodka yet. 370. We're getting up to a pivot point area. 380. I'm gonna go ahead and take it. Give it to, there you go. I'm out. He. Nothing finer to be in Carolina in the morning. Nothing finer. And I'll be back in the morning. Why'd you call that a pivot point area, Jim? See that body of that first candle there on the 1 minute? You want to run a trend line across that. Okay. See how we ran it, and we hit right in it. Good job, Embardo. Do you know why we took it? I'm the GOAT, but I want to explain to you why you took it. We had the previous high right here from yesterday. We had a double top previous high. So you want to run a little price line on the 1 minute across the body of that candle. So you're pulling back to the previous high of the previous day. I'm not saying it's always going to work. And you see where we pulled back right to that previous high. Now we'll probably end up coming to the next resistance up here maybe, but we got to break this. This is a pivot point area established on that first 1 minute candle. And it could come back down, bounce off the 9. Nobody'll show you what's in my brain. I'm making bacon. Okay, we pulled back to the 9 like Jimmy said. I'm not in no big hurry today. That's what I'm having right now, a little snack, a little protein. Okay, we're at a double bottom. Oh, there we go. Let's see if we want to stay bullish here. The $3, $2.90 right now. We're going to see if we're going to hold this support. I'm going to grab you some. 270. 270. Now we're at the orb. 2.70 with a tight stop. This could be risky. Zippity-dee-dah, zippity-day. Oh, baby, let's go play. Oh, it's very healthy. Very healthy. I have low calcium score. 0 fat in my heart. $2.95, $3. Got 5 of these. Go get the rest of my bacon and I'll be right back. We're at 285. We break to 9. We break the triple top. this don't work, I'm gonna get out of it. I ain't gonna hold it. Be careful. Got 1, 2, 3 set up. I had 5 more at 240. About ready to get stopped out. Boeing's dropping. That's unexpected. Let me look at Boeing calls here. The Germans are wanting to get in a fight with us. Three black crows off the 63. We got three black crows off the 63 right now. That's a huge drop. Three black crows on the 1 hour. I almost was going to grab some at 2. $1.95 to $2. And I was trading the 64.10s yesterday. Let's go. Need a brick out. We got a head and shoulders on a fallen wedge forming. SPY almost hit the bottom of my support channel. $637.10. This is my support channel right in here on the 5-minute. I'm gonna raise my alert up to the top of that there hump for the low strong buy, which would be off this here triangle down here, off this trend line. Also, just now witnessed. AMD new highs. Apple new low. Watch Apple here. Apple's got a hammer. Apple's the weakest one of the bunch in my opinion. August 1st. The 220 strike at 145. I'm watching Apple real close right here. $195. Let's go, baby. Right when I got in. That's a trip. the right shoulder. I mean, that is really a trip. I'm going to get out. I can't believe that. That was pure luck. I mean, right when I bought it. I got lucky when I fell in love with you. All this running round. This might get found. Squeeze it, baby. I didn't get to sell it. I want $270. I would have took that if it would have gave it to me. So now we're back above the falling wedge with an inverse head and shoulders. We could easily come back down one more time and bounce off the 63 and hold that as support, that area right in there, or even the 50. Stop short and hold the 50 SMA and create another head and shoulders right here. That if it breaks out, we have to break this resistance right here. Oh, it already did it. Now what the heck? Toss is working very slow today. These ain't holding up too well. Up, down, turn around, pick a bale of cotton. Up, down, turn around, pick a bale a day. Apple's coming down to a double bottom. AMD new highs. It's weird how the tide changed on AMD. We got IWM. We got a 1, 2, 3 on the QQQ. SPY's got to break to 63 on the 1 minute. And we got to break 6401.31 on the SPX. Off 3 black crows. Off the 63. God, what happened here? Jimmy said we could come back and hit the 50 or the 63. And it's very important we hold that. Okay, you're not being nice. We're still bullish as long as we stay above the wedge. Meta's at 713. Coin. Let me get the earnings watch list up. QCOM up another 178. Microsoft's 2 up. I'm up on Apple. Carvana's down. Reddit's down $5. Ooh. This is a meme stock. Man, I tell you what, keep an eye on Reddit. Raymond James maintains strong buy, raises price target to 175. That was yesterday. Markets mixed after latest earnings. I don't know why. They've been good. Reddit could beat revenue. Where Apple's, I'm up at $20 a contract on Apple. 23. IWM has to break the 200. I'd expect a pullback on AMD. We got a fallen wedge on Meta. I don't understand why Boeing's not working. We're definitely getting to my support. $166 on Apple. I'm gonna take profit here, I think, real soon. And then wait for SPX. We got a symmetrical flag on /ES, getting ready to squeeze. We're still bullish on SPX. Kinda. As long as we stay above that wedge. Symmetrical flag on the SPY. We got a 1, 2, 3 coming up to the VWAP. There you are, 1, 2, 3. Let's break it. So they're mixed on earnings. That's what one analyst said. I don't know why, but I think it's just the fake news. Triple top on TSM. Where's my tea at? GoPro 131. This market's not underperforming. I don't know where they get this shit at. The headlines are a little bit misleading. Open down to 213. Oh, close still, I think it's a little bit too high. Damn it! 168 on Apple. Boeing, I'm watching Boeing real close here. I got out of Apple. That kind of sucks. So Boeing, August 15th, the 240 strike. $226 would be a better deal. But I kind of like it here. I'm still in the SPX. I'm not giving up on them yet. It's hard for me to sell anything anymore. I used to be able to do it right off the fly. We've got a Darvis box. Boeing bounced up. It's nice to have a working thermostat. They came in and put a new thermostat in yesterday. I like it. It has a light on it. The other one didn't. Apple's squeezing again. So they're skeptical about the earnings. Earnings slate in focus as U.S. equity futures gain pre-bell. And 36 minutes earlier, don't bet on the markets. Chartmaster says don't bet on the markets. Let's see what this guy's got to say. I can't believe they're bringing Chartmasters out. I'm still in the SPX. I'm not giving up yet.
Charts, Carter.
Here we go. Let's get to it. First one is the S&P, where it is in relation to its pre-tariff sell-off. So the S&P is about 4% above its high of February before its 21% plunge. So let's take this.
You got a problem with that?
And move through various indices. The next indice is the most venerable and oldest of all. The Dow is right back to that high. Now look at the next one, the most popular of all. This is the Mag 7. It is right back to that high, but again, has not exceeded. So this is a big week, not so much for earnings or FOMC or GDP or payrolls. It's do these or don't these break out. Next index, look at the S&P 400 mid-cap. Now, of course, it's about 5% below, and is that's the one that's really lagged, and yet it is one of the best long-term performers since
Boeing bounced to $3.
And then finally, look at the S&P 500 equal weight. So you have the equal weight S&P is identical to the Dow, identical to the Mag 7, all having recouped their losses and are sitting here, right here today, at those former highs. Do they all finally exceed the high, make new highs, or as the S&P has done, or are we in some other circumstance? My hunch is that if it doesn't happen this week, it's a big telling thing. But I want to speak specifically about the S&P 400.
Because earnings?
Take a look at this comparative chart. Now, you can only compare something as long as it's been in existence, so this is not an arbitrary start point. It was launched on June 19th, 1991. And you see that the S&P midcap has blown away the S&P in orange, and it's also notable that the S&P 500 equal weight, which is the one that's always cited as a problem, right, for breadth, has also blown away the S&P. And in many ways, maybe this recent strength in the S&P itself is just itself trying to catch up with the other two. Meanwhile, it is perhaps the most important week, not because of the earnings, the GDP,
I'm watching this real close right now.
Any of the things
really go in big.
It's because these critical indices will either need to break out here and now, and it's those fundamental macro things that will cause it, or earnings, or put in a double top. My own hunch is that one wants to reduce exposure, anticipating what would be a normal dip, drawdown, sell-off, decline, drop, something that has a counter-trend nature to it.
Carter, it's Karen. So what would indicate that it has broken through? How long, how high above that line does it need to get to confirm that? It's not just a one-day thing, right? What do you need to have?
That's right. I mean, that's right. You know, you beat a record. So if all of those were to make a slight new high and then fall 20%, you'd say, see, it made a new high. Not you personally, you generic one would say, but that's not what it is. You need to clear a former high by a certain amount. Now, typically that's 3.5 to 4%, which is about where the S&P is now. And so you need to stick your landing. That's really, if you think about the gymnast that does the fantastic move, and then you either nail it or you wobble. And so nailing it,
we're going to nail it.
Getting above a former high and staying above it versus faltering and putting in either a double top or what is known as a bull trap.
Bull trap. Huh. You think so, huh? Well, they're definitely bearish. Is anybody in this XPX with me? I just added more at 130. They seem very, very bearish. Reddit got a triple bottom getting set up. So we come back and hit the 63 3 different times. Got a hold here. I don't want to take a loss, but might have to. Sophie has a real nice run. Be careful. I wouldn't go in big. They just seem very bearish.
I know somebody who had homes, one in Long Island, one in Florida.
Double bottom. Come on, baby. UNH dropped down to my support channel, kind of out of it, so it has to break at 270.35. Come on, SPX, we need a nice little reversal. AMC went below my support. It's now at 303. AMD holding new highs. We're at the volume profile area on the /ES on the 1 minute. Somebody in this room was really strong on Sophie. I think it was in this room. Oh boy. Ford under 10, no. GM's is too high. God, Goldman Sachs, it's just crazy. That thing's up 300 and some percent since I really started getting into it. JP Morgan Chase nears a deal to take over Apple's credit card program. Ah, darn it. I'm gonna go turn my air conditioner up a notch. It's a little cool. I'm still holding on to these. I don't know. UNH bouncing up a little bit, back in my support channel. AMD new high. Mm-mm. Nike reversed. Jimmy called it, but I didn't take it. Yeah, this is not working out very well. We got to have a reversal soon. We're still at that support level. It's hopium. I had to look that word up. On the 1 hour, we're at the 63. We got a higher low off the snake here, off of the 1 minute. I'm still holding on. Tesla. Tesla reversed. Well, this might be my losing trade of the week if we don't pop up here soon. I've been averaging about one to two. Oh, there it goes. Shit. Texas service sector outlook. Dallas Fed service revenue. I don't know what to do here. Kind of like a deer in headlights. We're at the 200 EMA. That's where I like to take them. But then we could easily drop down to this one too, if that doesn't hold. I don't know. Tesla reversed. SPY hit my 637.10, which was the bottom of my support channel. Well, again, I got stuck on the wrong side. Market's still dropping more. We just now hit my support on /ES at 64.2065, my first one. And that is a head and shoulders on the 5-minute. We got more room to drop on the 30-minute. Another $6. Well, it's unbelievable. Well, well, well. I feel like that you just keep dropping the way it's going. Baidu looks cheap. We got a double bottom with a new low on Baidu. WeRide and Uber expand robotaxi. Uber. Uber's had a big sell-off here. They raised the price target on Uber to 115 from 107, maintains a buy. UBS. Stifel maintains a buy to 117, citing Dubai deal. Self-driving cars could be 200 billion market in 2030, says Morgan Stanley. QCOM. Another breakout on QCOM again today. Well, Funky nailed that one. Tesla rebounded to the 200 EMA. No, I didn't see it. It's not looking good here. Wish I have shorted it. Tim to go grab some lunch. Fat cats are really wanting to bring this market down. My initial feeling about it.
buyer beware, right?
Okay. Jeffrey, let me ask you this. You said this is the most hated recovery. Why do you think that is?
Well, because Liberation Day was supposed to be the recession, so we've been living since 2022 with the recession that never was. The Fed called it in 22, there's going to be one. They said there's going to be this one. The Fed's hypersensitive on inflation. Everybody's waiting for a pullback. And so there's lots of people have missed this rally. And it's a shame that's happened because we are living right now in the fourth industrial revolution. We're not.
A lot of people have missed this rally since 2022. They've been sitting on the table.
And profitability of some of these largest tech companies, and we are now just starting to see that.
Okay, all right. Jeffrey, let me ask.
I didn't miss it, but I'm missing it today.
Let's talk a little bit about big tech because we have several members of the Mag 7 coming this week. We already had
Most hated rally ever.
What's your outlook when you think about positioning within big tech now?
Well, I think that big tech is a great thing to own still. There's lots of room to run. And I think we've got a sleeper. You mentioned it, Diane. We've got a sleeper and a potential great stock to own in Google because it's trading at 20 times earnings, where the rest of tech is really trading at 29 times earnings. And I think Google is going to be the sleeper pick here the next 12 to 24 months.
Okay, so the next 12 to 24 months for Alphabet Google. You also like Meta. Now, that has been an outperformer in the group. Why do you still like it, and how much more room to run does it have?
Well, I think you could see a 12-month price target of 15 to 20% above here. But, Meta has blown the door on earnings for, 15, 16 straight quarters here. And I expect them to do the same. They're projected at $5.84 a share. We see them getting close to $5.99 or maybe $6. Their ad revenue is increasing due to the AI placements they've made, and they're starting to experience monetization in that sense. And so, granted, they are 75% of the ad space domestically here, between here and Canada, and so that trend will continue. But you definitely want to own Meta. Their fundamentals are phenomenal. When I was on the beginning of April with you, I said, Diane, some of these stocks like Meta, Nvidia, Tesla are never going to be this cheap again. We may never see them dip below here. And that's where we're going, and that's where we are presently.
Let me ask you this then about Tesla, because that is such a lightning rod topic when you bring it up. You have serious critics and serious believers. You have it as a pick. Is it about where it sits right now, and you see further value from here?
Well, I do see further value from here, and so regardless of metrics, right, regardless of multiples, as the robotaxi expands and as the robot comes online and that gains more traction and the taxi gets into more cities, we're going to see the price rise commensurately with the expansion of robotaxis. So to me, it's a no-brainer. Is it a trade right now? Yeah, it seems to be stuck in a trading range. But look, this is a buy and hold. This is not something that you're going to see go up, 300% in the next 12 months.
So is this over the next 12 months, since it's in this, it's been in this range recently, do you see this like you see Meta? Obviously, it's a different story around it, where you see 15 to 20% over the next year, or is this really a long-term, you got to have a 3 to 5 year time horizon on this one?
I
don't think we become bullish until after we break the 50.
It's kind of a goofy thing to say. It's more
This here channel up here.
Expansion of the robotaxi. So if we're sitting here, in 20 cities by the end of next year, or 25 cities by the end of next year, you're going to very easily see the stock price at 500, regardless of the fundamentals. But Diane, don't discount the fact that Tesla sales will begin to pick up next year on the automotive side, because really this isn't an automotive company, this is a tech company.
Okay.
Well, he's got that right.
Fair. I know that some argue that, and I do think that's the future. But there's something to be said for valuing it where it is right now, and where at least the next 12 months looks. I don't want to spend too much time on Tesla because I want to get a final thought from you on tariffs. They are starting to bite within some companies. For instance, UPS flagged tariffs, right, because of the de minimis. How do you think about them as it relates to
UPS is worthless.
Jeffrey?
Really from an infrastructure standpoint, as they build out the data centers and they're spending hundreds of billions of dollars on this expansion.
UPS holds off on guidance.
There will be a little bit of a penalty there from the tariffs because a lot of
that's a problem.
Offshore, and so I don't see it affecting the actual business models of Google or Meta. Of course, Tesla had a $300 billion expense, this year for tariffs. That's going to continue, and the tariffs are here to stay. They're going to become part of our life. As far as what gets passed down to the consumer, maybe 1/3.
Ooh, look at that sell-off.
Maybe 50% of that tariff gets passed down to the consumer. So what does that mean? 3-4 turns or clicks on a 1/10% on inflation. Not very much, just a bump. But it's not going to cause us to go into recession.
Okay, all right. We will leave our conversation there for today. That's Jeffrey Small, managing partner of the Retirement Income Source and president of Arbor Financial. Thank you, Jeffrey. We've got a lot more to come here on Trading 360. Next up, it's the big three stocks, 3 charts, 3 trades. Rick Ducat goes through the technicals, and Jessica Inskip takes us through the trades on her list today. Qualcomm, American Eagle, and Alphabet Google. That's next on Trading 360.
I can't wait for my vacation. I'm really going to enjoy it. Good job, Martin Brax, on Sophie. Okay, we're getting down to my price level here. Let me see where the SPY is. I'm about ready to go ahead and just go for gold. We're definitely in my low support channel on the SPY. I'm gonna go for it. Let me look at the SPY calls. July 30th.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
125, the 638s.
Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades is Jessica Inskip, Director of Investor Research at StockBrokers.com. It is great to see both of you. Jessica, I love when we have the chance to sit down with you. Before we jump into the tickers on your list today, let's get your big picture take on this market action. It feels like the bulls still, are kind of grinding higher. What's your take?
Yeah, now I want to get to the technicals because we've got a really big
Jessica,
week in
this girl's
terms
hot.
of data from fiscal policy, monetary policy, and of course earnings. So it's interesting to see how that all transforms. What I'm noticing is we've hit my resistance on the S&P 500 equal weight. We're making new highs on the S&P 500, but as soon as we were reaching those new highs on the equal weight, we immediately stopped, which means we need a catalyst in order to push that forward. Otherwise, the only path forward for the S&P 500 seems rather narrow in my view, which would be that efficiency and AI boom that we've been talking about. I do think there's some fiscal tailwinds that were once headwinds, but now I need the other piece of that puzzle, which of course is what's happening with monetary policy, what's happening within the consumer, and then earnings, because the market does move on earnings and everything is just an input into that equation to understand if we're having margin expansion or growing earnings, if you will.
Okay, all right.
Well, I think I got the poll wrong.
In terms of the looking for a major catalyst here. Let's talk about the first ticker on your list. That's QCOM, Qualcomm. It's been a slight underperformer compared to the S&P 500 year to date. What's your view on this one?
Yeah, speaking of upcoming earnings as well, Qualcomm, so they're really reliant on the iPhone, and I think that's something very important to be cognizant of. This actually showed up on my radar due to my weekly technical scan, where I look for the crossover of the 13 and 26 weekly moving average. On that scan, very interestingly enough, there was also a lot of oil and energy with ETFs and income opportunities, which is a side note there. Nonetheless, for Qualcomm, it is in a bullish trend. I do like that. There is definitely strength, and I think the 40-week weekly moving average is the solid support that I'm looking for. Now, when I'm thinking of the headwinds and I think of Qualcomm, I immediately think of Apple. The Apple is moving a lot of their modern production in-house, and there's some diversification. We're waiting on something AI from them, but it seems like this expansion or iPhone revenue or even those phones are kind of coming to a halt. But Qualcomm is diversifying. They're diversifying beyond smartphones. In fact, they have it by 2030. They're expected to add 40% of their chip revenue will come from AI PCs, data centers, automotive, and the Internet of Things, and that's up from 27% previously. We see an increase of AI PCs, so this arms race, I think, is going to power those thinner laptops with longer battery life. We always want something smaller to work faster, and that's what consumers really like to see. In addition to that, there's a data center push with the AlphaWave acquisition that gives Qualcomm a foothold in the AI data center connectivity. It's a crucial piece of the AI boom as companies build out more infrastructure. And then from a valuation perspective, it's around 13.76 next year's earnings, which is well below its usual range from 15 to 18 times. So I really think it looks undervalued from a longer term view. There's some headwinds absolutely with the iPhones, but some tailwinds with the broader AI narrative.
All right. Well, that begs the question, what does this chart look like from your perspective, Rick? What trends do you notice?
This is one of those charts where it kind of depends on your perspective. If you had a very short-term view, you could say, well, this looks kind of range-bound based on this price activity here. We've got some standout levels. 151
I'm in
to the
SPY.
downside, our green line, 164 to the upside, our red line. That's where prices kind of bounced around here. And if you were to backtrack even too, you can see that, for example, 151, a very frequent low point for price going all the way back over there as well. Then 164 level similarly was a stopping point many times for price historically. So that's one short-term view. If you were to think a little bit longer term, you could see that since things calmed down a little bit from the April tariff news shock event here, mostly price has been traveling within the boundaries of this upward channel that you could draw our two white dashed lines here. And from there, you can see that price has crossed above our moving averages. Our faster yellow 21-day exponential moving average is crossing above its slower peers. Price is hanging on, still within the boundaries of this channel though, now still halting near that resistance level. If you were to think even longer term, look back over here, this trend line that would start where we had this high point that was near those 52-week highs, connecting as best as you can through some of this price activity. We're breaking out through that pretty strongly so far here. So as I said, kind of it depends on your time frame that you're thinking
Not
about
a good
here.
day.
But either way,
Get stuck in the
164
stock.
is a standout level to the upside in this case here. If we were to look at our volume profile and standard deviation channel studies, we can see that in addition to the other technical factors I mentioned here around this 160, 155
I'm about to give
area,
up.
we've also got our point of control.
Take the rest
for
of the day
our volume
off.
Profile, the heaviest trading area. We've got our
Novo Nordisk cuts guidance.
etc. So this is a key downside area for support.
Sophie rises on strong earnings.
Near about 170. A quick visual to a weekly chart with those moving averages Jessica discussed, 13 and 26. You can see the crossover happening here, price holding on above these
I'm
areas
staying in
here.
these.
The next volume node that stands out on our longer term chart is that 170 area.
All right, Jessica, let's move on to the next ticker on your list. That's AEO, American Eagle. I mean, that soared recently. It's been buzzed about. It's part of the, renewed meme stock mania, YOLO trade. It's got that Sydney Sweeney denim campaign. So what's your view on this one?
Yeah, lots of buzz around it. tossed to even bringing it up today, but I think it was absolutely worth it because it's a case of hype over substance. The fundamentals don't support the price action in margin risk.
Hello.
Plus this negative sentiment and this tone that's going around social media really
UPS
makes
couldn't
American
give a
Eagle
guidance.
a strong short-term sell in my view. Now, there is some interesting takeaways from this. Anytime we see this meme craze, we could view it as a risk on sentiment, like we did earlier on in 2020, or it could be the last leg of consumer constraints where those gambling suddenly increases. So it really depends on your view on which way this could give us an idea, at least into the retail trader and sentiment. So something I want to dive deeper into. But as far as buying into that hype, there are real headwinds that weren't there for necessarily other meme stocks. This has a lot of tariff trouble. American Eagle relies heavily on Asian imports, which are facing really high tariffs. There's negotiation deals, but that could have already happened. As a result of that, guidance was pulled in May, where the company would throw full year guidance, and there was margin pressure, and that absolutely had to do with uncertainty, which leads to profit pressure because of those tariffs potentially continuing to squeeze those margins. We see that as the earnings trend is not because well either. There's limited pricing power, and there's this negative public sentiment as well around social media. That's something I want to pull when we're looking at these meme stock buzz. Aside from the trading activity, which is, oh, get on this, if we look at the consumer side, it's, oh, this is controversy, and there's not necessarily agreement with what happened with the Sydney Sweeney ad. So is it overhyped?
Just now.
And is that hype going to translate into actual earnings translation? I'm not sure
It
of
might
that,
be a red day for
because
me.
largely the consumer is saying, I don't want to support this
It might
company
be end
because
up being a red day for me if I don't get out of
that's the
this.
sentiment on social media, at least.
Okay, all right. Rick, what do you notice about this chart for American Eagle?
Yeah, it's funny because sometimes, the price activity
Yeah.
doesn't follow
Okay.
logic or reality. It can be momentum based, which can be a pretty tricky
Bye.
situation to try to make sense of and to trade here. And if we were to kind of think about some important levels that might stand out both to the upside and the downside, we can see here 13. That's a ceiling that really seems noteworthy to me because it's about where price has topped out several times here. That's one area to watch. We can also see 1150, our green line here. That's kind of where things bottomed out and then topped out and then bottomed out once again. That's about where we're hanging on to this breakout.
Okay, we're coming up to yesterday's low.
Seems to be one of these kind of sticky price levels that we can see here. Additionally, 1050, our light green line, more lows here and then highs. Old support becoming new resistance once again here, lining up fairly closely with two of our moving averages as well. You can see we also formed a fairly consistent floor here near about 950 or so. So some big standout levels here. We can also see that RSI, our momentum indicator, has pushed into that overbought area, that threshold of 70, typically regarded as a sign of strength in a trending market. You can see we had very heavy volume here during some of this run up as well. So be on the lookout for bearish divergence on the RSI, for RSI to cross back below that 70 mark, and for the price activity to be in a mismatch between momentum and the higher closes of price here. If we were to look ahead a little bit at our other studies, well, most of the trading is down here at these low levels. And it's kind of there's some key distinctions here. 1050 or so, that's our point of control, roughly around there. Then 11, then 12. So it's kind of this big clump of volume with a few standout areas to make sense of here. But things don't really pick up again to the upside until this tiny little bump here near our 250 two-day EMA around 1420 or so. So that could be one upside area to consider here. And again, these kind of momentum meme stuff.
AEO. What are you talking about AEO for? $10 for that one. A little above 10. I'm gonna go get me a hamburger. I've just not got it today. I'm not gonna keep throwing away money in the dirty bathwater. Under 10, actually, maybe. Around $10. 10:37. We're almost up my alert on American Eagle Outfitters. God damn, she's hot.
Over by ChatGPT, and really I feel like
I could
the
trade
winner
with
in
her
this
all day
space
long.
is those that can
She's got
make
freckles.
ad revenue based off
She
of what
wins.
seems like these free features, something we talked about actually last week. And so seeing an increase in search and some revenue beats is
And I like her
very
voice,
good
too.
in my view. Now,
Coin's
the
down
ad spending,
$12
I think,
bucks.
is also very interesting. There was a raise to 85
I got
billion, and that's up from about 75 billion.
$44.93 for
focused on
support.
servers, custom chips like the TPUs and GPUs, data centers, more AI cloud growth.
I think
And
today
a
I'm
lot
going
of
to use
that
for
revenue
homework instead
driver
of.
one is that ad revenue, but if you look at the or the spending that's going into AI,
God.
it has to do with those provisions found in the BBB bill. And I think that gives you a bonus stock today. If there is some provisions that allow for
It's probably off that
offsets or
megaphone.
accelerated depreciation that Google or Alphabet is taking advantage of, that benefits NVIDIA. That's your bonus stock of the day. So as we get earnings for Meta and Microsoft, I'm going to look for that same type of theme, and then of course that will give us an idea of what's happening within the AI race. But more importantly, the takeaway from this
Didn't
is
hold it.
there is
Didn't
more
hold yesterday's low.
real revenue with AI investments.
And we're
Right,
back
not
to the
just
bottom of
to
that
call it Google,
wedge.
Jessica, because the ticker is that, so that's why I always say Alphabet Google. All right, Rick, take us through the technicals, right? All right, Rick, you're up.
Google, I'll just say it. I like saying Google better too. Google is here in an important area here, this gap level here. We had our low point near 202, 203, and then our high point after the gap down about 192, 193 between those areas here. So our red and pink lines, this is an important area for this particular stock here. And after a rather lengthy rally here, we had more of a wide ranging channel. Pretty consistent though, moving across those low closes for the most part here. We're near the upper boundary of this channel. We're above our moving averages. We're in.
I still have
this
Google
resistance
shares.
area now, and earnings perhaps did not give as much of a pop and an upside catalyst as some of the bulls may have hoped here. So this area 192, 193 is a key place to hold here. That would be an important.
Now watch
foothold
AMD.
for the bulls to hang on to if they wanted to take a run at filling that gap here, which has not been filled yet. We had a pretty V-shaped recovery, but now we are encountering this old high point here once again. RSI, for the most part, holding up pretty well. We are seeing that we are in the overbought area once again here. We are seeing maybe perhaps a small amount of divergence here. You want to see the RSI making corresponding highs along with price here. So once again, look for a breakdown in that indicator along with price drifting below some important technical levels here. When we look at volume profile and standard deviation channels, we can see here this level, our point, our red line here matching up with that post gap down high. That is a standout volume area. So around 192 would be another extra emphasis on this area. If we were to look up ahead though to filling the gap, our +2 standard deviation channel, 2 standard deviations up from our linear regression line, our line of best fit, matches up really closely with that gap level. So that could be an important area to watch if we do get some kind of upside breakout here. Finally, another smaller node here comes in around 185, another downside level that sticks out.
All right, thank you, Rick and Jessica. Thank you both for a look across the big three today. 3 stocks, 3 charts, 3 tickers today. Thank you, guys. All right. And then welcome back to Trading 360, or you're still here with us on Trading 360. Time now to spotlight this week's Fed meeting. It is underway, beginning today, ending tomorrow. Joining us for perspective on what to expect, we've got Terry Wiseman, Global FX Rate Strategies at Macquarie. Terry, thank you so much for joining us today. Let's talk a little bit about expectations. We appreciate it so much. So I just looked at the CME Fed Watch tool. The expectation, as I expected, is still that consensus is we're not going to get a cut for this meeting, although the pressure has been on. What do you think we are going to see as the outcome in terms of signaling?
Well, I think the most significant thing that we might see are dissents from prospectively two governors on the board of the Federal Reserve. That would be Michelle Bowman potentially and Chris Waller potentially. I'm not saying we're going to get two dissents. We may get one, but we may get a dissent, one or two. Or
One hell of a
That's
sell-off.
the most significant thing. I think what we're going to see, if we were in that meeting room today, you would see a robust debate about the outlook for the U.S. economy. The doves are not in the majority. I think the people who are cautious, or you could label them hawkish, if you will, in this context, are in the majority. But there will still be a robust debate. I think the doves are going to argue rightfully that there are pockets of weakness in the U.S. economy, with the consumer, with housing, with hiring in the private sector. I think those are things that they can easily point to if they wanted to make a case for cutting. The majority is not going to listen, of course. They're going to do what they want to do, and they're going to keep rates on hold. But I think this robust debate could be setting the stage for a cut later this year. Of course, the market is starting to place a bet on September for that first cut. I can't easily disagree with that. Right? It is a meeting in which there will be a new summary of economic projections. There'll be new dots. It seems like either September or December would be the right time for the Fed to start cutting.
Jerry, let me ask you this in terms of posture, right? What are you expecting? I think investors, economists, et cetera, are going to be paying attention to Fed Chair Jerome Powell's tone in the press conference. Recently, it was obviously a completely different subject when the president was over at the Fed, and they got kind of testy with each other over the cost of that construction, right? What are you expecting in terms of tone?
I think the tone from Jay Powell is going to be one whereby he emphasizes that political considerations are not figuring at all into his decision making, and hopefully not into the decision making of other FOMC members. I think Jay Powell knows that he's on the way out next spring. I think that he wants his legacy to be one whereby he held true to the operating principles of the Federal Reserve and the integrity of its dual mandate, that is trying to ensure that you keep politics out of the way when you move policy towards attainment of the price stability goal and the maximum employment goal. I think that's what he's going to emphasize. There really isn't a way, or I think a willingness on his part, to allow into the decision-making process the influence of politics. Now, having said that, like I said earlier, what he can admit is the prospect that we will see some cuts later this year. He would do that potentially by hinting at those weak spots in the economy that other FOMC members are pointing to. He'll say that the time is not ripe yet. He'll say that there may be still some uncertainty as it pertains to the trade outlook and the inflation expectations outlook, but he could say something to the effect whereby if things progress the way that he expects them to, a rate cut could take place later this year. I think that's how he would convey that without needing to invoke the political pressure, the legal pressure on him right now.
That does sound like the way you're expressing it sounds like the cadence of how he speaks. So you're not alone, obviously, in that view of a September cut, right? The odds are increasing right now. The odds are at more than 60% right now. What do you think pushes the Fed to cut then sooner, essentially, rather than later, rather than kicking the can down to December? Is it about, consumer spending? Is it about what the job market looks like?
Right, and I want to emphasize, I'm not certain that they will do a September cut. It could still be a December cut, but I think the criteria are generally the same as we approach the prospect of that cut. There could be a mild increase in the unemployment rate towards 4.3 or 4.4% on the back of poorer hiring. We know that CEO surveys, for example, are downbeat on the outlook for hiring, so that could do it. Or we could conceivably see lower wage inflation pressure. Instead of that year-over-year number of 2.9, any decline to 2.8 or 2.7 on an annualized basis could do the trick and suppress concerns about inflation. It could be, and this is very important, just more certainty.
Okay, I'm back.
Trade.
Got some hamburgers cooking.
That Jay Powell's best excuse, and most often used excuse, for not cutting yet, despite the signs of weakness in the economy, has been the uncertainty over tariffs, and whether that uncertainty will manifest itself in ultimately higher inflation expectations. I think that now we have a few of these so-called trade deals happening, and getting locked in, that would be one less excuse for him to use. So that certainly progress on trade, at least in respect of getting these deals done, is another potential trigger for that rate cut.
Is that what, underscores your view, and I love the way you put this in your note, that the U.S. and its allies, especially as it relates to they're in marriage counseling rather than divorce?
Well, yes. I use that expression because if you recall, if you go back to February with the infamous speech by J.D. Vance to our European allies, it seemed to suggest that the U.S. was intending to sue the EU for divorce. What he was saying effectively is that the strategic alliance and strategic cooperation would no longer be taking place. I think that was, if you looked at the world that way back in February, you were probably exaggerating and overly pessimistic. I think what we have seen in the last few weeks is at least a willingness on the part of the U.S. administration to re-engage. That's evident from all of the trade deals we're doing, but it's also evident from the nuances in those trade deals. The fact that the Europeans are committing to buying more U.S. energy, the fact that the Japanese are willing to invest more in the U.S., as are the Europeans, in effect, seems to be a strengthening of the strategic alliance, not a weakening of it. And it's one reason, of course, why the markets have been getting, I should say, a little less concerned about that divorce scenario, and understand that this is still a situation where both sides are talking and trying to talk through their feelings.
All right, Terry, thank you so much. That's Terry Wiseman, Global FX Rate Strategist at Macquarie Group. Thank you. Coming up next, the disruptors will cover SoFi. That stock rallying to 4-year highs today off the back of its quarterly report card. That's next on Trade 360.
Boo-boo. I'm gonna have a red day unless we start to rebound. I will wait for power hour. Do-do. Do.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Trading 360. I'm Diane King Hall, live from the New York Stock Exchange. We're looking at stocks on the move. I want to bring in Schwab Network contributor Sam Vadas. We're taking a look at Novo Nordisk. That stock sinking today. When I first glanced at it, as I mentioned to you before, I was like, is this a full year move? Wow.
You have to do a bit of a double take there. As you can see, it is down about 21% in trade this morning, and this coming off the back of guidance. It seems to have disappointed the street this morning, so it's now talking about a
So where in the hell did this come from?
sales outlook of between 18 and 14%, which is well below the 13 to 21% that it had previously been talking about. So quite a significant drawdown here, and this is to do with some of its thoughts around the
that bottom support line.
expectations on Ozempic and Wegovy weight loss drugs, lower penetration in international markets, no doubt rising competition from
No, it ain't either.
traditional pharma companies, but
It's a
also
pivot
some of the
point. That's what it
copycats,
is.
the knockoffs that has challenged this business. They have talked about competitors
Triple
selling
bottom.
alternatives or copies of their drugs, so they're obviously not happy about that. No doubt.
SPY has a triple bottom here on the
Talk about
15-minute,
this stock because
5-day.
it has been on a downward trajectory, which is certainly interesting, Diane, because we have been so used to the growth trajectory story of a company like this. So it looks like the knockoffs have knocked it off its perch somewhat, down 40%.
I'm cooking lunch right now.
It's interesting because
I'm just miserable.
tracking the competition from the folks over at Eli Lilly.
That should be more positive.
Look at that stock today. It is also
I've been
down
working my butt off over here
40%,
trying to find supports.
It is certainly down. The big question, though,
We got
as I've been sort of
TSM, new low.
commentary in the media reporting around this today,
NVIDIA,
is
new low.
today an overreaction or a bit of a red flag here off the back of this outlook. Now, there has been some suggestion and a view out there that perhaps the stock and the reaction here is an overreaction, and that is because there is demand for the GLP-1s, and there is hope that there will be regulation around some of the knockoffs that will inevitably help this company.
On the hour time frame, I mean, this SPY can get, SPX can drop another
I should say, also
120 points.
Made a sort of simultaneous announcement on a new CEO bringing in the head of international. So this is someone who is internal, but they do have experience.
We got a support
in the
right
US
here.
market, so they're trying to reassure investors here about that. But this obviously coming off the back of weaker guidance. No doubt this new CEO has a lot of work to do, Diane. But, you know, positioning, as I mentioned, it's been a favorite in the space because it really has been seen as a leader in the GLP-1 space, you know, particularly when it comes to market share. But the lowering of the sales growth, no doubt disappointing investors. And to add to that, I mean, you and I were talking about UNH this morning. It's just not been a very good time for the whole pharmaceutical industry as a whole. You know, when you look at the healthcare space with regard to headline risk.
I'd have to buy
effect happening. You notice it in Eli Lilly and even
$2,000 worth of.
the dupes. All right, thank you, Sam. That's Sam Vadas, Schwab, a network contributor with the latest look across Novo Nordisk. Time now for the disruptors joining us.
We got a head and shoulders support. We bounced off once, twice. We got to break the 21 to move up. I'm still in the SPY and the SPX, but
well, the report was actually quite good for SoFi. I mean, this has been a really big turnaround story for the company.
I'm just way out, too far out of the money on my SPX to save my butt.
Expanded quite aggressively into
might have to move them up.
Things like insurance, credit cards, personal loans, brokerage, crypto trading. And all sorts of financial management investments.
We're at resistance again.
Secured also allows them to bring in deposits and of course make personal loans. And it's become a very popular brand from the standpoint of digital banking. And overall, the stock had been challenged for the last year or so, irrespective of the last 6 months, which a lot of the financials are moving higher because of the Federal Reserve maintaining high interest rates. This brand has been growing quite aggressively, not just in popularity and of course the number of users, but also from a profitability and top line sales standpoint. They reported an adjusted EPS of 8 cents. They beat the estimate, which was 6 cents. That was 81% higher than last year. If you look at top line sales for the quarter, they were higher by 44% at $858 million versus $805 million expected. But if you look at the compositional breakdown, total lending increased by about 30%. They also talked about financial services growth, which actually increased about 106%, as well as fee revenue higher by 72%, and of course product revenue also higher by 34%. But they also increased the guidance for both EPS as well as revenue on an adjusted basis for the remainder of fiscal year 2025, and a really nice move to the upside as a result of these numbers.
Yeah, certainly. And even before today's move, that stock was an outperformer compared to the S&P 500 year to date, or even significantly year over year. So then, given that, given its performance, given how it's done in this most recent quarter, what's your approach for an example trade, George?
Okay, so this one, Diane, is very fickle because I've watched this stock trade post earnings for a long time. And in fact, one of the things I noticed is if you see today's high, which is around a little bit more than $25, and you zoom out, that goes back to a 5-year level. And so I think that's going to be a barrier, at least in the short term, that $25 area. The other thing is you'll notice today it's gapping higher on a daily basis, and the low of the day is around 23. So what I'm going to do is I'm going to structure a bullish trade, but I'm also going to take into consideration that the stock may end up being in a trading range for a little while. So we're actually going to structure so we harvest some yield on this as well. So instead of just buying an outright call option for the $23 strike, that would cost you about $250. I'm going to structure a long synthetic combo. So I'm going to buy the $23 call. These are August monthlies, by the way. And I'm also going to sell the $23 put. Harvest some credit to offset the expense of that $23 call.
Well, there we go,
so
finally.
Earlier today, you could have structured this trade for about $1.25 debit or $125 a contract. So in essence, the break even on this trade
Go
is
check my burgers. I'll be right back.
By expiration in 52 days. It has unlimited profit potential, so it's unrestrained to the upside. But you have to be mindful that if the stock does trade below 23, you'll be assigned shares. It's 100 shares per contract if you do structure this trade. But your cost basis is still 24 and a quarter. So it's a bullish trade. But that short put allows us to harvest some yield just in case the stock ends up going in a trading range or trading in a trading range until it sort of digests these earnings and decides if it wants to break out of that $25 five-year barrier.
Okay, all right. That's an example trade there for Spotify. Bullish is the view there, like the momentum that we're seeing today. Thank you, George. Coming up next time for our 360 round, we'll discuss the latest look at Boeing after reporting its second quarter results. Trade 360. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Trading 360 time now for our 360 round. For that, I want to bring in our panel to discuss Boeing's latest quarterly results. We've got Noah Hammond, founder and CEO of Advisor Shares, and Melissa Armel, founder and owner of the stock Swoosh, joining us. All right, so Boeing did better than expected. They're bleeding on their balance sheet improved. Adjusted loss, $1.24 per share. That was better than expected. Revenue coming in at $22.7 billion, more than 30% jump. On a year-over-year basis. Their cash burn improved as well. Noah, what's your reaction to their results first?
It's great news. It's a nice turnaround, heading in the right direction. As they said on the earnings call, more room for improvement, need to turn the loss into a profit, but really great news for investors.
Okay, Melissa, what's your take on those results?
I really liked it. It looked great in the pre-market. But right now, to be honest with you, it looks absolutely terrible. It has dropped almost 20 points since where it was in the pre-market. There's a possibility of a strike, a union strike that could go into next week. That doesn't look good. And considering the fact that it was up this morning so much on earnings, considering it had the tariff rebate with the European Union, it absolutely should have held strong today, rallied today, held at least at a bare minimum over 235. And it looks like it's just going to continue falling into the close today. And again, if the market sells off today, tomorrow, the market's been falling too, then this could break 220, and then it's nowhere near where it was this morning. So I did really like it this morning, but it's not holding up in the day.
So that's a great point, Melissa. But, you know, this is a one-day move. Noah, do you think that's meaningful, the fact that it didn't hold up compared to how it performed in the pre-market?
It's meaningful, as she points out. It's a pretty meaningful decline for this kind of company, right? But what I would point out is, you know, it was in April. This was in the upper 140s, right? Trading now at 227. So maybe for short-term traders in what was expected to be nice earnings, cashing out could make some sense. It is a healthy decline at roughly 3.5% right this second. But that's what I'm attributing it to, is more maybe short-term trading today, getting that news. But I do think there's some tailwinds coming, right? She mentioned some headwinds in terms of potential strength. But if we are also getting into a lower interest rate environment, this could be one of the stocks that would improve nicely based on news like that.
Okay, Melissa, let me ask you this. Tell me what we're calling 2025 Boeing's turnaround year. Still, obviously, there's still a loss that it's reporting and wants to get to a profit by the end of this year. How much patience does Wall Street have for its turnaround year?
For some of these stocks that have been underperforming while the market has been blazing, skyrocketing out to brand new all-time highs almost every single day that we get up in the morning. So again, if you look at Boeing, we have one more earnings after this. That's it. Then the year is over. So, I mean, we have less than 6 months to the end of the year. One more earnings season. Market made brand new all-time highs today, and Boeing is nowhere near the highs. Last time this stock was at brand new all-time highs, was over 400, was 2019. 2019. It's nowhere near this. And again, if it drops all the way down to 220, breaks 220, it's in danger of getting to 200, and then it's 50%, more than 50% off the previous highs, which was, again, 6 years ago. When you have a stock like this that is such a big component of the Dow, which I don't always trade the DIA, which is the ETF for the Dow. I usually watch the SPY and the QQQ. But when you have something like such a big component like this, it's nowhere trading where the normal ETF is, you have to wonder what is going on, what is the problems. I'm not saying this stock never recovers, I'm not saying this at all, but to think that it's going to recover between now and the end of the year when it's got one more earnings season left and it had lots of chances today to do it, again with the tariff reprieve, I just don't know if that's possible.
But to be fair, even with today's move, it's been an outperformer compared to the S&P 500 year to date. And Noah, we talked about, you know, the cash burn improving significantly. I mean, from 2.3 billion, which was massive, to just 200 million. Is that enough to change the narrative for institutional investors, Noah?
I think so, if they keep heading in the right direction, right? Again, not counting some potential issues, but also potential opportunities ahead. But yes, if they keep on this trajectory, I think you can continue to see this stock possibly outperform the S&P as we get out to the end of the year. Again, that's sort of based on what we know today. They got good news on tariffs, probably interest rates going their way. If they could manage some of their company challenges as they appear to have been, I like this stock going into the end of the year.
All right, thank you, Noah. That's Noah Hammond, founder and CEO of Advisor Shares, and Melissa Armo of the Stock Swoosh. Thank you so much, both of you. Thank you for joining us today on Trading 360. I'm Diane King Hall. Download the free Schwab Network app. It is available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Fast Market is up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor
112
Checking,
on my
the checking
calls.
account built for investors.
Yeah.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with
Always
Schwab
clean, may I
before
help
there
you?
were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution.
Dad, how come Grandpa doesn't sleep with me anymore?
Someday it'll be their turn.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Google it, nice.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network. Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We'll discuss markets, which are off of session highs, and then we'll have some option strategies. We're going to cover Visa, which is up about 12% so far this year into their earnings, and Starbucks, which is still in bear market territory, into their quarterly report this afternoon. And then, like Folio, we'll have sentiment data in Mondelez, which is up about 29% off its recent low.
Visa's down to the 200.
Now let's take a look at the major indices, which, as I mentioned, off of those session highs.
Starbucks,
the SP
triple
500
bottom.
down 0.16%. The Dow Industrial
Inverse head and
nearly
shoulders.
200 points, or just over 0.4%. Nasdaq still holding on to green territory, slightly positive, and the Russell 2000 small cap.
I'm in SPY at 125.
In today's session, to help me break all this down, let's bring in my co-host.
We're at 112.
Kevin Hanks. Kevin, give me your take here a little bit.
I about lost everything on this
The story that
SPX.
started, I guess, as far as earnings goes this morning. A lot of data this morning. But we're kind of just floating nowhere. Kind of like what
Go
happened
get my
yesterday,
hamburgers
even
and
though
flip 'em.
The S&P 500 and the NASDAQ 100 both settled at record highs yesterday.
Yeah, Tom, you know, there's breaking news right now. The U.S.-China discussions have just ended. They agreed to extend the trade truce. So that's breaking right now as we're coming on the air. So let's see how the markets react to something like that, although that's pretty much expected. Besides that, kind of a bumpy day here. I mean, a lot of stocks that came out with, you know, at least the chance for a relief rally or good earnings, like in Boeing, United Healthcare, all down, and Spotify. You know, there's a couple names getting hit today on their news of their earnings. So let's see if that's setting a tone for earnings season. The data, you know, the data, we got a lot of it. I'm not sure any of it's that significant. Consumer confidence upticked 2 points. The Jolts was about in line, just a little over 7.4 million, pretty much where they expected. I don't know, besides that, it's really the market is digesting a bunch of earnings and figuring out that they're not real thrilled about them, Tom. That's what it seems to me, because Boeing's was, fairly positive. Stock's down. United Healthcare, new CEO talking about better things in the future, stock down. Spotify, stock down there. So, we're, again, Tom, this is one of those situations where we're going to get a ton of information. Which is affecting the market more? I don't know. Could be all of them, could be some of them, but the market's down.
What I'm getting, earnings have been good.
Off the highs that it opened this morning. I don't know, Tom. It seems like a little bit of it could be just a little ebb and flow here in the market, trying to get a hold of it, but so far,
the way I understand it, earnings have been good, but that one headline said they weren't. And I'm going,
China's lead negotiator
I don't understand.
saying that they're going to pause for 90 days, extend that. They're maintaining communication and will continue to work through a trade deal at this point. Not helping stocks at all. But you mentioned some of those names, Kevin, that reported earnings. PayPal's down 9.5%. That was a pretty good report by them. United Parcel down. UPS down 9.5% here today. Stanley Black & Decker. There's been stocks, and not all of these stocks. We talked about it before, Kevin, where the high bar going into earnings.
Woo, PayPal
was kind of reflective of the moves that we'd seen post earnings. Was that they would pull back here a little bit, but then you look at UNH, cutting their guidance moving forward. They've just got trouble after trouble for that company. And then Boeing was up a couple percent in the pre-market and fell, now down over 3%. So it feels like, maybe the euphoria of the month of July is starting to wane here as we're wrapping up the month here in the next couple of days, huh?
Yeah, there's just so much, right, that remember, all this we're consuming, all the data, all the earnings, all the headlines. Meanwhile, we're at a 23 PE on the S&P, so we're not cheap. But it is interesting that some of these beat-up names are getting beat up more, like you mentioned, UPS, United Healthcare. Spotify, you can make a case for Spotify, right? It had run a long way. The valuation was getting a little pricey. But what does that mean? If you're a trader, you're looking to tomorrow's trade and
Spotify's,
trade, and
I did in the video, about to come to my support.
Is there going to be any number that's good enough to keep these stocks up? That's
it actually hit it.
Seems to be creeping into my mind.
Oh, come close.
Are we just due for something, a little pause here because of the valuations? We have so much data and earnings still to go this week. We're just dipping our toes in here, and things are already getting a little bumpy. But some big moves here on some of these names.
Yeah, and as you mentioned, with the valuations where they are, maybe the move's already been put in after that massive rally that we've seen through May, June, and July for equities at this point. But to that note, Kevin, even with those some of those individual names getting hammered today post earnings, the S&P 500 is 0.1% off its all-time highs. Nasdaq's hitting fresh all-time highs in today's session. You mentioned some of the data that came out, consumer confidence, bouncing back, and that's not surprising. There was some rejiggering from the IMF also this morning that raised their GDP estimates for global growth, the U.S. growth. So those numbers are starting to come in line, probably due to the fact that we're starting to get these trade deals. There's less uncertainty out there moving forward. Is that the outlier here, Kevin, that can maybe sustain this rally, or at least, we were overdue for a pause. So maybe this is that pause and that calm that we need at this point, right?
When you get up to these levels and these valuations, it's going to take a lot to keep the market going higher, and it's probably going to take very little for it to back off. That being said, consumer confidence. I read through the consumer confidence, very closely, up 2 points. The expectations, or the present situation fell 1.5 points, but the expectations index rose 4.5 points. How about this, Tom? Here's something we talk about a lot. with these conference board and consumer sentiment numbers. Political affiliation. Confidence improved for Republicans, stayed stable for Democrats and independents. So there you see the divide that you see. That may be muting some of the numbers here. So it's up, but it wasn't up very much in terms of consumer confidence. Let's see, consumers, how about this? Consumer confidence gained in consumers over 35 years old, Tom. So the young consumers, their confidence didn't go up, but the older consumers did. So yeah, I like to dig into this information into the data and see. It looks like the 35 and above are feeling a little better about the economy. The others aren't, Tom.
Yep, the over 35 crew, that's me for sure. And then tack on some other numbers.
No, Tom, you're the way over 35 crew. That's a whole different thing. Way
get my burgers.
Yeah, I'm going to leave it there on that one, Kev. We've got the Fed meeting that started this morning. No expectations for a rate cut at this point. We might have some dissenters next, in tomorrow's announcement in the afternoon. Maybe Bowman, maybe another one there. So if you look at this and you look at and you look at the consumer confidence numbers and sentiment numbers are starting to improve. We're getting through that uncertainty, Kevin. I just don't see at this point right now where the Fed's going to be comfortable coming out and saying, okay, we're not cutting this at this meeting tomorrow, but we might signal that we'll start cutting in September when you've got data the way that it is. You mentioned the JOLTS report, basically in line at this point. 1.1 job openings for everybody looking for a position at this point. So it feels like to me, and maybe this is just my opinion, that I just don't see any reason from the data that we have for them to even think about cutting in September at this point. If we're starting to see an improvement in in growth in some of the data.
Well, yeah, you're right. Here's why I think you're right. I think with the fact that there's no August meeting and there's not a meeting to September is what they're talking about, there's no reason for them to commit to that right now, right? So the market could get very frustrated with a vague response after this meeting. When, remember, you've got Jackson Hole. He could guide there. That's another couple weeks down the road. When you get closer, that number, you'll get more data, so you're not pegged as being wrong when you've got 60 days till the next meeting. Why commit to it now, right? But you could start to say, if things get better, and if inflation continues to come down, and if you can get scenarios like that. But, this Fed likes to see their data, and they don't like to say anything until the data comes out. But if the inflation data, remember, Thursday, Friday, we're going to get two key inflation points, PCE and income and outlays, and wages in payrolls. We're going to get two of them by the end of the week. So that should set a tone for inflation going forward. I think as long as inflation doesn't go back up, you can have a maintenance cut in interest rates. Does he guide to that? Boy, I don't see why he would. I wouldn't pigeonhole myself into that. And the market could get frustrated with his lack of commitment to September, Tom. That's one of the fears out there.
Yeah, I agree with you there. We've got bonds up a little bit today. Yields at 10-year yield.
Okay, I'm back.
Lower 4.36% at this point. I mentioned those IMF. They raised their global GDP growth estimate to 2.7% from 2.4%. U.S. GDP growth estimates to 1.7 from 1.5. We get GDP, that first read on Q2 tomorrow, Kevin. That's supposed to show growth of about 2.5%. Maybe we're going to throw that last Q1 number out due to the import skew that we had there. So that'll lend some support to, maybe that possibility that we're not going to get a cut also. But Kevin, I think everything can change, not only from what the commentary that we're going to get out of the Fed tomorrow afternoon, is after the bell. We've got Microsoft and Meta Platforms, releasing earnings, and then Apple, Amazon on Thursday. That's 19% of the S&P 500 right there. We get good numbers out of them. Hey, we could be back off to the races with fresh all-time highs like that, right?
Yes, and remember, they're going to give CapEx numbers.
Yeah.
Such a key part of their earnings report now is their CapEx numbers. Remember, who came out earlier and raised from 75? Oh, Google Alphabet raised from 75 billion to 85 billion on CapEx spending. You're going to hear a lot about CapEx spending in the next couple days, Tom, and that will feed into, that's right, NVIDIA, Broadcom, AMD. It can easily feed into those names. It also gives a message on Microsoft, Meta, Amazon. It'll give a message how they feel going forward. So, yeah, I think CapEx spending is going to be a big number that we're going to hear. And then, of course, digital advertising, right? That's where Meta makes their money. That's where Amazon makes their money. So that's going to be important as well, Tom. So, yeah, we're going to get just a ton of economic metrics that we can consume and digest in the next few days.
Yeah, Kevin, also if you take a look at so far in the S&P 500, the beat rate's still about 80% at this point. Is that?
Well, I'm just going to kind of take it easy. I don't want to jump into anything more than what I already have. Might see if I can get a scalp off it, add the scalp on my, now it's a day trade on my SPY, but I'm pretty much going to wait for a while, see if we get any kind of reversal on SPX. So I'm more or less not having a good day today. Got caught in a storm. We just now hit my support level here on the Spotify that I charted up. But I don't know, it's a pretty good shakeout. We have tweezer bottom on the 30-minute. On the hour, we did not have a tweezer bottom. But we did on the 30-minute. And the 5-minute. back at $1. I'm just kind of scared to even add. We're back at yesterday's low. I got 5 of these at 125, and if I add them, I'm gonna add 15 at $1. We've got a snake breakout pullback to the previous resistance. Okay, I'm watching SPY here. We got another support. We just now broke below it. Thought we were going to go squeeze there to the upside. They're at 102. There's a buck right there. Added at $1. This is my risk here. Oh, excuse me. I got 15 contracts, 5 at 125 and 10 at $1. And I got an average of 109. Rounded up to the upside. think I'm gonna go make me an espresso real fast. I'm in the SPY, added on. Kind of looking for an ascending triangle set up. As long as we keep this high or low, we got to break past that and get up into the channel. And this was my low support. No, I forgot. That 634 was a pivot point inside of a Darvis box. On the hour time frame. Spotify's at my support. I don't like working this hard. So we got to break to 63. I'm about even now. There we go. Let's go.
Guys see that in your data?
Yeah, I mean, we have definitely seen a resurgence in the stock. I mean, if you look at it, I think if you look at the stock chart, your first instinct is it's kind of going sideways. But then when you take a second look, you're like, actually, it's slowly trending upward. I mean, this doesn't move big, but it has been slowly drifting upward. And, you know, I think it's probably regarded as more of a defensive stock. I mean, you know, they're selling sugar and chocolate, so that's going to be pretty consistent throughout. But I will tell you, the data that we see is actually, it's kind of two tails, right? We've got U.S. and we've got Europe, and when we look at the U.S. data, it's a little bit weaker, and they noted this. I mean, Oreo and Ritz has definitely struggled. We've seen some of the lower income shoppers pulling back on that, and that's in the U.S. Europe is strong. I think they're plus 9% on sales. They were able to pass through the cost of cocoa.
Oh, Aruba.
Without really
What?
So, you know, it's kind of like which one's more important. I think what's going to be really interesting is see how, you know, all the tariff deals are going to affect this. So that's going to be very interesting. But one of the things that we're looking at is the price of cocoa and chocolate. It has gone up significantly. Somewhere out there's a futures trader that's just absolutely killing it on cocoa, but it's gone up significantly, and that was actually their big driver of growth in Q1. Their sales were up 10%, but their profit was down 12%. Because the costs are up so much. And so, I mean, that's a pretty wild chart. You can see, like, it was steady for years, and now it's just exploded. So they've obviously, they're at the mercy of that. They've either got to they pretty much have to pass through the cost or just take less profit. And they're kind of mixing in that strategy. So it's tough right now because the stock is doing fairly well. And as we've seen, today, this week, last week, a lot of companies, even when they put out okay numbers, they're kind of getting punished. So I'm starting to wonder if maybe the outlook on this company is just a little too high. Maybe they could be setting up for a little bit of a disappointment. Now, it's a different game. It's not Spotify. It's more of a defensive play. But the data that we've got is that the interest on the web for this company and their brands is pulling back a little bit while the stock is pushing forward. It's not a huge divergence, and I don't think you're going to see that with a snack maker. But we do see some divergence, and given what the market's been doing, given what the reaction's been to other companies, I'd probably lean away from this one, or maybe on the bearish side a little bit. And you can kind of see the divergence there, and how the web interest has sort of it led the way down, it led the way back up, and now it's heading back down while the stock is high. So that gives me a lot of pause. As playing this to the upside, I definitely would lean more to the downside, even though the Likefolio score, I think it's -7, so it's basically neutral with a slight lean. But just given everything we've seen in the markets, I'd probably lean to the bearish side.
Landon, I read 3 analyst reports about Mondelez, and for our viewers, Mondelez, Oreos, right? Oreos and Ritz crackers, and each one of them mentioned the record prices in cocoa are affecting this company's profitability. And even though for year to date, it's about in line with the consumer staples, you mentioned their gross profits last quarter down 12%, adjusted earnings per share down 18%. So this is a company kind of suffering under these the commodity prices for cocoa. I didn't realize it's in so much of what they make. So they are dependent on cocoa futures. You're exactly right. So what does that mean? Well, the stock has been relatively flat. Can it stay here if they miss again on earnings like they did last quarter? There's the question, Landon. But is there anything else you see? I mean, everything I read, the discussion about cocoa dominated the articles, Landon.
Yeah, and I think you're looking at the expense side more than the revenue side, but it's going to drive the revenue side as well. Obviously, you don't want your inputs to cost more, but when they do, you either take less profit or you charge when you get less sales. And there's just not a lot you can do with that other than, I'm not sure if they hedge and they buy cocoa futures. That'd be great if they did, but I'm not sure if they do. But the other piece of data that we've got is, in specifically in Europe, we saw, they talked about how strong Easter was with all the candy sales, but the data that we've got after Easter is sort of weak on a year-over-year basis. It's definitely weaker than Easter. That's a peak, but even seasonally adjusted, it is a little bit weak. So again, the data that we've got is just slightly bearish, and then when you combine it with the strength of what the stock has done recently, especially during this sell-off right now that we've got, small sell-off in the market, to me it feels like it's being set up for a bit of a disappointment where it's going to take really big numbers to come out and surprise to the upside and send this one higher. So I think the smart play is definitely betting on the downside.
Yeah, it's had a nice run so far this year, as I mentioned, 17%. But Landon, real quick here, have you guys seen any data on impacts? And it seems like this would be right up its alley. Anything from the GLP-1s on a company like Mondelez, because it seems like it would be straight in the crosshairs of somebody trying to lose weight.
I'm about done.
is this and maybe fast food places.
We've had a pretty good loss today.
So we traditionally have
Not bad. I mean, but bad enough.
Telltale on that one. But I think, this is another great company to look at. What we don't see are people really talking about, they don't say, I got Ozempic and now I'm snacking less, right? But we see it in the data. We see people buying less or talking about buying or sharing less. And for whatever reason, we haven't seen
I'm just going to
so
keep
much
looking
in
for my
Pepsi,
hotel.
But we've seen it here. So maybe it's, I really can't explain it, frankly. I mean, they're both selling carbs, they're both selling sugar. It's the same kind of products, but we are seeing more weakness in Mondelez than we are in Pepsi when it comes to the snacking side of things. So you guys tell me what that's all about. I don't know, but maybe the GLP-1s are part of that. A lot of the data also suggests it's cost and people are just trying to cut back a little bit. And if you're going to cut back at the grocery store, what better place to start than Oreo and Ritz, right? So maybe that's it. I know that they've done a lot with the multi-packs and the fresh snacks. They're trying to get value in there, but they just haven't seen a big boost in volume from that. So they're trying to solve the riddle, but they just haven't figured it out just yet.
Yeah, I think they're figuring it out, Landon. Same cost, less product in their packages. That's what they've all been doing, I'm guessing. And that helps margins. All right, great stuff. As always, Landon, have a great day.
Thanks, Tom. Thanks, Kevin.
All right, that's Landon Swan, co-founder of Lightfolio, breaking down the data on Mondelez. It's had a good snapback run. Remember, Kevin, this stock was under $54 earlier this year at the end of January. Slipped, but it's made its way back up to $70. How do you want to look at this one from an example trade?
Really jumped out at me is a couple things. Number one, yeah, you're right. This stock is held in there pretty fine. It's been the chart is pretty flat since really March of this year. The stock is pretty range bound. But how about the expected move? Less than $2 expected, right at $2. It just upticked slightly to a $2 expected move. That's 3%. That's not a lot, Tom. So what I did was I kept it pretty simple, Tom. And when you start pricing this out, you start playing with it a bit. I went with the put calendar on the downside, the 68. But Tom, I did 2 weeks. And you know why? Because you could buy the August 15th 68 put, sell this week's 68 put. The difference about 30 cents, Tom. 30. So it's not a big mover. It's only $2 below where the stock is trading right now. But if it were to drift there, and the problem is, well, it's 30 cents. It maxed out around $100 on the upside. Yeah, but that's a triple on your money if it does that. So sometimes you don't look at the dollar number, you look at the percentage. And if you can get to a triple, like sell this for 90 cents, that is a massive winner, Tom.
Yeah, let's break this one down. As you mentioned, a low-cost way to get some exposure, and you don't have to do the put calendar like Kevin's got here. If you're more bullish and you think it's going to go up about that one standard deviation, maybe you do the 72 call calendar, 73 call calendar on this one. But let's break this one down that Kevin brought us. August 15th. Monthly options that expire in just about 17 days. Buy the 68 put. Sell that same 68 put in the near term. August 1st. Weekly options on this. 2 week wide.
Back at a buck.
On the downside, about that one standard deviation.
On the SPY.
Market's pricing in. 30-cent debit. There's your risk. $30 per.
Got to break the 21.
And yeah, you want
on
to
the
go
2
back
minute.
Near 68, but you probably
and 63 on the 1 minute.
$66 to $70. That this stock can trade within over the next couple of weeks, where you compete.
We had a tweezer, triple tweezer bottom there on the /ES on the 30 minute and bounced up off of it.
The downside. Now, why does it cost so little? Well, in the August 15th monthly options that you're buying, that 68 put, on aggregate, the implied volatility levels are about 24% in that option series. In the August 1st weeklies, the ones that you're selling, that same 68 strike put, selling about 42% implied volatility on aggregate in that option series. So that dispersion lowers the price entry point on this. And as you get closer to expiration over the next 3 days on your short option, you do have the potential or opportunity to potentially roll that short option to the next week, collecting credits, extending duration a little bit, and increasing potential profitability. But as Kevin mentioned, you're paying 30 cents for this. If it goes up to 60, 70 cents, that's maybe if the market's open, you start looking to close it, a portion of position or all of it, or rolling immediately to take advantage of that expansion in price. But a low cost entry point here on this put calendar. All right, let's take another quick break. When we come back, take a look at Starbucks, coffee retailer stock, up a modest about 2% so far in 2025 into their earnings report after the closing bell.
Oh shit. That's got a hell of a deal, I think. My trip. See how I can redeem these.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Starbucks, let's get a quick look at markets, which are near session lows. We've kind of reversed all four of the major indices in the red now. Led benchmark S&P 500 down about 0.2%. Dow off 177 points or 0.4%. The Nasdaq now in the red by 0.1%. And the Russell 2000 down over 0.5%. One of the news stories that just came out a few minutes ago, according to the Wall Street Journal, Palo Alto in late-stage talks to potentially acquire CyberArk. CYBR is the ticker symbol. That stock's up about 14% on the news, while Palo Alto has pulled back about 3% on that. So that story, there's CyberArk popping on that news, now only up about 12% on the day. It was up over 15% on that news. They're valuing it at more than the $20 billion that CyberArk's market cap was at that point. So yeah, in the cybersecurity area, maybe some M&A activity, according to the Wall Street Journal. All right, let's get into a discussion about our next stock, and this is Starbucks. The stock is done okay, kind of rebounded a little bit. They got the new CEO in place, but the turnaround story is taking a lot longer than maybe investors have put their faith in this company in. But let's bring in George Tillis, Senior Markets Correspondent here, to help us break this one down. George, it feels like, hey, we got the new CEO, Brian Niccol. He's going to change things like he did at Taco Bell and then at Chipotle. but this is a different beast here with the scale and size of Starbucks, right?
Yeah, it is. I think this is an interesting situation for a company that's a well-recognized name, both domestically and globally. I mean, I think the aspects of what's going on in the United States in terms of things like store traffic or foot traffic, which if you look last quarter, they denoted it was down 4% year over year. Previous quarter, down 8% year over year. So we're coming into a quarter where comps from previous quarters are actually quite a bit to the downside. And even same-store sales in the United States are expected to be down about 2.2% last quarter. They were effectively down, their next quarter they're expected to still be down about 3%, but they are seeing a turnaround potential coming up in the Q4 of this year. So we're sort of at an inflection point, at least right now, in terms of estimated operating leverage for the business, at least in the United States. And of course, you have to include China. There have been challenges for Starbucks in China because of competition between the United States and China. That's really about 60% of the total revenue base. But I think the USA comps have been quite challenging for Starbucks. I talked with Kevin about one of the up-and-coming competitors, Dutch Bros, that seems to be growing their market share, encroaching on Starbucks' competitive advantage that it had in the past because of the scalability. Now, looking at the quarter, the expected numbers are expected to be quite low compared to where they were last year. For instance, EPS expected to be approximately 65 cents, down 30% compared to the same quarter last year where they generated 93 cents. And then sales are also expected to be a little bit higher to 9.31 billion versus 9.11 billion for the same quarter last year, but that's only higher by about 2%. And I think if you consider the EPS decline rate of change now from last year for the same quarter, that fits the narrative around same-store sales declines, losing some operating leverage.
We're at 104.
Earnings estimates have been declining. So
I need a big
if you
bounce.
look at the last year, the stock is higher by 24%. Year to date, it's relatively flat, slightly higher, around 2.9%. But I did notice the last 3 years, this has really been a serial underperformer compared to the S&P. I mean, the S&P is up about 55 or so percent, just approximately speaking. But Starbucks is only higher by about 10%. So there seems to be, I think, some growth challenges for the name, competitive challenges both domestically and internationally. There also is, again, some challenges maybe with the U.S. dollar, particularly because the sales overseas are quite large and been growing quite considerably. But even as earnings estimates have been declining, price hasn't really moved much, so that earnings multiple has been expanding. For instance, if you look at the earnings multiple for this year, it's still trading around 38 times. This year is 32 times next year's earnings. Historically, it's around 33 times. So it's really split between this year and next year's earnings multiple. But I think the other thing is you have to consider some of the structural challenges. They're looking at, they launched this recent program called Back to Starbucks. So anytime you have to, market your product and your business saying come back to Starbucks or back to Starbucks to improve loyalty program and marketing and, of course, partnerships, that can take some time. And I think, again, the foot traffic, which was lower last quarter, even down 8% from the Q1 because we're reporting fiscal year Q3's earnings, was down almost 10% going back just 2 quarters ago.
George, my question will be quick. 70% of their revenue comes from mobile and drive-through. Okay.
Yep.
So their average cost per cup, $5.24. It feels like they're having an identity crisis. That takes away their in-store, right? If you're buying it a different way.
Yep.
What kind of company is this company turning out to be? They're not fast food, right? They're not McDonald's. Are they a workspace like a premium coffee shop? I don't know. Not when 70% are coming this way. What's their identity going forward with Brian Niccol?
Well, I think you bring up an excellent fact or issue, Kevin. I mean, I go to Starbucks, and when I look at Starbucks now, it used to be more of a cultural presence, sort of a an social atmosphere where people go. Now I go through the drive-through more, and what I do notice is that the stores look empty, at least the one I go to on a regular basis, but the workers are very busy. So I think the phone in and of course the mobile app orders are quite robust. They're getting a lot of productivity out of the workers, but they've got a lot of this square footage that doesn't seem to be utilized as much as far as I can see as in the past. And I think
We're at
that's
108.
of what they demonstrated for foot traffic declines, at least the last 2 quarters, same store sale comps. Which
I added on to the
and I
SPY
think there's
here.
some underlying challenges from the standpoint of the identity that you mentioned. Of
We
what
broke to
Starbucks used to
63,
be,
but we got another
it's not quite
resistance to
no,
break.
because
We got a whole wall to
it's just
break.
More of a drive-through establishment, but it's losing that I guess that social construct feel of going to a Starbucks and enjoying yourself the way it was in the past. So I think they're going through an identity structural change, and I think that's what we're seeing in terms of the numbers and in terms.
I'm trying to see if I can book my vacation while I'm doing this, so I might be quiet for a bit. Your request has been...
The downside, you buying the shares at a discount because you created yield, Kev, and then also, you know, you've still got a lot of risk, about 99,040.
Ooh, 113, there we go.
Covered call.
I got
allows you
15
to still get the
contracts.
dividend and still collect theta, Tom. It's the equivalent of a short put.
Yep, and as you get closer to expiration, you have that opportunity.
We break the
to roll
double
option
top.
option
That gives us
also,
an ascending triangle. We could easily drop down and do that one more time.
today here on Fast
Shut
Market.
up.
Stick around though, right here.
So this is where we are. I've got in the SPY and I cost average down $1 and 125 to 108, and I got 15. If we break the double top, I think this is more important than these. If we break the double top or even come close, but I like to break it. $115. 118, 119. Let's go. Bring it. We're at the double top right now. $120. $122. $123. Should sell it here. We broke out of the double top and we're at ooh, there it is, 127. That was a nice little pop right there. Let's go. We're at the 200 right now. We're at the 200 right now. I got 129 on my SPY. I mean, this is an exit idea. The way the market's been today, I wouldn't take too many chances. I was going to see if I can get more out of this. I'm up 300 and something. Oh, my blood pressure's probably flying through the roof. I gotta figure out how to redeem my points. Redeem your points. There it is. Use your... Okay, how do I do it? My points are 5,000. Claim points. dropped to 120. We break the 200, we're going higher.
To almost 200 in a handful of months, well, they can also go from near 200 to near 100 again. And that's just kind of the nature of the game. We talk about this with Tesla. We talk about this with plenty of names. Palantir, for example. It's sort of just the nature of the environment that you're in when you talk about them. But certainly not one for the faint of heart. And with near 100% implied volatility, I would expect more volatility in the future in terms of just general movement.
Especially because we saw them report a 400% rise in their top line in the first quarter. So now, ahead of this second quarter report, I do think the bar is pretty high for a company that has been able to post such a substantial growth, at least on a year-over-year basis. Now, last name today is another one where the bar is set relatively high. That is Coinbase, with results out actually this Thursday after the close. And according to Citigroup, they do stand to benefit from the gains from legislative momentum, as well as stronger Bitcoin prices and improved custodial fee revenues. They actually reiterated a buy rating and lifted their price target by about 87% to $505 a share from $270, suggesting roughly about 33% upside from where we closed yesterday. But shares in Coinbase have rallied this year. I mean, helped by the favorable attitude we've seen from the Trump administration towards cryptocurrencies and the entire financial ecosystem surrounding them. The analysts said that their new price target is driven, though, by this quarterly rise in prices of between around 40 and 45%, as well as this better yield on their subs and services revenue. So this does come right now with some backlash, as they do expect the integration of stablecoin as well as new product announcements to lead to positive subscriber growth. But I've read some analysts that think actually the entry of stablecoin and the Genius Act, for example, will not be the rising tide that lifts all boats. It actually could steal some of that coveted market share away from Coinbase.
Yeah, I've read that they may have lost some market share in this quarter we're about to hear about, but it doesn't mean that their trading volumes and their transaction volumes have gone down. You just want those situations where the pie is growing faster than they're growing. So, you know, you look at this name, it's still in many ways the leader when it comes to kind of brokerage services for crypto. But when you look at it, it's going to come down to, like I've always thought, you know, interest in these products. And right now, interest is high. When you think about Bitcoin, you think about Ethereum, they're being talked about a ton. The moves higher have been tremendous, going back to the election timeframe, but even really to the lows that we experienced in the overall market in April. You talked a little bit about their subscription and services revenue. That's something to watch as well, particularly staking too, when it comes to some of the things that you can do ancillary to just buying and selling some of these products. But as this company becomes more and more mature, it's going to separate itself just a little bit from how Bitcoin performs. It was early on just, hey, Bitcoin's higher, probably names like Coinbase are going to do better. But as these products become more mature, their interest isn't going to be solely dependent on whether or not the price goes higher. So they have sort of an implicit, higher demand that they had, and that should, in theory, help a Coinbase. But even you look at today, Bitcoin's down 0.25%, and Coinbase is down, 2.5%. So it's not necessarily the same trade as it was 3 or 4 years ago, and it's a little bit more complex as you start to digest it. And I always say, if you want to be involved in these things, and you want exposure to Bitcoin, there's so many ways to get exposure to Bitcoin. If you want exposure to the business, Coinbase maybe makes sense.
See, and that's, I think, maybe why I see that's a massive headwind. I completely agree. There's so many now vehicles in which to be exposed to the crypto world. Coinbase is no longer really like a pure play on Bitcoin at all.
We're at 129.
It used to be, to your point.
And this is nothing to knock Coinbase, but now some of these new funds and things that are available, futures products, etc., you don't need to actually go to Coinbase anymore to get access to the spot markets either. There's plenty of places to get spot access, but for those who don't even want to deal with that, they just want to be in the regular brokerage account and they're comfortable with the risks associated with some of the other, on-market equity-related products or futures-related products, just cut Coinbase out altogether even.
I know, and I think that's a huge risk, but yeah, again, that's more in terms of accessing various Bitcoins, or if you want to obviously look at trading the same, I think you have to consider the flooding competition in this entire space. We'll leave it there though for the top of our show today. Coming up next, it's time to chart and trade two names ahead of their reports today after the close. We are looking at Seagate, which is actually touching all-time highs in today's session, versus Starbucks. Starbucks about 21% off of its recent highs.
Right? Yeah.
Okay.
Yes.
Is the fact you get me what channel is mine, the one you put to stay at?
Which one I want to stay at? Fujikana, Macau.
Yeah, we have to look out. You might have found out. When do you get checking date?
It would be August 29th. September 1st.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
844-766-5455.
Welcome back to Next Gen Investing. It's now time to dive into all of the technicals ahead of some earnings we get after the close today. Joining us is our chart master, Rick Ducat, to help us break down some expectations here. We'll start off with perhaps the laggard of the two, that being Starbucks, which unfortunately, right now, if we're talking about a stressed consumer over prices, I mean, Starbucks is not cheap. It's something I visit about once a quarter because I cannot be frequenting these $7 drinks, and I know part of that's on me, but walk us through the latest trends here because it has been recovering, yes, but still an underperformer on the year.
Yeah, for sure. And, we can see that price action, since we bottomed out down here around that 76 or 77 level or so, that was about where we had this gap back here that got filled. We have made a bit of a resurgence here, but lately we've been stuck. And this is a chart where you can see that there's several periods of range-bound activity that's very pronounced here. You can see we have this small area here. Price was in a very narrow, tight range. We had our breakdown.
Well, it hit that resistance line, pulled back.
Later come back into focus here between about 96 to 97.50 or so. So that's another area in question. But as I said, range bound.
We're at the 21 right now.
More of a volatile period during the tariff news shock here, but for the most part, a fairly consistent ceiling. And in terms of the closing prices, pretty consistent as well, around that $80 mark. Then we had another push to the upside. We broke above that resistance area near 87. You can see how many times price topped out there at that point that matches up with that old low. Now, once again, a sideways grind, if you will forgive the pun I made earlier, and recycling. We can see that 91, our low point there, and also matches up with our ceiling here, 96 to 97.50. So as I said, a very compressed region in which we find our prices. Moving averages very sideways, very clustered together, right around that 91 or 92 to about 93 area. That would be a key downside level to watch out for. Momentum waning as well. RSI crossing below the 50 midline. So momentum slowing as we head into earnings. Pretty common for that to happen though.
Okay, yeah, so pretty common to see, of course, some momentum waiting on the session here. We are down about 1% today, though. So as far as now, I mean, maybe those that are hoping for some upside or continued recovery, obviously earnings can unwrite a lot of the recent price activity, but what else are you watching?
Volume profile is kind of interesting for this one. You can see that really most of the trading activity for the whole year is really concentrated in this area, most specifically between about 93 to 98 or so. Our point of control, 95.59 to be more precise here. But we have many of our indicators lining up all in the same general area here. So the more of these technical studies or lines or whatever, the more that are concentrated in a similar area, there's more sets of eyes looking at it, creates a confluence we call. So it can lead to a more energetic breakdown if we were to push below it. The final line in the sand probably for this area would be that $91 mark. That's where the volume really starts to trail off. That's around where we had our lows. That could open the door to that 87 level. If we were to move to the upside here, volume picks up. Here there's a little bit of a gap in between these two areas from like 96 to 97 or so. But then the next area of interest would be really 97. There's not really a whole lot of big volume nodes or anything at all until you get up here to 112. That's pretty far away though. That could be one area to consider going forward though.
Yeah, and so Starbucks, we'll have to see here if Brian Nichols enough to move some momentum to the upside. But say, of course, for now example purposes, when we do look at trading this name, Alex, if we were leaning into just more of the same. I mean, I know that we talk about the volatility, the wide swings, but neutral is still a strategy.
Yeah, and really the stocks have been neutral going back 5 years. If you went back to 2020 in November, the stock was trading at the same price. So looking for more sideways action. We have earnings juicing up the implied volatility, allowing you to sell something like an iron condor and short-dated expiration and surround the stock, but give yourself a little bit of a window here where it can move a little bit within that range, but still be profitable. August 1st, 100, 103, 88, 85 iron condor, selling the 88, 100 strangle. $3 wide wings, looking for a $1 credit. That $1 credit means you have a max profit of $100 on $200 and risk is a $3 wide spread. Makes the math easy, 2-to-1 risk reward. break evens 87 and 101. So you got a $14 wide window, Jenny, where you can be profitable of at least a penny. A $12 wide window where you could be potentially at max profit. And again, this expires the end of the week, so it's a short-term trade. Right now, Starbucks at 92. This would be skewed a little bit bullish, though. So you'll notice 88 a little bit closer to 92 than 100.
Yeah, and of course, good observation there that, of course, this is an earnings pure play, as we're now 3 for 3 for our example trades this week of looking at August 1 expirations. But now, to look at a winner here ahead of earnings, although earnings could be a critical test for Seagate Technology, which has been a really solid performer, actually touching record highs today, Rick. So it's been a long time since we've been able to say that for some of these tech-exposed stocks. Walk us through this chart.
Yeah, another of these charts that has kind of two distinct phases here. A long period of this sideways activity, and it wasn't exactly so sideways, but the move up since then has been so extreme, it kind of makes it look that way. But anyway, so the low point here, once again, that tariff news cycle around 63. We have since risen about...
Got a megaphone on SPX.
From that point here, as you said, making those new intraday highs of 155.52 today. But, you know, we had our blue trend line here, mostly following along the low points for the price activity. We moderated a little bit around this point, though. You can see that from here, the trend line was broken. The white trend line in the shorter term is a much more modest slope. But it's interesting, though, because really it looked like more of an ascending triangle type shape where we do have this very consistent ceiling around the 152 mark. Now we're having a breakout. It would be noteworthy to see if price does get some strong activity after earnings and we get a push to the upside. This 152 general area could come back into prominence for a retest on a pullback. But for now, though, momentum still quite high, but trailing off a little bit here. We were making actually corresponding highs with price. We didn't see the divergence that you might have thought you would start to encounter when the trend slows down. Look for a breakout back above the overbought area.
Okay, and last but not least here, as we zoom out and look at some broader price trends, what else are you keeping on your radar here for Seagate, which is actually having a pretty nice session today, up 2%?
Yes, our +2 standard deviation channel, our solid orange line there, right about where price topped out previously. So 152, 154, around that general area is where you might expect to find possible resistance based on the old highs in this study. Certainly doesn't mean it's going to stop there or that it's some kind of brick wall that price won't be able to get through. It's just saying this is the point where you might expect a potential
127 Eastern time.
Price action breaches this established level, triggers the cascade of orders that result in the runaway activity here. But you can see we do have a volume node at 150 about that level.
I'm gonna make some tea.
Again here near about 130. So these two small bumps are the only kind of notable volume areas other than our point of control all the way down here. So relatively light trading, but those are the areas that stand out.
Okay, so yeah, Seagate having a decent run here into its quarterly numbers. We'll have to see if these numbers can hold up, of course. Appreciate it, Rick, for the technical help. And now as we do look to trade Seagate, again, for example purposes, Alex, I mean, riding the nice momentum we're seeing today, I mean, and just over the last several months, recovering from lows to record highs. Walk us through your thinking.
Yeah, really nice move for this stock, clear up trend. So not fighting the trend, but using some of the increased implied volatility around earnings to use a premium selling strategy. Neutral to bullish, short put vertical below the market, 146, 144, and yes, you guessed it, August 1st expiration, so expiring at the end of the week, keeping it centered around this earnings event. 50-cent credit means your break even would be 145.5. You can make $50 on $150 in risk. So unlike our last trade that had a 2-to-1 risk reward, math pretty easy on this one too, it's a 3-to-1, so maybe slightly higher probability, which could make sense, right? A little bit further away, but only risking one side. So higher probability of success, but a little bit greater risk to reward ratio. So if you don't pick direction right, you stand to lose 3 times what you can make on this particular strategy.
But of course, similar to our last risk defined, so you at least know your max loss going in and preparing for the event that is oftentimes a volatility and risk inducing. So, these earnings events can erase even some nice upside we could see, or of course, in the case of like SoFi, we could see more of that momentum continuing. But we'll leave it there for Chartmaster. Now, coming up next, it's time to talk, unfortunately, a name that is losing session pretty substantially. Spotify with some disappointing metrics. Overall, still a lot to like here, but pacing for its worst day in nearly 2 years.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation?
Carnation.
It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
God, Master Kid.
Welcome back to Next Gen Investing. It's now time to discuss all things Spotify, which we previewed yesterday. Unfortunately, did not live up to all of the hype as we're down today, pacing for its worst session actually in almost 2 years. Joining us though is Marley Caden, host for the Schwab Network. And so, really,
she looks hot today.
Marley,
Oh God, Marley's on.
High. Spotify, I've always said, is somewhat niche in its streaming offerings, but we did have a major benefit from them raising their prices, which seems like right now it's starting to wane a bit as far as the enthusiasm that then trickles into the report.
Enthusiasm is not a word I would describe today using at all. Shares are down about 10.5% right now. The streaming service posted a second quarter loss. They missed revenue expectations, and then they issued softer guidance for both revenue and operating income for the current quarter. So all in all, it wasn't a great report. They had a loss of 49 cents. They were expected to be at $2.13 a share in terms of EPS. It was a huge miss there. Revenue a miss as well, but it was up year over year about 10%. So still a miss, but it was an increase year over year. They said that higher personnel, marketing, and professional services cost and about $130 million worth of what they called social charges, which I looked up. It's a payroll tax tied to share-based compensation, contributed to their loss. They also missed on operating income as well.
Oh, what was that?
Their monthly active users for the quarter.
Was that a big yawn?
Year over year, that was to 696 million. That did beat expectations. Premium subscribers grew 12%. That was up to 276 million.
There must have been some good M&Ms.
433 million. That beat expectations, both of those numbers as well. Gross margins did continue to fall. They're down to 31.5% in Q2. They're now forecasting for them to slip a little bit further in the current quarter, down to 31.1. The other big issue was their guidance.
It's not been my best day, that's for sure.
Revenue came in at 4.95 billion. They were expecting more than 5. They guided their monthly.
We're getting ready to squeeze again here. We're going to find out any minute.
In line with expectations. Premium subscriptions also in line with expectations. But their CEO, Daniel Ek, did acknowledge that they've had a struggle in their ads business. And he said that it's been moving too slowly, and it's said, quote,
make
it's
me
really
some.
an execution challenge,
So looking at
not
the
a
book
problem
map
with
and
their
what it's done the
strategy.
entire
So
week.
interesting for him to say
They got
that
purchase
that's an
orders up
issue for
there
them
at
and that it's their
64.22.
issue and not a broader issue, because they did cite lots of broader
60 what? 422?
422. Mm-hmm.
Yep. I think might have been waiting for that China news and it didn't get what they wanted. You think them could be, what do they call them, put sells at that price?
Could be. Anything that shows up as a line on my map is a limit order, and the circles are market orders. So
Yeah.
so you can tell the aggressors. Damn, where are you going?
God.
Going back down to 6,400.
Yep. Glad I sold some of them there. We might get back in them here. Mr. Lee. Days like today, I like to skip.
Yeah, no shit.
Like they never happened.
They have been bull trapping all freaking day.
Yep.
I wish I'd have bought right there at that 6406. That's the bottom of the Bollingers on the 5-minute. That was actually a perfect 5-minute squeeze.
I I didn't think this week would be like this, that bad.
I don't. I kind of had a sneaky suspicion because I don't think. I think earnings are going to pump it, and I don't think they wanted it at all-time highs and then pump it again.
Yep. Yeah, I agree there. They're trying to find anything to make it sound bad.
These fat boy bastards can't buy when it's that high. They're going to do anything in their power to get it down and then buy before earnings.
Yep. And a lot of them have missed the boat. That's the big thing.
Mm-hmm. Yeah.
I think that's the most important thing. Because
There's
they've been
a shitload of money to make when you can drop it 50 points, 60 points, 70 points in a day.
Yeah.
And then have it go right back up the next.
But I've heard it over and over again. The retail traders have been buying the dips, and the fat cats have been sitting on the log, sitting on their hands, wanting to dip because they didn't catch the bounce. Now the day traders did. The fat cat day traders probably been nailing it, but the institutional buyers,
yeah,
that's a different story. I guarantee Warren Buffett probably shorted. Remember when he got out of a lot of them stocks and then we ran up? That probably shocked the poop out of him.
Yeah, he's sitting on a lot of cash to have missed the boat.
Yep.
I want to buy calls at this 6406.50 area on the S, but damn, I hate buying calls in the last 15 minutes of the hour. They love to run the bitch down at the bottom of the hour.
I'll be right back. I'm going to get my water on. Before I leave, I want to leave with, we got a tweezer bottom matchup coming up on the 30-minute. If that helps you any, 640538. And that's on the bodies. 38, 20, somewhere around 20. 6406, there it is right there.
I got some buy orders at 6401, so that's where I'll be.
Yep, we hit that already. On a wick.
Mm-hmm.
So if I was to move these up, 6385s, I'm going to go for it just to see what happens here. Take a little risk. 6405s at 125. $63.85.
I was going to say, what the hell? 64.05 is 20 cents.
Yeah, that was the support.
63.85 is at 120 now. I'm going to set a limit order for $1. Let's see if it'll weak me down a bit. I'll be back.
Yeah, this is just not my day. Come on. This is where I almost got in them spies there at 125. And it dipped $1 on me. And there we are at $1 on the 63.85s. Registration date. I need to get my head back in put mood again. But I didn't do too good on my puts last time around. I only got 1 out of 4 right. I was kind of leery, but shoot. One thing's really held up has been the IWM. Kind of.
Mm-hmm.
Triple bottom on the 10-minute. With 3 black crows and a tweezer bottom. On the SPX. Somebody wants to sell me a jet. Gulfstream G550. Woo! It'd be the last thing I'd buy ever. I couldn't afford that. Maybe a small little bitty car, flying car. Live press conference in U.S.-China trade talks. Oh, what's this? Yards.
$2 for a piece of toast? Bullshit! $2 for a piece of toast? Bullshit! $2 for a piece of toast? Bullshit! $2 for a piece of toast? Bullshit!
What the heck just happened? George, my computer freaked out. $2 for a piece of toast? Bullshit. I'm at 125 again. $130. Let's go. Break it. I got in at the 123 last time and it didn't work. Now I'm at 140. Yeah. Don't get your vows hopes up too much. Trump X-Ping wants to meet. Trump says think it will happen before the end of the year. That didn't last long. What a thrill. I got something. I got something. I got something right here that's going to move the markets. Pina colada, rum and coke won't make me choke. I bought the 6385s at $1.25, sitting on the beach. All the women, they're all in reach, looking up in the sky, watching them mosquitoes fly. Heading to Punta Cana, find me a nice little Mexican chick. She's gonna look at the sunset, wake up to the sunrise. Let's take a trip to Punta Cana. Let's take a trip to Punta Cana. She's waiting there for me. We're gonna put our feet in the sand and walk the sea. Take it up to a higher level. Let's break the 63 EMA. Should I sell it here? Baby dear. There's 63. We got to 140 a couple times. Bring it. Break the 63. Take it up to a buck, you'll see. I'm in the SPX 6085s. We're at 145. Beers. You can't nitpick, man. You got to take that money and run. $110 back to $135. What the heck's wrong with you? Tesla trying to reverse. I'm still in the 6385s. That even woke up Jimmy Carter. think we'll chop like yesterday. Can't remember how to play Dooley. Dooley, trying to make a dollar. Dooley, me a dollar and I'll pay back someday. Okay. Now he's going to give it up again. Didn't want to break. China jumped the gun a little bit on the 90-day pause. HIM's volume highs. Wonder how China's economy's doing.
How in the hell am I just now seeing this pattern?
Probably had stared at it a couple times.
Freaking head and shoulders on the 1 minute on the ass.
Him's turned around real nicely right there. SPX needs to do the same. We came back and almost hit that shoulder line. So that's your first touch. We could come back and do it one more time maybe. Or we break the 50. 50 is more important now than the 63. 50 SMA on the 1 minute. And I had a chance to sell these around 140, 145 and didn't do it. Been $150. The yearly candle, UNH hit the 21. That's each one of those candles represent a year. You can see what kind of run it's had ever since Obamacare. The insurance companies are making a killing off Obamacare. And it was supposed to do just the opposite. They're in better, well, I'm not sure what happened this year. Maybe Trump's putting a stop to it. Kind of hard though. Look at the weekly time frame on this sucker. That's what a heck of a correction. 1 month, 2 month, 3 month, 4. We got Bank of America remains neutral at $300. What's this? $115.
Sneaky bitch. Oh, that's funny.
Congratulations.
going to be one of them last minute deals today where I'm going to make about $2 or $3 a contract. I'm being very patient. This is the worst day I've had probably in 2 or 3 years. I think I've had three bad ones already. 2 good trades. Resistance lines are working. I just don't get out of them. Like that one there would have been $150 easily. Ain't worth really throwing any more out in bathwater. Health insurance is outrageous. PTHL, what's that? I need to start watching hymns. It seems like it's always got a pop to it. In fact, I'm going to write that down so I remember. Need to add it to my watch list also. I'll do that now because it's always popping. If I don't have it on here already. I'm adding hymns to my watch list. Look at all them puts. But that's me. Well, I'd agree with you. I agree. Watching bear traps. Okay, here we're coming back up again. Shoot. You got to break to 63 the third time. I'm only 2 notches out of the money, so I still have a chance. Might hold these in. If we hold this support, I'll stay in them until. Oh, I'll stay in them until close. Get up to 100 and what? My booking and my login, my points. Nicole, why'd you get rid of Caroline?
Just some thought.
You know I had the hots for her. You're too much of a woman, but Caroline was perfect.
Meta, Apple, and Amazon was carrying, $11 trillion of market cap for the earnings over the next
11 trillion?
And what that does not only gives us an insight into the themes for some advertising as well as the hardware sales, Apple.
When I go to the kitchen, come back.
There's a view of how the penetration they're getting.
I want to see these things up.
But from a macro standpoint,
I don't want to break the 200s.
Earnings growth, of course, this year, 14% accelerated, 14% next year. These four names are integral in the market really achieving that number of growth, as well as, confirming the valuations that this market trades at here at 22 times earnings for now worth. So in order to justify the height that this market is going to need these four names really come through, we'll have a little more color as to that trajectory and that confidence these companies have over the next 2 days.
Do you really want to wait now to see, as you said, you want to get some more information, more color from these companies? Have you generally been bullish on the group overall?
Yeah.
Overall, we have here over the past actually couple of years, even more than the last several quarters. We've cooled off some to the large cap growth group, which these four names encompass a very large portion of that. Simply because the valuations have moved as leadership in the broader market has really, we feel like, started to run its course a bit, and we got a little more market weighted and then underway of cash in some of these names. So we think the tone that these names are going to set for the marketplace is incredibly important to where we are in this part of the rally. And these four names, again, we backed up a little as far as our exposure there, but it's not four names we feel like will really have the capacity to, to really move the market, lower in a very material way. But we're skeptical of the valuations that some of these names achieve at this point, and so we want to make sure that the growth is there and the market expansion is there as well.
You did say in your notes we still like financials. I think you mentioned Citigroup. What drives this group higher? Why is there room to the upside for these financials?
Sure. The financials are the fuel of economic productivity globally, and they not only their interest margins and income are driven largely by loan growth as well as the shape of the yield curve. The yield curve benefits financials. This group has a little more international exposure, and so that's helped it over the last couple
Which one hell of a pun? Is the weight loss bubble bursting?
As it has been over the past couple of years. A little more neutral, which has helped most of the expansion Citigroup. They had a tremendous quarter, in my opinion, and were able to achieve a lot of the objectives and put the optimism in the market.
LLY had a pretty good knife today. Back to support to triple bottom on the 10-day, 30-minute. Pre-market lost its total 5-day gain. It took 5 days, it only took about 5 hours to pull back.
Takes the stairs up, takes the elevator down.
Yep. Got a small sending triangle on SPY. I'll be right back and go get my tea made. Oh, I'll leave that up. How dare I? Ooh, get back up there, see? I told you I'd walk in the kitchen. Maybe it's better if I just leave. And I could have got that dip. Oh my gosh. There's 120. Let's try it again. Please break the 200 EMA from Uncle Zimmy. I'm going to go into the bathroom and take a shit. Or give a shit. I don't want to take it. Oh, Rob. Spank. We're at the 200 right here. It's hit every one of my resistance levels and pulled back. Final hours for Black Friday at the Hyatt's. This guy's not too bad.
Broken the 200-day moving average, have maintained it for a while here, and could be in the midst of turning a very, very long downtrend into what has become a short-term uptrend. The stock up about 49% from those April lows at this time.
Okay. Yeah. And last but not least, we'll turn our attention from sneakers to housing. DR Horton, how are we looking there?
How about the sneakers to bras, baby?
Much improved. Granted, you know, we know that this has been in a struggle scenario for a while, and what we're trying to do is always look for these instances where things have shifted, and that's kind of what's been going on over the last couple of months now. The stock had just in the last week managed to move through an important level at 140 on the chart. The stock is up now 25% just since the beginning of June, only 5% on a year-to-date basis. But this recent move gives a new floor at the 200-day moving average, right at 140. We've got the 20-day catching up with that potential move right now. So you're looking at an opportunity that suggests new short-term trend upward here. Now, obviously, 154, the highs of last week, presents as resistance. Interestingly, though, that's still 8 points above, and I'm sure there are some traders in the short term that might look to take advantage of what could be an opportunity just to run to resistance. But really, 154 looks like a pretty important level for any new trader. If we can move through 154, then we look at the potential to start rallying into that 175 ledge. And of course, we don't look at that as an overnight opportunity, but rather an opportunity over the extended period, the next 3, 6, 9 months, something like that. But if nothing else, this action over the last 5 days, suggesting the 200 days been cleared, and then yesterday closing above the high from last Friday, which could be the low day in this pullback, could be the resumption of this short-term uptrend that's been working since early June.
All right, Kevin Horner, Senior Manager, Trading Services Education at Charles Schwab. Thank you so much. It's great to see you, Kevin. Good luck there every week. Technical Tuesdays with Kevin Horner, looking at the S&P and 2 other names each week here on the watch list. Coming up next, we'll look at our panel to talk all about PayPal. The earnings slide, even though they had a good quarter, and some of the other payment names in this space. We'll be right back.
Do.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to the watch list. Our panel is taking a look here at PayPal. Joining me now, Danielle Shea, VP of Options at Simpler Trading, and Stephen Bigger, Director of Financial Services Research at Argus Research. Thank you both for being with us. Your thoughts on PayPal here today, Danielle, which is down about 8%.
What? Did I miss something?
Well, you know, when you look at PayPal, this is a stock that back in 2020, 2021, this was an amazing stock to trade and a great investment. But at this point in time, it just cannot get out of its own way. It doesn't matter what earnings they report, it doesn't matter what news comes out.
Blah, 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 blah. PayPal was one of my favorite trades at one time.
NQ.
Slash NQ.
That screenshot I just posted.
Oh. Oh yeah. Darvis box.
I'm gonna set shutters. We'll see.
Touch back.
If it loses that 23,425 and then gets back into that bottom channel, he could be ahead in shutters for a while.
Yep, tomorrow's gonna be fun. We all got 5 minutes to power hour.
I was just being safe. 5 minutes till this hourly rolls over.
Yep.
I'm real interested in where this thing lands. Because I have a trend line below us. And I see a bunch of orders at 64.20.
get a lot of people picked up here in Missouri from ICE. Here's Arturo Martinez Matero. Hold for ICE. Shoplifting. Just a ton of them getting arrested for shoplifting, drugs, and theft.
Minutes.
So let's do your 2 minute. We're down here at a triple bottom. And I'm going to give your 2 minute a try here at 63.80. Actually, it should wait.
Yeah, I got a trend line right below us.
Yeah, and you could get a double bottom. At 115 to 63.80s. $63.80s at 115. You got them at 95 cents. Are you dog?
Gotta be wrong.
It's always Rob. He's always got to beat me by 10 cents.
He's a habitual one-upper.
Please, anybody, don't follow me today. I gotta go check my phone. Messages. They're back at 95. So I got 95 and 115. Tweedly tweet tweet tweet. I got chewed out last night for calling a girl at 9. So what?
You got chewed up for calling a girl at 9?
Yeah, 9 p.m.
Mm-hmm. Yeah. She sounds too old for you anyway. You need to find you a spring chicken that's just getting a shower to go out at 9 o'clock.
I'm working on Hey Sue.
Hey, Sue. What, Michelle fall through? She wasn't.
She's married.
She wasn't falling for the old super belching trick.
Yeah. She didn't appreciate me clipping my fingers on Mike, clipping my nails.
She ain't got no home trim.
Uh-oh, he says here. Don't worry, Betty. I will get better. Can always be worse. It will get better. Yep. I wrote a song, had days a whole lot worse. Is I Am Sheba here today?
This is a hard one to fucking decipher, man. I ain't gonna lie.
It's been like it all day. I mean, I could have got out. Go ahead.
I said, this chart is like, holy shit.
As long as I'm on here, I'll stop talking if you have something to say. 'Cause just
I see us. Oh, we're gonna squeeze.
let's do it. 120.
No, you're gonna squeeze. I see it.
I want to see a big fat $3 or $4 call here.
If you can reclaim the 21 on the 1 minute, you're gonna squeeze up.
Reclaim the 200 EMA. I mean, get above it. That'll be my target right there.
You can run about 2.5, 3 points before you hit the bands again in the trend line. But yeah, here it comes. I saw the curl.
Boom puts.
Boom puts.
Took the. You're confusing me, Rob.
Who dares confuse me?
Oh. She got on both sides. Well, I'm staying in my calls because I think the 63's got a break. The 63 and the 200 EMA.
Who dares doubt the fluky curl? Now, tell me, what's up?
Yeah, it was 140. This is
Did
where
I say it was gonna squeeze, or did I say it was gonna squeeze?
you said it. I kind of said it, but I didn't say it.
I'm naming that girl the Funky Shuffle.
Let's get the funk up about $3 a contract.
You just got Funky Shuffle.
You know what I like about Rob? He has manners. He knows I'm boss.
Now, the Funky Shuffle may only go for a couple of points, but it is going to squeeze.
It took Rob a good woman to get him to trading right.
And she had to go across his head with that damn frying pan a couple times.
Mm-hmm.
Got his math right.
Look at Randy said, "Get the fuck out of here." How many times I hit 140 today, not sell it? I mean, that's up. I mean, that's $800 right there. 145. If I could have got that. Watch puts. No, I ain't gonna watch them.
I refuse to watch him. Okay, Chart Master. Let me show you this one.
Okay.
Give me the screenshot. Here. Look at that coiling action.
Damn. Looking, let me see. I want to see what your coil's all about. If its chart ever comes up. You call that coil?
Yep, the spring is getting tighter and tighter and tighter the closer you get to that end of the triangle.
Yep.
I mean, it's just gonna bust the hell out one way or another.
So that's what you call a coil. Okay. You know what else is good about that? That same chart. It's got the inverse. The last 4 dips has an inverse head and shoulders, and it hit that right shoulder the second time.
It does.
Yep. Inside your flag, which means it should break out, but it didn't.
If it breaks that trend line to the upside, the fact that I see all these limit orders sitting at 64.20, and the fact that I have 64.21.25 marked out as an important zone.
Yep.
If it breaks that trend line to the upside, I'm immediately getting in calls. They might try to run this bitch at the end of the day.
And that's the 2 minute. So I thought you were referring to something else when you said, but now I know what you're talking about.
Yeah, like coils on a spring, they're just getting tighter and tighter.
I just call it a squeeze when I'm looking at it, I guess. Getting ready to squeeze. Getting ready to coil. Look at the 30-minute time frame. Your /ES at that 46.0621. You can almost draw a trend line all the way across, and it hits all them bodies.
Yep.
That's 2 hours. That's 3 hours. 1, 2, 3, 4. 4 hours. God, we've been down here for 4 hours. Jesus.
Candle just opened above it. Alright, let me see what's the cheapest one. So 60 or 85.
You're just that'd be a good try, but you're a notch below. We're squeezing right now. That 63.80s are still in the money. I mean, not in the money, but in the, I'll show you what I'm talking about. I'm gonna sell these first. No, I'm not. Let's wait.
I'm risking $40. I'm going for it.
I got the 80, so I'm up 400 right now. Well, I was. We got 20 contracts at 105. God. Oh boy.
Let's go in the second trend line then.
We're 9 minutes left before we start doing something.
Let's go in that second trend line. I'm not going to get scared though and lose that second trend line. Plus, what the hell am I scared of? I only bought one contract at $20.
Okay.
This is a lot of, if it freaking goes, it's going to go like hell. That's the trend line there that we're at now.
I've actually put too much effort in this today.
Shit, I guess I should scrap out.
We got a 1, 2, 3 here. Now this is where I'd say we might get a squeeze if you're looking for a bottom play. But I can't trust nothing today. I've lost about $3 today. Very unusual. Exchange trade funds, earnings slate, focus for equity futures. Ever since Caroline's gone, my heart's been broke. So we got 29 more minutes left, and these are at 45. And I got order in for 45 to add. If it takes it, we'll see. I mean, this one trade could change the whole world for me today. Hopium. Yeah. We'll see. I'm in. Come on, baby. God. Come on. Unbelievable. Tweezer bottom. Yep. I don't think I'm going to get it. I pulled out of my original ones that second buy, but I'm still hurting. I can't remember having days like this. I really can't. It's been so long since I had a day like this where I just couldn't get nothing. I mean, we're at a triple bottom right here on the 5-day, 5-minute quad bottom. This one right here, 1, 2, 3, 4. I'm going to stay in it for 9 minutes. It's had a pretty good run, the market has. I mean, this thing could... Dipping down on the 5-day, 6-day to the top of that first fib. That's the bottom of a gap. My /ES just hit my third support within $1.90. Got a heat advisory in Missouri. Gosh. 2 more minutes. 12 more till close. Come on. I'm going to say new resistance is right around 64.10. Ten more minutes to go. God. I know this ain't funny. Oh. I would too, but I don't think it's going to happen. It'd be a miracle. I know it can happen. I've had it. It's happened a lot. It happened yesterday. Cron just had a new low at 201. That's when I run from $2 all the way up to close to 30. Tilray, Vegas, and I run up to 300. This at 57 cents. No. I think it'll be hard to make this up tomorrow. Get some water, I'll be right back.
Trading
Got
at
1
Schwab
minute
is
left
now powered
to the
by
worst
Ameritrade,
day of my life.
giving traders even more ways to sharpen their skills with tailored education.
I mean, almost every day's been a winning day, but not today. Oh, well. Big volume spike on the SPY just now. Probably for tomorrow. Wake up in the morning and the market will be up. That big old volume spike. Right into close. Woo! God, I'm glad this day's over with. Well, I don't know what to say. Just all I can say is thanks all. And we'll see what Pow Pow say tomorrow.